of the tariff tantrum. And so if you're looking for a bright spot and you're thinking, you know what, the last time we had that crazy of a move, it was basically the bottom, which was in April on that kind of craziness. That's, you could put that little feather in your cap. The other couple were in '08. So it's either going to zero or straight V bottom back to highs. Do with that as you will.
What a
So
choice.
I got a quick question for you. You just named a bunch of reasons that were not market related why the market sold off. What was yesterday's reason then?
Oh no, I don't think those are reasons. I didn't put a reason on it. I'm just saying the last time this sort of swing happened, where one was very, very bullish, and it was April, where the market has gone up, essentially 40%, 30% from that bottom. And one was '08, where we all know what happened there. So, it's just telling you that there's there's
historical context.
Yeah,
Sure.
it's historical context. I mean, the reason yesterday, I think it's been the same story that it's been for the last couple of weeks. I think when you look at speculation, specifically in the crypto market, which is down another $3,000 today on Bitcoin, we're down about 3.5%, down to 80,000. And
Yeah,
it's been
80,000 on the cash, 80,700, 81,000 on the future.
and it's been a swift move. I think when you look at crypto markets, it's telling you that the speculative fervor is kind of out the door right now. I think you can blame that on the rate cut situation. I think that's probably the biggest catalyst for the pain that you are seeing in crypto is that the most speculative asset probably on earth, I would consider it to be the most speculative, is not getting any liquidity. I think that's a reflection of just the liquidity situation. I think the tech names, that's a different story. I think there was a little bit of froth baked into them. And so, the 10% down moves that you're seeing in a Microsoft or an NVIDIA and 10 to 20%, that's fairly normal. I think the craziness you're seeing is in some of the frothier things, the more liquidity driven assets like a Bitcoin, like a quantum stock, like a fringe tech name, the Russell, that sort of stuff. And so I'm still hopeful. To answer the question, I think this is probably a good spot. I think we look back in a handful of months and say this was an okay spot to start getting long.
Yeah, but our time frame is just the next 45 days or 28-ish days or whatever till expiration. Next week or so, do we roll? Do we roll early? Do we roll late? I mean, these are questions that people are asking in the emails and
also the holiday too.
And the holidays are coming in. Isn't it slow during the holidays? Well, I think you could throw that out the window now, right? I mean, markets move, markets change. Yes. I mean, it really is a different market than we had 48 hours ago. I'm going to push back a little bit on the whole Bitcoin thing. And I've gotten the emails from people, saying that this is a liquidity issue, people trading Bitcoin on leverage, margin calls. And those. I don't think that's the retail investor. It's not the retail investor that I talk to. You know what I mean? Like, it's not like I don't think they're really working it like that. If you know what I'm trying to say.
I mean, I don't think we touch every one of the retail investors. So
I was like, you have not been on a date lately, because I could tell you some stories from some crypto bros, but pop off.
I think it's more of a systemic thing. It's like, if the liquidity, if the appetite for risk is going to come off the table, the riskiest, most highly speculative asset is the first place where people go to get out. And that's what I think is showing in Bitcoin. And I think that's kind of
I think the fringe player that's got that 20, 30, 40, 50, 80% of their portfolio in the market, that in Bitcoin markets and crypto markets, and maybe is using leverage, because you can't get leverage on Tasty, right? I mean, you can trade Bitcoin futures, but you don't get leverage for them. You margin for them, buying power for them. I really think this is more a fundamental kind of, I think this is old school rate cut issue that harkens back to the 80s and 90s.
Not a harken.
I think this is overdone, and I think yesterday's move needed to be done. You mentioned this.
So wait, overdone in what? In crypto or in
all crypto? Crypto's going to have its volatility. You know what? Crypto volatility got too low. I mean, it was volatility was cut by 60-70% in crypto. And you want to know something? It's a speculative asset, and that's what it's showing itself to be. Now, the market, on the other hand, where it's up, 100 plus handles and goes down just about 100 handles, that's a different day. And volatility really kind of showed its head yesterday. There was plenty of opportunities for bulls and bears to make money.
Yeah.
Pigs got slaughtered, and I was a little piggy for a while. When we were down, we went from up 120 to up around 25. I started nibbling a little bit, and then all of a sudden we were down 25 handles, and it's quickly down 50 handles. I mean, it caught me on that way down. It was, you closed a lot on the opening. I closed some. Everything we traded yesterday on the opening was from the short side, closing positions that we had put on. So we weren't real piggy. We didn't get super short, which would have been, a hero's play, but we did the mechanical thing, not knowing, as everybody doesn't know, what the market is going to do. So really what you're looking at now is, look at these stocks. Like you mentioned MU earlier this morning to me before the market, 260 down to 200. I mean, that's crash-like in these stocks that haven't sold off. You know what I'm saying? The Palantirs of the world, going from what are you looking at? 200 to 155.
Michael Burry is a genius.
Yeah. You know what? It's so funny. My 15-year-old son sent that to me it came out like 3-4 days earlier, and then he sent it to me, and then we had some of the two biggest up days. Right after he sold out his portfolio. Now it looked like a genius. It's all about like when you present your timing. You know what I mean? Like you had plenty of opportunities to get out at the higher prices, but yes, I digress. Anyway, I'm trying to say here is you've got some stocks now that are at some interesting points. The market itself, like the S&P, that's a different story. Like, remember, NVIDIA is what, 7% of the S&P 500? The S&P 500 is a little bit more, is getting a little bit more Dow-like. This is nothing new. We, not only us, but everybody's talked about this. I mean, when you've got one stock that's 7% of the market and it goes up 5% when it was up around $8 or something like that, and then comes down almost 5%, or maybe it did hit 5%, that's a big move. So you're going to have to watch NVIDIA. You're going to have to watch those Mag 7 a lot more when you're trading SPY than anything else. I don't think the rest of the market is really going to be able to sustain the rally unless you get the NVIDIAs of the world holding true.
Yeah, I think I push back a little bit on your Micron example, because I think those stocks, although they've had a crash in of sorts, I mean, being down, what do they call it? A bear market if it's down 20%. Well,
it used to be, when I was growing up, it used to be 10%. You kids have changed it to 20% now.
Yeah.
A correction is 10, bear market is 20.
Bear market 15, because calling a bear market a certain percentage is just bullshit for people who talk like us.
I totally agree. I'm using that as just an example. So you've gotten that, but the stock is still a double in the last 6 months or more. I think a lot of these kind of secondary names might have more to go. I think you touched on kind of the fact of the Mag 7, of if you look at like an Amazon or a Meta or Netflix, even if you want to go to like kind of the top 10 names, like those sort of names have had a pretty big move relative to their market caps. Even in NVIDIA, when you think about NVIDIA, it's like, we've taken that juice out of it from the upside. I mean, those are the ones that I'm a little bit more interested in. I don't know if I'm as interested in buying the dip in a Micron versus an NVIDIA. If I was just purely looking at two, new positions, if I didn't have anything on and I looked at Micron and NVIDIA, I'd be like, you know what? I think NVIDIA is a better play here.
Well, let me give you some more food for thought. You always talk about volume. You always talk about volatility. Volatility back up to just about 23 on its highs, 22.95. I'm talking about /VX. These are levels that we don't usually see and we usually come off of, which means the market usually catches itself a bid. And then my Taiwanese sources tell me that the CBOE option volume of 95 million contracts was 43% above recent average levels. And an interesting thing, calls leading puts 11 to 10, so not a big move. So they were trading both sides. Pretty interesting because we had that huge move higher. I'm sure there were a lot more calls being traded, and all of a sudden we had huge move lower, a lot of puts being traded. But the sheer volume, the sheer magnitude of the move going into a holiday weekend, I don't think you're going to get the relief rally today. I think you're going to have some risk going into the weekend. I think, that the 65...
Wait, what holiday weekend is this?
The holiday week next week.
The holiday week next week.
Oh, okay.
We've got an extra day off, next week. I just think you're if the market was higher, I would say volatility would get creamed today going into next week and stay flat all week long. Now, I believe that volatility is going to stay elevated. I think the highs of 23 on volatility, 22.95 is in for the day. I don't know if the low for the E-mini S&Ps are in today. I think we probably got to go down to 6,500, which is 25 handles lower than we are. But you're going to have some two-sided action today. Really, when the mistake we made yesterday was even on vols low, it was still like 1980 or 1985. That's a 20% vol. When you have 20% vol, you have two-sided action. You need to be nimble. You got to watch your unit size. Today would be the day on any type of rally where if you have positions in an SPY or any other stock that you may have some long delta in because the market moved against you, and you're in December, and December is going to have a higher volatility than January by a couple of points or two across the board in every stock that you trade. Now might be the time where if you had 2 units in December that were trading at $7 or $8, you might roll to December, a little bit early, and go to 1 unit at $10, $12, $14, $15, that kind of thing. Take if you're worried about the downside with long delta, take your units in. If you have 1 unit, then roll down. Meaning if you got the 100 strike as an example, roll down to the 95 strike in January from December for the same credit, or maybe like, a dollar credit or a 50-cent debit, something like that. Just today and any type of time you're worried about market movement lower, it's all about units. So if you can reduce units, that's probably the prudent thing to do. If you want to bet a bunch, then you stay where you are and you wait another week into December. Vanetta, we've taken up enough of your time. Let's get to some of the news. I apologize.
Yes.
Okay. Can I do the show schedule?
Please do.
Sure.
Okay, well, all right. Let me get my ducks in a row. Very good morning. Lots of market action. So we've got a lot of great content for you. And we could interrupt programming at any time if stuff happens, and we can always open things up to take your calls because that's what we love to do. We love to respond. But at the top of the 8 o'clock hour, you're going to have Jamal in. I'm sure Jamal has seen some crazy stuff this week. He's been tweeting out some good market insights and stuff. He's going to recap just the crazy week we've had with NVIDIA earnings, with FOMC minutes, with up, down, left, right, ABA. Jamal's going to be in at 8. Then 8:40, we got Fast Market. This is when people submit their trade ideas. I'm just giggling because depending on what time people submitted these ideas, they could be wildly different today.
Oh, for sure.
Oh yeah.
There could be a lot of recalculating that needs to happen, but the bats are very good at that. They're going to put on viewer submitted trades at 8:40, then 9 o'clock market measures. A little interesting piece of research about micro-sized earnings approach, which sounds good.
Very nice. Yeah,
good.
Getting small.
And then we got live from the trade desk, Quentin coming in to count down the top trending tickers over at tastytrade. Let's get to the news, and then you guys can get to the markets. Hit me with my theme music. Let's go.
Our leading story, breaking news,
coming
across the wire. Our leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. everybody. Today is a fantastic Friday. It's November the 21st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
We've already talked about this, but stocks saw the biggest intraday sell-off since April as an NVIDIA-inspired rebound falters. Nikki, I actually pulled the date, and you were right. So the last time this has happened, this is really only like the sixth time this has ever happened where we gap up 1.5% or more and then finish the day down by more than 1%. So the last dates that this happened, April 8th, 2025, August 25th, 2015. I think we all remember that. And then
that was Volmageddon, right?
Yeah.
Okay.
And then the rest, Nikki and I were too young to be participating, but BAT was like actively trading. I mean, so it was October 14th, 2008, October 9th, 2008, and October 7th, 2008. That's it. That's the list.
And Nikki, I challenge you. I looked at your account, and you have those beautiful lines and everything on your charts.
Yes,
you have 3 lines or so. You went through all 3 lines on the top side in the morning. You went through all 3 lines on the downside in the afternoon. I challenge you to get rid of those lines because they're meaningless.
Well, if without that line, I couldn't have told you that yesterday we bounced back above the 50-day moving average. So I need those lines.
Oh, it's you're a content creator. You're like
yes. I have to keep you abreast to the lines, okay, to where we are in the averages. So yes, I must keep you informed.
But I was just curious, like I was wondering like if in NVIDIA headquarters, they were having like a party and they had like music on and they were like eating food and they're like, yeah, we crushed our earnings, fam. Like, And then they're like, someone had to take all the balloons down and they packed up all the food. Like,
oh no, the employees at NVIDIA are just fine. Their employee stock purchase is up about 50,000% in the last 3 years. So
look back at that. Where do you stop when you do that? Do you go back to the 80s? I know NVIDIA wasn't around, but I mean, do you go back to the 80s? You go back to the 90s? Go to 2000? You go to 1950? Where do you go when you say that? You got to narrow your focus and talk about the here and now.
Yeah, that's what I'm saying. Is the last time we saw this sort of move was in April. It was the bottom of the year.
All right. Well,
and we rallied 40%. So, I don't know. Maybe you nibble a little bit on the long side here. You can't, nobody knows the bottom, right? Nobody knows the top either. So, when you look objectively at the market, you say you got volatility high, you have prices that have come in pretty significantly. And a week ago or 2 weeks ago, if you ask somebody if they want to buy NVIDIA, they would say, I wish I had 10 times the NVIDIA I have. And now everybody's scared to buy it. Sure. I think here it goes to what we were both saying of like, here is an interesting spot where if you are getting bailed out today on a 40-point up move in the E-minis and a little bit of a vol crush, you take that position, you roll out to January, you reduce a little bit of exposure. If you don't have the max exposure on right now, maybe you start putting some positions on in January. You've got volatility at a 25 handle. It doesn't come around all that often. And sure, we could see more downside, but if you don't have, you're going to kick yourself if you're not doing something. Like if you're just waiting here because you're unsure, it's going to end up not working for you because you're going to have the FOMO if we bounce, and if we go lower, you're still going to be stuck.
Keeping it moving here, Nikki was right. There's kind of a lack of attribution for the velocity and swiftness of the move yesterday. But some people are pointing to the, quote, unhelpful split verdict that was the September jobs report. And it really does make the Fed's next move unclear. You guys talked a little bit at the beginning of the show about bonds. I want to talk about treasuries here, and let's also talk about the dollar.
I would like to petition to get rid of the numbers. Get rid of the reports, get rid of everything, please. Can we do that?
Okay.
It's a much better environment. We all can admit that for trading, at least. It was a much better environment when we had no reports.
Well, here, I'll give you how crazy this has been. So we've talked about Fed, the expectations for rate cuts into December. A month ago, it was about a 98% probability that we would get a cut, basically baked in to the market. All of a sudden, you get some of this craziness in the market. You get a little bit of a more hawkish Fed speak. That flips basically on its head to, a 50-50 shot. Going into yesterday, if you remember when we were talking about it before NVIDIA earnings, I should say 2 days ago, it was about a 78% probability of no cut. So it's still kind of undecided, but was leaning towards no cut. Into yesterday's numbers, which everybody is now saying is split, the probabilities actually decreased and got to 60-40. So they went in actually to be a little bit higher probability that we would get some sort of cut. Today, the cuts are priced in at 70% versus no cuts at 30%. So you've had a complete, this is a, you know what I'm saying? Like, so a month ago.
You flip-flop. A month ago, we were saying rate cut is definitely on the table. It's probably going to happen. We quickly went in a 10-day, 2-week time frame to there's no way we're getting a cut. This is BS. To now today, well, we might get a cut again. It seems like it's back on the board. And the one constant was bonds. Bonds really haven't moved. And if you can get away with, forget about the noise and play that two-sided action on the rate cut, you really had yourself I didn't do it, but you really had yourself a nice little week or two.
Yeah.
If you were keying on that.
Yeah. I just think that this is a funny headline because it's a little bit dated now, but we'll see. It just says these 15 stocks are still showing momentum and a market-beating edge, and one of those stocks is Micron.
Oh,
this is in an article published on Market Watch last night. So they shout out stocks like Oklo, SanDisk, Energy, Western Digital, Micron, MP, and
this is not good. Somebody needs to sell stock.
Yeah.
This is not good.
SanDisk 2 days ago was at 250. It's
down 20%.
Yeah, in one session.
Yeah,
unbelievable.
Yeah. Boy, whoever released that article and didn't check the markets yesterday, they're getting fired today.
Yeah, oh yeah.
I mean, they're going back to delivering the mail.
Oh man. Anyway, in other news, at least there was maybe a bright spot. I don't know if it's still a bright spot, but Gap reported comparable sales surge after their viral milkshake denim ad. Gap blew away expectations for company-wide comparable sales, which grew 5% during the quarter. The clothing retailer brought in revenue $3.94 billion versus $3.91 expected GAP.
Gap, you are correct, is trading 24.74, up around $1 and change this morning. It's been going kind of sideways, though, since that big pop up to around $30 or so. It's been going sideways. IV rank of 57 is actually very good. No earnings coming.
The U.S. Justice Department has charged 4 people in a scheme to illegally export NVIDIA AI chips to China. What are we doing? Prompting a congressional call for an urgent passage of a chip tracking bill. Basically, it would require location verification for chips and make it mandatory for chip makers to report and share information about potential diversion. Just talk about the chip stocks, AMD, NVIDIA, SMCI, whatever.
That was a pretty good word salad there. I'm not sure what they were saying, but AMD had a big monster move to the downside yesterday. It's up $1.50, pales in comparison to the move that it had yesterday.
Yeah.
I mean, all these stocks are, this is what happens. Now, if we open higher here this morning, and we're open. We're 28 handles higher right now. We've been as high as let's call it 40 handles higher this morning. We've been as low as down around 30 handles this morning, maybe a little bit more. We open higher like this. It gives you, if we open here, it gives everybody the chance to do something small, but on 100 move down on the E-mini S&Ps, coming back 0.25% is probably not enough for most people to do something. And that's when you get that move lower. Like, everybody's going to think that the bottom is in. They're going to, in my opinion, I think they're going to test the bottom again. Hopefully for those bulls, I'm wrong.
Has the AI bubble burst?
I think you took some of the air out of it.
You took the air out of it. I don't know if it burst. I don't know if it's something that will ever burst, but they certainly took the air out of it for sure. Now, again, this is the wonderful thing about markets. So if you think that things are for sale, and when something goes from 260 to 200, that's typically a sale.
Love a sale.
Think something's for sale. If you think you're getting a Black Friday sale, maybe it's time to nibble. And remember, if you're strategic about it and you're selling puts or a put spread, or you're doing some sort of jade lizard, you're not doing it at the 200 level. You're really doing it at the 180 level. You know what I'm saying? So it seems like it's a time to start looking for stocks that you didn't have in your portfolio that you might want to have in your portfolio.
Also looking at stocks like CoreWeave, what they're doing, I think it's down almost 8%.
CRWV is trading at $70. You're talking about from not this morning, but yes, after yesterday. Oh yeah, it was $140. It's $70. It's been cut in half. I mean, again, that would be an example of something if you were in that space and you wanted to do something. It certainly seems like a Black Friday sale.
Yeah.
Mm-hmm.
I'm skipping the next story here, John. The White House is crafting an executive order to thwart state AI laws. The order would establish an AI task force to launch lawsuits and then threaten federal funding for states with contested AI laws. The draft executive order could soon be signed by President Trump. Some congressional members are pushing back against this. So uteruses can be regulated by the states, but AI chips, AI technology, no. Do with that.
I know. I think this will be an interesting headline for the next couple years, because there's certainly going to be a need for some sort of baseline. How these AI products and services and all that stuff can be implemented, and what sort of disclaimers, all that stuff. I think.
And what part of your information and access to your either your work or your personal data that they can use and just suck up, and there's no compensation. Like, it uses all of tastytrade's research, and we $0.
Yeah, it's going to be an interesting dynamic over the next couple of years, how that plays out.
See what happens.
Yes.
Hey, you also talked about this just briefly, too, at the top of the 7 o'clock hour, but IBM and Cisco have outlined plans for networks of quantum computers by the early 2030s. IBM and Cisco said they plan to link quantum computers over long distances, and they want to have a goal of demonstrating the concept is actually workable by the end of 2030. What are you doing, IBM, Cisco?
No position.
IBM is part of the Dow there. Dow's been strong all morning, by the way. I mean, strongest of the group. IBM's up $3.
Hey.
I mean, here's another one. IBM, what did it get up to? 3? I can't believe I'm saying 3. 320. Yeah. I don't know if 290 is a fire sale. It doesn't seem like it to me, but maybe.
No, but IBM has had one of the most incredible charts in recent time of after earnings, being down at like 260, rallying to 310, and then the next day, going to 320, like having a $50 intra-2-day move in a $200 or $300 billion stock. That sort of stuff is wild.
That is wild. And the company is like 600 years old.
Yes.
Amazon is investing $3 billion to build a data center in Mississippi. What is Amazon doing?
Amazon has reversed the entire move that it had on earnings. It popped up to like 250-ish. It's come all the way back. It reminds me a little bit of what the move in Oracle was like, where you had, this kind of blow-off move to the upside, where you get numbers that I think were 2 standard deviations off of where the expected move was. So it's back to 215, 218 here pre-market. So it's up about $1 pre-market, but it doesn't look great.
No, it doesn't look great. Another stock. I mean, if you throw out the
Yeah,
high, and you throw out the low,
it's gone
it was.
nowhere.
What's that?
It's gone nowhere.
It's gone nowhere. Exactly.
Yeah.
So again, Amazon to me doesn't seem like a Black Friday sale. Like that's just the way I'm looking.
But you have to factor in Amazon's Black Friday sale.
Oh, there you go. Yeah.
No, I'm not joking. Like it's a little mini by their Black Friday, Cyber Monday. It's already started, so that could be good for them. I don't know.
Yeah.
Hey, in other news, Google launches new Nano Banana Pro. It's an updated AI image generator that's powered by their Gemini 3 AI. How is Google faring in this massive move?
So Google, that's the Buffett never goes down stock, right? And it did prove that yesterday too. It got down to around I don't know 280 or so. Let's say the high was around like 300 and change. It was I'm sorry 290 or so. The high was 300. Today we're 295. We're up around $6. So Google would be a momentum play. It would not be a Black Friday sale. This one definitely is not a Black Friday sale. Even those who don't believe in Black Friday sales would say this is not a Black Friday sale.
Nikki, are you trading Google at all or no?
We have been trading it on and off. I mean, I got bailed out on that strangle that we had into earnings. We should do some sort of look back on that, maybe a anatomy of a trade or something like that here in the next couple weeks. But I'm basically neutral delta here. I did a upside ratio, my crab trade. So I'm long the 300 in January and short 2 of the 315s in the December expiration. I did this for a small debit. So I have minimal risk to the downside. I'm kind of playing for some chop here. So this is kind of where I want Google to be, maybe a little bit higher from here if it does have a little bit of a bounce.
Verizon announced they're cutting more than 13,000 jobs as the wireless carrier restructures. It's the single largest layoff in the country. They say they also plan to convert 179 corporate-owned retail stores into franchise operations, and they will just close one of the stores. Verizon VZ is the ticker.
VZ?
Mm-hmm.
Yeah, something we don't usually talk about in the market. And I don't know if today would be the day that I would be going into a Verizon, right? I mean, so much stuff going on. Now, you're going to have those people that love the dividend paying stock. It pays about a 6.5 or 7% dividend, which is a big dividend. But the stock is lower for the year. It's been lower for the year all year long. The dividend doesn't really come into factor there. If the stock doesn't go higher. I mean, it's gone nowhere for most of the year. Verizon is unchanged this morning. It was unchanged yesterday too. So I mean, I guess if you look at a park money, I don't ever play that game, but if you look at a park money, I don't know, maybe.
Yeah.
I'd rather get 5% in or 4.5 to 4.75% in government securities than go into Verizon with a 6.5 or 7% dividend and have the market risk.
I think if you're a vol trader, you're not exactly looking at Verizon on it.
No, not now.
We got Frankie talking about owning Verizon for decades. That's the kind of the trade that you're looking at here. So
yeah.
There you go. Can you hear me now?
Yeah.
Lucid is launching a cheaper variant of its Gravity. You're going to sing for me, Bat? Electric SUV to broaden appeal.
I think I sang Gravity last night, and it didn't get me.
Oh, no.
Omaha.
Thank you, John.
The starting price will be $79,900 as Lucid seeks to reach a broader audience. It offers up to 337 miles of range and seats 7. LCID is Lucid.
Yeah, Lucid, unlike the price of the cars, which I call bullshit on that $80,000 price tag. That's without the wheels or anything like that. Yeah. But the stock has gone nothing but lower. The price has gone nothing but higher. The company that's going to figure this whole thing out, and by this thing out, I mean make these cars like the Volkswagen of their day, meaning everybody wants to get one, everybody wants to have one, is the one that comes out with the real cheap one that can hit the masses, and we have an infrastructure that fits it if we ever get to that point in this world.
Sure, it's an uphill battle with the elimination of the subsidies for the entire sector, and also the Chinese versions of electric cars are just light years beyond.
They are so good. I didn't get in one.
They have just like they're like, oh, this one has a infrared sauna in the back. You just hop back there, like.
Yeah, it's crazy. When I was in Mexico, I would probably have guessed that maybe every fifth or sixth car was one of those. I forget the name right now, but one of those Chinese.
BYD is a big one.
Right. Yep. It was
crazy.
It was crazy, and they were good looking. Kind of Hyundai, Kia-ish looking, a little futuristic, but they were very cool. They're very cool.
In a policy that it's certainly a choice. The FAA. Let's play a little. What would you do? So the FAA is going to give $10,000 bonuses to air traffic controllers, and God bless literally all of the air traffic controllers. Literally the most stressful job. But they're saying only the controllers and technicians that had perfect attendance during the shutdown will get the $10,000.
You see, Nick, I'm going to get the $10,000. You're taking off a couple of days for Thanksgiving. You're not going to get the $10,000.
So there were only 776 people that actually qualified for this, but it leaves out 20,000 other people who are now pissed off and who are doing their jobs. I don't
Only
want
strong
this.
survive. Only strong survive. Yep.
Well, this is perfect, because then when we have the next shutdown in January or February is the next
probably
one.
Yeah.
Everybody will go to work now.
No, well, some congressional leaders are trying to maybe carve out legislation that this job is so critical and so important that they would just get paid regardless of whether the government's open or not. I think that that's reasonable.
Yeah, I think you should designate some of those to. Yeah, I agree with you. It should be reasonable too.
I will say, though, I did get an award for perfect attendance in high school.
And you know what? I remember.
I did not miss a single day of high school.
It disgusted me.
Wow.
Yeah.
Nick, did you have perfect attendance? I remember I sent you every day.
Yeah.
All right, good.
I'm gonna. What are the airline stocks doing? Just real fast. I don't know if they're doing anything like a UAL, DAL as the love.
Yeah, I made a trade in Boeing yesterday. It didn't work.
Oh yeah, that's right.
Good. I know it's not an airline stock; it's a manufacturer. But Boeing was down. It's only up about $1.50 this morning. UAL is trading $91. It's up around $1. I'll call it sideways at the low end of its range. Relatively tight range. It's had a $10 range for the last month or so, from around 100 down to 90, where it is now. Now that is I guess a 10% move. So you've got that. AAL would be another one that we might look at going sideways at around $12. American Airlines pretty dead. And the one that really everybody's lips is love, because my sister's long the stock, is $31. It hasn't moved. It's where good sisters go with their money when they don't want to make or lose any money.
I'm skipping a story here, John. Uber is partnering with Starship Technologies to launch autonomous robot deliveries. Yes! In the UK starting in December, with plans to expand to additional European markets next year and the US in 2027. What are you doing in Uber?
Wow.
Uber took a big hit yesterday. I mean, I think it was trading around just under $90. It closed at 83 and change. It's 84. I mean, its high was closer to 100.
Whoa!
But it was in early October. Now it's 84 on the bid. Interesting for Uber if you're looking for that kind of thing. I remember yesterday we had our discussion about autonomous cars, since you mentioned a couple of that, and now you mentioned Uber. I can't wait to see this computer control an 80,000-pound rig going over a mountain in Denver. It's going to be fun.
Okay, Boomer. Hey, this is great. Happy
He had
anniversary.
that Boomer moment with
I
Dylan
know.
yesterday.
He's like, had to hit that Boomer.
Yeah. Back in my day.
We dip.
Oh man. Oh, so good. Well, happy birthday, happy anniversary. The Costco hot dog meal turned 40 this week.
Wow.
And it's been $1.50. It's still $1.50. It will always be $1.50. I don't know if you've seen these shirts. People are making shirts and merch now, and it says, "I got that dog in me," and it's a picture of the Costco hot dog. You can buy this on Etsy.
Ooh. That's good. We should. I'm sure Jason has one of those. Jason.
Every dude here is just wearing Costco. If they're not wearing Tasty merch, they're wearing Costco merch in our office. But
it's true.
No.
But good job out of Costco. Like, I love how their prices are constant and consistent.
So it's been $1.50 for 40 years.
Yes.
Wow.
That was expensive 40 years ago.
I was going to say they were ahead of their time.
Yeah, they were really gouging you back in the.
It was probably a nickel 40 years
yeah.
ago, but they're going to say, you know what? In 2025.
No, you're thinking 40 years ago was 1984. Like, it's not that long ago.
True. It sounds like
you're thinking that it was 1950, but it's 1984,
right? 84.
Yeah. Or 85, whatever. Yeah.
Costco trading $8.95. It got down to $8.93. Now Costco, if you want to look at its highs, we're well over 1,000. So it's down about that 10-ish%. Is that a fire sale? It's a mini fire. It's a mini fire.
Okay.
The smoke alarm's
going on. I'm sorry. Restaurant chain California Pizza Kitchen, talk about a throwback, is going to be acquired by an investor group led by Consortium Brand for under $300 million. So I did not know there were still California Pizza Kitchens, but
$300 million.
Going to my first one, we drove to Chicago and we ate at the California Pizza Kitchen. And
a fun fact: my Sasha's first real job was a hostess at California Pizza Kitchen. She loved it. It was a great experience.
The one downtown or the one in Skokie?
The one downtown. No, the one in Skokie. Right, that would be the one in Skokie. Yes, yeah. You're correct. Or was it Northbrook? Didn't Northbrook Court have one?
Same thing. Yeah.
It was in Northbrook Court. Yes, in Northbrook Court. Which doesn't have it. It's not there anymore. It was a wonderful experience for her. They didn't sell any pizza, but she had a fun time.
It's good times. Good times.
Horrible pizza. First time they put chicken on a pizza, at least that I ever saw, was at California Pizza Kitchen.
And those damn sun-dried tomatoes.
Yeah. Bad.
Hey, congratulations, Kalshi, the prediction market that allows people to bet on future events, raised a massive $1 billion funding round that now values the site at $11 billion. Again, this is less than 2 months after the 7-year-old startup announced that they'd raised $300 million at $5 billion. So 2 months ago, they were worth $5 billion. They've now raised another $1 billion, and they're now worth $11 billion.
It's a good multiple. I'm going to go borrow money from the bank. I'm going to go borrow $1 million from the bank so that I could be worth $6 million when I'm done.
Smart. SMRT. Gotcha.
Jinx.
Good for them.
What do you say about this? I mean, these are the valuations that we get in 2025. Are they going to change? I don't think so.
I don't think so either. Yeah,
I don't think so.
Before you put up the next slide, John, let's play a fun game that's going to get us all canceled. Yesterday, a former Olympian was added to the FBI's 10 most wanted list for being a transnational drug kingpin who ordered the hits and murders of several people.
Wow.
Tell me the sport.
That is, an Olympian?
Archery or some sort of shooting.
That's actually probably a good guess. I'm gonna go goofy
Swimming?
And say like, what'd you give us, John?
Swimming?
Ooh, swimming. That's good.
No, John. No. Somebody who shaves their body is not doing these things. No. Sorry, John. Go go with probably the most people. That would be the odds, like running or track and field.
Yeah, that would be good.
But I'm gonna stick with my archery, something obscure like that.
This story is wild. So federal officials, actually, I guess international officials, are looking for 44-year-old Ryan Wedding, a Canadian snowboarder who has orchestrated the murders of his rivals and against cooperating witnesses. They are saying he is a modern-day El Chapo. He smuggled 6 metric tons of cocaine into Los Angeles and accused of running a criminal enterprise and killing all of the people. They don't know where he is. There was someone that was going to testify against him, but that guy got unalived.
I hope the bloom is off.
I cannot wait for this Netflix movie.
Gonna be a good one. But I hope the bloom is off the roses to this, Canadians are so nice and kind and all this other crap. Look at what lurks underneath the surface here. I'm kidding you. I never would have thought it was a Canadian snowboarder. Aren't they just getting high and enjoying themselves on some pikes and some peaks and some valleys?
I mean,
they should be doing.
To be fair, I do love that the FBI operation for this is called Operation Giant Slalom.
Seems like that's kind of like a word salad there. That's kind of hard to say multiple
Giant
times
slalom?
over.
Yeah, I know.
Slalom is like a hard
Slalom.
one. Like you got to really kind of work to get that out.
But hey, if you find him, you can get a reward, but also just be careful because he will just unalive you. I don't know. It's just a wild story.
It's crazy.
Sure is a
Also,
wild story.
6 metric tons of cocaine.
Yeah.
That's a lot.
That's a lot. That's a lot.
Finally, today for my viral video of the day, we are gearing up for Thanksgiving. I love Thanksgiving. Literally, I think it's my favorite holiday. So I've been trying to bring you for Trader Taste Test some unique variations on a more classic Thanksgiving meal. Yesterday, I did the gravy shots, in the
that was good.
The mashed potato glass. And this, a little bit interesting. Maybe try it this year. Watch this.
This is your sign to make Thanksgiving tacos. Make your favorite mashed potatoes, mix in flour and shredded cheese, spread into circles and bake for 15 minutes. While they bake, cook your stuffing mixture and shape the potato shells into tacos. Then fill them with turkey and stuffing and serve with a side of gravy for dipping. And there you have the easiest way to enjoy all your Thanksgiving favorites in one bite. This is your sign.
I don't hate it. I don't hate it. I was waiting for the turducken videos. I was waiting for the videos of the turkeys getting hoisted into the boiling oil and exploding. That's the kind of stuff that I'm waiting for.
I still have a week left, Nikki.
Yeah.
But you're leaving, so what do you care?
Give her time. Give her time. Yeah,
that's all my time. Bat, what's coming up next?
I'm with you on that one, but I'm not gonna turn down any of those. Those look pretty good. We're gonna take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send. We'll talk more markets too. We'll be back in 90 seconds. This is Tasty Live.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, confirm and send. But before we do, we must take a look at this market. E-mini S&Ps are not looking like yesterday when they opened around 70, 80 handles higher. Today, we're 35 handles higher. Now, yesterday, you remember, we went from up around 120-ish handles down to just about 100 handles. One of the biggest moves we've had in quite some time. You can see it right here on that big candle on the E-mini S&Ps. We're back down to an area or just below an area where we've got to numerous times in the past. Probably a little bit of congestion here in the overall market. We'll see what happens. I think you have to key on volatility. I actually wish we were opening lower this morning to really, if you were kind of in the bullish camp, that maybe we can flush this out. We certainly flushed a lot of things out last night. Bitcoin got down to around 81,000. Bonds have stayed steady pretty much all night long. They've had almost about 3/4 of a point range. They're up around 15 ticks. Bonds go higher, rates usually go lower, but bonds have gone nowhere through all of this noise. Bonds have really shook it off. Volatility, on the other hand, volatility's high. Volatility's been high. It's staying high. Even when we rallied yesterday, it got to just under $20. That was a $2 move on the VIX futures, which is a decent sized move from 22 down to 20. We're back near the highs or just off of the highs of 23 at $22 and change. I would expect a lot of two-sided action today. You yesterday traded everything on opening from the short side. If we did 0 days, we leaned a little bit of short delta in 0 day.
Scalped some NASDAQ.
Scalped some NASDAQ.
20 points from the high.
Everything from the short side, and you were typically early. I mean, like with all futures, it's very hard to nail the top. Once or twice in that time frame that you were scalping them, you nailed the top. 4, 5, or 6 times, you took $10 in heat, which didn't seem like a lot when the NASDAQ futures were moving, a couple hundred points, right? I mean, if you take $10 or $20 worth of heat when you got that kind of movement. Matter of fact, E-mini S&P's expected move for today. Have you looked?
I have not. I'll give it 75 handles.
65 okay. Handles, relatively high. We'll see how we open here. Might be time to do something in there. We'll see how the futures are moving when that time comes. Russell, NASDAQ, E-mini S&Ps, Dow, all up around the same. Maybe the Russell's slightly stronger than the rest. I don't put a lot of weight into any of that. They're all kind of having a little bit of a relief rally. I think we're going to have a lot of stops and starts today. I think you have a lot of two-sided action today. I don't think we're going to be outside that $65 range, but we'll see. Notes are up 13 ticks. Again, signaling maybe, again, a little bit of rate cut might be on the board. I don't know what that means because
70%.
What's that?
It's now flipped. It's back to rate cut on.
Got it.
But now the reason might be that, we're in a recession or close to a recession. The reason has changed now.
By
Dovish,
100 handles on the E-mini S&P. I mean, really, forget about the top, right? I mean, from the close yesterday to the close from the close 2 days ago to the close yesterday, it's 100 handles.
Yeah.
That put us in a recession. Well, then we've got a really fragile.
You're acting like I decide these numbers. Like this is my problem.
Yes, you mentioned.
You're like trying to convince me I'm wrong. I'm just telling you the sentiment. I mean, I joke with it of just like how quick things flip on a 1 day time frame. I agree with you. It's like you have a 100-point down move and all of a sudden we're in a recession. Right. Like that's how quickly things change.
Yes. Bitcoin became the speculative product that it's supposed to be. Quickly happened here in about a 2-week time frame when Bitcoin went from around 105,000 down to about 85,000, down to 81,000 last night. Bitcoin, have we seen the low for the rest of the year?
Ooh, the low? I'll say 80 is the low.
I agree with you.
80 is right back to where we were in April. So I mean, like if you want to use that as like your spot, we were right here basically at the lows when everything was crashing. So it seems like it's probably a good spot to get some speculative upside on if you've been waiting. I, on the other hand, am a bag holder. So I already have the speculative upside. And so I have reached position limit on the IBIT position and the ETH position. So I will scratch this when we get back to 100K, whereas everybody else will make lots of money.
It was interesting. I was talking to some friends last night. They brought up an interesting, I don't know, I'll present the information to you. Bitcoin at 84,000 where it is right now. MSTR down to 174,000. MSTR typically traded with a pretty high multiple compared to the amount of Bitcoin that they have, meaning it traded at a premium and a very high premium. This is something Tom had spoke about a long time ago, that the book value, so to speak,
two to three times. Yeah.
3 times. Yeah. Now it's basically under book to just about book value.
I think their average is like 75-ish.
Okay.
In terms of like their Bitcoin price, their average Bitcoin buy.
Let's say it's book value, right? I mean, 80,000, 84,000, 75,000. It used to trade for, if it was 75,000, it would be trading at, 3 or 4 times book, right?
Yeah.
Okay, now it's basically at book value.
Yeah.
MSTR, if you want to be long Bitcoin, is probably a better buy than coin itself if you're playing for where's the velocity to the upside going to be.
If you're trying to take a shot trade, I agree with you. I think if you're trying to buy and hold this, just go to Bitcoin itself. I mean, I agree with you. I think you're going to get some added volatility in MicroStrategy.
Well, if you think MicroStrategy might go to a 2-timer, just going from pot odds, if you got a 10% move in Bitcoin, if the assumption you're making is correct, if you get a 10% move to the upside, for argument's sakes, in Bitcoin, you're going to get a 10% or more, like a 20% or 15% or 25%, if that valuation goes back. At the very least, if you believe in that valuation being 2, 3, or 4 times, at the very least, you're going to benefit on a 1-to-1 basis.
I hear you. I don't know if the same vol complex exists with it. I think
totally agree with you, but that's the conversation we would have. But that's an intelligent conversation. Like if you wanted to make a play in Bitcoin, maybe you split it up. Maybe you do a little Bitcoin Cash, and maybe you do a little bit of a zebra type trade in MSTR or something.
And by Bitcoin Cash, we talk about Bitcoin, not actual Bitcoin Cash. The for lack of better words, the shitcoin.
Yes. That is correct. All right, my friend, let's talk about gold real quick. Gold had quite a night also last night. It's taken a back seat to the rest of the market because the velocity of the moves haven't been as great, but still big movement down to 40.54, up to 41.25. It's 41.15 right now. Big move in gold last night. Oil down $1 to 58 and change. Maybe something to do there. IV rank of 28, upticking a little bit. Your gold silver ratio, man, I know you took it off yesterday for a $100 profit or so, and I know you had a couple $100 loss in it. I would have taken the profit too. I thought it was a good hold. But if you held it all the way today, if you were doing that with Craig on our futures segment that we did earlier this week, you got almost $700, $800, $900 on the trade now.
Yeah, and in terms of where the gold silver ratio is, it's still like around 81, 82, which is kind of on the lower end of where it trades. So I don't know if I'm
hard to jump in after you.
It's hard to jump in after I closed for a winner, missed the 2 or 3 or 4x profit dollars that I could have had if I held it 24 more hours. I don't know if I can jump in just yet, but it is something that is on my radar here as an interesting trade. The gold volatility has been awesome.
Gold volatility has been awesome. You are right.
I did get long gold again via GLD, so I have a diagonal spread in GLD, which should be nice today. But it's not.
You look at gold futures. Remember, they trade all night long. So gold futures, I just showed you, were up like $18, a 0.5% move. But you look at GLD from the closing price, it's only up around 20, 30 cents. So really, gold futures were soft all night long, and now are coming back to where they were yesterday.
Yeah.
Euro is down small, which means the dollar's up small. That's all I've got for right now. Nvidia, because really I think you have to key on Nvidia today and really watch Nvidia to save the market or make more weakness in there. It's really only up around $1 Nvidia after earnings.
Cool.
That's all I got.
Let's do it.
I'm ready.
Confirm and send. Couple viewer
Friday, November 21st.
Insane.
We've been answering this all morning, but that was the email of the soup du jour last night for me. What now? So what now, Nick? Give me. But
yeah, no, I think you have to play into this volatility. I mean, you've gotten the down move, you've gotten a pop in volatility. If you've been looking at some of these names and you've been, pissed that you didn't participate in the upside over the last, 6 to 8 months. You look at some short puts, put spreads, stuff like that. You want to do strangles. You want to do, like yesterday I went into SPX. I did a wide iron condor into the end of the year, 6,000, 7,000 with 50 points wide. That sort of stuff was trading at half of what it's trading today in terms of the premium. And so, you don't know if it's the bottom or the top or, are we going to bounce all the way back? Nobody knows that answer. But right now, you're getting paid to take some risk. And so I think if you've been waiting and you have some cash ready to deploy, you got to kind of start to look for opportunities. So that would be my suggestion.
And I believe it's a good one. What about for those who have existing positions that are at their full capacity, had nice profits, now have small losses? What do they do?
I think you talked about it perfectly this morning. Take those positions. You can reduce some units, roll out in time. You can roll down and reduce some of that delta. If you're short puts, you got 2 of them. Let's say, and you're
roll from D's to Jan. Yeah.
Roll out to January and reduce it to 1 or roll out and down and reduce a little bit of that directional exposure that way, or roll down and out and sell the call against it. Sell 1 call for every 2 puts and kind of reduce your delta and flatten out a little bit, because you want to take advantage of some of that volatility that you're seeing.
I agree with you. I like the taking 2 puts and rolling them to 1 put, or taking the 2 puts and rolling them down and keeping the 2 units. Selling the other side with volatility high. Those calls are not going to move that much. So don't think you're going to get a lot of relief from them.
Yeah, and if you have stuff that you just got totally bailed out on, like I had an email from a guy that rolled, kind of new to trading, rolled the strangle out to March, and he was sitting in March, and he had the short call that was like in SPY that was at like 650, like it was 6,500, and I told him, I'm like, you're in March. It's a lot of time. Anything can happen.
Yeah.
You just had like a historic move in your favor. Maybe you just eat the loss and move on from that trade and say, you know what, it was a learning experience. I got a little jumpy. I rolled out. I lost some money. It stinks. Maybe you take that position off and go to something now that's 45 days. That's January. Like sell that delta neutral strangle in January and take advantage of the short-term vol, as opposed to kind of try to get back money on this junky position that just wasn't, that was the wrong trade. You got to take your bullets sometimes and just like, kind of eat that loss a little bit. I think that's, some people are going to be,
and we always talk about sticking to the plan. Going to March, like even when things were going good,
when he had it on for 2 months prior,
gotcha.
Like he rolled this out because it was spooked. You've had, and now you get bailed out, and it's not a scratch. It's still a losing trade, but you made back a multiple of what you were losing a week ago. In overnight, you got to look at that position and be like, you know what, this was about as good as it gets. It was a junky position. I had the wrong mechanics. I'm going to take this off. You eat the loss. You'll make it up over time with better entries and better mechanics, and you learn from that and you move on.
Perfect. Next question, please.
Even though the market was down a lot and the VIX up, I noticed the number of stocks where IVR is only in the 30s or lower in some cases. Should I only be looking for underlyings with the IVR over 50 or 60 right now? Or does it not make a difference as long as it's over 30?
It's an excellent question. I'm going to have a hard time answering it in general. I'm going to put up just a high option volume list and just put them IV ranked from high to low. And you mentioned your IBIT there. That's one of them that has an IV rank in the 90s. But really, your CRMs of the world, when you go down here and you come through this list, again, these are all over OKLO, Marvell, stocks that we've traded, AVGO with a 70, although it does have earnings on the 11th. Stocks that we trade, not the huge amount of stocks that we trade. When you look at an Apple that has a lot of liquidity to it, only a 22. When you look at an NVIDIA in the 30s. So to answer your question, you're not going to get the Microsofts, the NVIDIAs, the bigger Mag 7 stocks with the 50, 60 IV rank. You're going to get them in that 30ish range, and those are the ones I would probably stick with. I wouldn't go into the BMNRs of the world, with a 50% IV rank and think that now's the time to get into those, full boat. For me, I'm sticking with that 30ish range, and I'm sticking to liquidity. I am certainly taking flyers with premium selling and stocks that I think are on a fire sale. And there are a lot of individual stocks that are down well over 10, 15, and 20%. Those are the ones I think you should be taking a small little shot with on volatility, not your core position.
Yeah, and IVR, you have to keep in mind that still has April in it.
Sure.
So volatility is high, guys.
Yeah.
I mean, across the board, volatility is high right now. You've got a VIX at 25.
Mm-hmm.
Vol is here.
Yep, totally agree.
Next one, please. Ooh. The other day you answered a question about owning stock and said you thought it does make sense. There are some stocks that have been really beaten down already by 30, 40, 50%, making them more affordable. At the same time, premium is rich. I guess if I have a buyer's dilemma question, I'm wondering if this is a time to buy these stocks or take advantage of the rich premium by selling puts.
You have to ask me one more question. Do you want leverage? Right. So if you want leverage, you're going to go to the put side. And if you're looking to accumulate stock, you probably would go to the at the money put. right?
Yeah.
You got to remember that's got to equal 100 shares of stock at some point. That's the way that I would play it. You certainly can do, a synthetic covered call, which would use less buying power than buying stock if you're a stock buyer. Taking advantage of the high premium, a covered call right now would be a strategy for somebody who likes to buy stock. That would be a good thing to do. Maybe you can't afford or don't want to use all the money to buy stock, so you buy call, sell put, and sell a call further out of the money, creating a synthetic covered call. I would say, to answer this question, if you can afford 100 shares of stock, covered calls right now are a good play. Bullish, wanting to accumulate stock. That's my answer.
Yes, agreed. Well said.
Next question, please. I'll read this one to you. The last one. Thursday sent my deltas way out of whack. I think it did it to a lot of people. I felt like I was chasing them all day. That's somebody who's short premium, I'm assuming. It had me wondering if multiple intraday adjustments make sense, or if we should just wait and adjust at the end of the day. Nothing I did seemed to matter, other than I kept myself in a perpetual state of anxiety that we would reverse, and I'd get caught. What do you think?
Yeah, I mean, I think the problem with short deltas via short calls, is that when volatility expands, you don't see the short-term help that you expect to see. And so I think this is why, I gravitate towards diagonal spreads, stuff like that, where you have a little bit of gamma exposure to it. This sort of situation is one of the problems that you have with these sort of strategies. I think, rolling down is obviously the easy point, or is the easy suggestion, but I think you also have to keep in mind that your losses on the puts are inflated by that pop in volatility as well. And so look at your position, see where you're at relative to where the stock is trading at. Maybe be a little bit less aggressive if you have to, and take a little bit of directional risk. But this is the problem with having too much allocated towards short premium, short gamma, short vol positions into a pop and vol. This is why we talk about kind of keeping some money on the sideline, so you have an opportunity to potentially add to these positions. It's a tough question to answer.
It is a tough question to answer. I'm gonna go to the golf analogy. You hit one into the rough. Do you just take out your wood and try to just hit for the green? That would be like, just leaving it alone and not doing anything with it, kind of thing of trading. Or do you chip out, do the smart thing, put it in the middle of the fairway so that your next shot, you can approach the green? That's basically what you're doing right now when you're making these intraday adjustments. Yeah, they don't help you as much as you would want when you have a 200-point move in the E-mini S&Ps, but when you have a 20 or 30 or 40 handle move in the E-mini S&Ps, they do help you. So stay the course. I think sometimes we get too granular. Stay the course. Watch your delta. Yeah. Watch your P&L. But like I told you, and I've said this in the past on the show, I don't even look at my P&L during the day. Like I watch my delta of my positions, and I stay the course there. I think that's the way to do it. Sometimes the numbers get so big it scares you. Let's to both sides. Both sides. My swings yesterday were huge on the upside, and they were huge on the downside. Nobody wants to see that, but it happens. Yeah. Let's go to Jamal. We got a couple minutes left. We got This Week in Stocks. He's got a lot to talk about. We'll be back in 90 seconds. Thank you, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Nicky, we are back, son. But you know what? Enough out of you. We got Jamal. Jamal, my man, this week in stocks. What's up?
Gentlemen, similar.
Oh,
we lost your sound.
Yeah, I think they muted him.
Sorry. Yeah, it's these new mics, man. You barely touch them and they go mute on you. It's amazing. I know, right?
What's going on, my friend? You were saying something?
Yeah, gentlemen, it's crazy. I mean, just like I feel like similar to last week when I came on and you were like, you could basically talk about the last 2 days, and it's kind of the same deal. I mean, we spent a lot of this week waiting around for some data, right? First jobs data we got, of course, NVIDIA, and boy, did it not disappoint. And it seemed like everything was going to be great until. Well, there's 4 themes, it seems now. It seems like we actually kind of have a wall of worry. I don't know when it started, but it feels like the last 2 weeks. And so it seems like the whole tech evaluations, AI, right? Whether there's AI is a bubble, is popped up. Fed rate cut expectations, that has moved around a whole lot, as you guys know. It was greater than 50% chance we were going to get a cut about a week ago. And I haven't looked today, but when I looked yesterday, it was down to 30, and it actually moved up into the sell-off to 39%. So that's the other thing.
Mm-hmm.
I don't know when this yen situation started happening, but I don't know if you guys know. I mean, yen is getting absolutely smacked. There's talk of intervention. There's just certain currencies that are completely mooning right now. When you talk about euro yen, you talk about dollar yen, it's been wild because the yen is getting killed. And then the crypto move right now. So those are the 4 things. All of a sudden, we got like a 4-stack wall of worry.
Yeah, no, totally agree with you. I think at least on our show, we talked a lot about Bitcoin being very, very weak relative to the rest of the market. I'm going back days and maybe even a week or so ago, like when Bitcoin was in the 93, 94 handle, it never really caught a bid. And we talked about its volatility being almost anemic in there. Finally, now you've got volatility in Bitcoin. Maybe now you've got a chance to nibble on the long side on any down move that you get in Bitcoin. There we saved our customers. Yesterday on the opening, we traded from the short side, but didn't really get a lot of short delta. We covered positions that had longs. We did good mechanical things, but we didn't hit any home runs on that move. Matter of fact, that move happened pretty much right after our show was ended, around 10 Central Time, where NVIDIA turned around. I think you have to key still on NVIDIA. You mentioned it. NVIDIA was inside the expected move, up $8. And the market just had a woody, right? I mean, it was yesterday. I mean, it really. And I think we were at a point where and Nick and I talked about it too, where we were kind of at a short-term low in the overall market. Well, you went right through that, and you're there again, and you're back to where NVIDIA pretty much had closed the day before or so. So NVIDIA only up about 50, 60 cents. I think you got a key on NVIDIA all day long. It's 7% of the S&P, remember.
I want to see a little bit of a pullback. Let's get NASDAQ, down below 24,000. I think that would be a nice little move here if we get it in the morning.
It did it last night.
Yeah. I think that's a spot where we can scoopy a couple for a scalp. I agree with what you've been saying of there's going to be some two-sided action.
There's going to be two-sided action today. If you think you missed it to the upside, I think you're going to have time. If you have the type of 2-lot trader or more than one, maybe you do something early and then wait on the rest. You'll be happy with your decision. If we sell off, you'll still be happy if you go in the direction you want. If you're just a 1-lot trader, you're going to have to be really, really nimble, and you're going to have to just watch what volatility is doing. It's only down 70 cents right now. That's not a big move. You're probably going to want to sell both sides and not get too directional, and then maybe lift a leg if you get lucky enough to catch a move. That's the way I would be playing it today.
Yeah.
Do you know it's getting a little nerve-wracking when you start seeing, things like the S&P hit their lowest level since the September 11th, the NASDAQ September 10th, VIX is at the highs of April, those kind of things. John, let's cue the video because I want to give the people a little bit of preview of yesterday and what it was like, man, being
this is look at you guys.
What's up,
Yeah.
Nation? Welcome back to the show. What a day we have today. It's Mike. I'm here with Jamal. We are live from the CBOE floor, SPX pit behind us. If you can't hear us for the next hour, it's because these markets are absolutely insane. This is definitely the loudest environment we've been in since we started doing the show. But we've brought the volatility. I think it's us.
I think it is. I mean, I was actually a little bit sad when I was arriving here, and I was like, man, we were up 100. I was like, man, only big moves on the days we're down here. I got here, we were only up 60 initially, and you called it. You were like, we're going to be red on the day, and sure enough, that's what's here. The action has picked up. It's gotten louder in here as we've gone red. A lot of orders are flowing in, so there's a lot happening today for sure.
Yeah. Awesome. Good job.
Yeah, you can stop it. I mean, it was busy. It was you could feel, what was crazy, and this is something that you only can feel if you're in the room like that. When we went right before we went red, it was quiet, and then as soon as we went red, obviously it got noisier, more orders came in. Then we were down maybe 12 to 13, and it was just kind of quiet again. And you could see they were just kind of waiting for the different levels to keep happening, which they did. Once you get down 50, all of a sudden more orders coming in. It was that kind of day, man. Look at him. He can't stop smiling, Nikki. He can't stop smiling because he's so happy. It takes him back.
It does. Awesome. It does. And open outcry is still there, obviously, in the SPX pit, but we used to have 500 guys and gals doing that. Now you got maybe 50 to 100, I would say. So the noise was deafening, and the action was really, really cool. But I love the idea that you're in the pit there, and you can look at how they're panicking. They're not panicking. I mean, they're just trading. I mean, it's just opportunity. And I think you got to take a step back sometimes when you get these kind of moves and just think about it. It's just opportunity. It doesn't mean you have to be involved. It means you can take it off. The market's always going to be here. Today, tomorrow, next month, next year, it's always going to be here. So if this is a little bit too much heat in the kitchen for you, it's perfectly okay. Reduce your size by 50% or get out and say, hey, you know what? I'm just going to watch, and this is not good enough for me. We had volume yesterday that was 40% higher than what we normally have. That's usually good, and volatility at a high. That's usually good for a little bit of stabilization in the market. So let's see if we get that today. That doesn't mean we can't have huge moves. Volatility, over 20, you're looking at, plus 60 handle move in the E-mini S&Ps, or that's what it equates to, just about a 1% move or more. So a lot of action for today, a lot of action going to happen next week. Even for a holiday week, you're going to see a lot of volume, I believe. So it looks like opportunity is abound for the next week or so.
Yeah, it does feel like it. And I will say one of the things we noticed yesterday was when we started to get that reversal of the move, I think the biggest thing to pay attention to is ranges, right? Yesterday, the S&P ended up having like at least a 200 point, maybe 240 point range. The NASDAQ had 1,000 point range. When you take that in totality and percentage of the change from the day before, you start realizing, oh, these are like 3 to 4% moves intraday. This should actually move the VIX. It's not going to move the monthly VIX in that way, but it did move the VIX 1D. And at one point, VIX 1D was like 32, which is like 2% moves, right? And so it's clear that thing is actually showing you what the kind of move is on a short-term basis.
Awesome. Good job, Betty Jamal. We're going to take a quick 90-second break. We're going to come back. We got the opening bell. We're not going to miss. We'll be back in 90 seconds. Good job, you. Love that video. And you guys fill out those jackets pretty good. Not going to lie.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
These breaks are getting short, man. Listen, I like it when we get a couple of minute break. I know you sometimes have to get up, son. I mean, I don't have to get up.
Hey, oh no, I've gotten used to it. I've gotten used to the morning schedule.
It's
You know,
like
I'm
like
regular
working
now.
out. Yeah. It's like working
I'm
out.
good.
Get used to it. Like, you know, that's right. That's right. Well, the market's working us out. It's working us out in a big way, stretching us from highs to lows. Even the S&Ps are up 25. Doesn't tell you the whole move. We've actually had just about a 75 handle move overnight on the E-mini S&Ps. Gold has had a huge move overnight, just about the same 75 points. NASDAQ's had a huge move overnight, also just about 400 points. That's the kind of volatility you get when /VX is in the 22 handle, above 20 handle. You're going to have some two-sided action. I expect that two-sided action to happen today. They're going to scare everyone all day long today and then flush us out. We did have a lot of volume. We're set to open here in just a couple of seconds. I want to keep everybody abreast on what's going on. Bonds are up 16 to 117. They're mid-range, but the higher end of their range. And Bitcoin's been in the news. I really don't think it warrants the amount of news it's getting. But Bitcoin's in the news, got down to 81,000. It's 84,000 right now. Volatility's back in Bitcoin. It really got very low volatility. Market, on the other hand, has kept its volatility very, very high. So 65 handle move on the E-mini S&Ps for today so far. Yesterday it was in the 50-ish handle. Day before I believe it was in the 40-ish handle. Now we're in the 60th handle. So maybe after market moves around here the first 15 minutes, we'll do something in the 0 day, either one side, both sides, or lean with a little bit of delta. We'll see what the market brings us. That was your opening bell, son. How does it feel? You okay?
Oh, I'm alive. I'm alive and well.
I'm happy for you.
I'm good. I'm good. I mean, this we had some great risk off yesterday morning. It was good timing. You know, got into some new positions that took a little bit of heat. Like, you know, I did that SPX iron condor. I got into accused short put. You know, stuff where I'm trying to capture some volatility, and volatility has continued to expand. I didn't do it at the lows, and so those positions are taking some heat right now. But that's the position I want to have on. Like I'm not. You know, this is two-sided action. It can't be up every single day. You can't. I don't want that trading either. So this is
why not?
Because that's where FOMO comes in, and you start putting a little too much risk on.
Right. You're right. You're right.
That sort of thing.
When FOMO comes on, that is when you start putting on a little bit too much risk.
And that's not good, because then people, you know, they get greedy. That's where you get greedy. You need to have two-sided action. We talk about it all the time. Volatility spikes, it contracts, it clusters, it spikes. So, you know, this is par for the course. And if you can't handle the heat, get out the kitchen.
Yeah, I mean, it's easier said than done, right? When you're watching the overall market.
Yeah.
I think you got a key on volatility. Volatility is staying bid. It's down 65 cents now. E-mini S&Ps are hovering around 20. Actually, kind of I would call it a light opening, meaning we haven't had the $15, $20 ranges that we had overnight that seem to be warranting the volatility that we have that's in the 22 range. Right now, everything seems to be perfectly priced, which is really hard to figure out. Look at gold up $4 and change, but you go to your GLD and it's down 87 cents. That's that whole perpetual market that the futures are open basically 24/5 and GLD closes. So even though you're looking at /GC as being up $4, it's actually lower than where it closed.
Yes.
Just putting it all into perspective for everyone.
I'm looking at a couple positions. Like we took off Oh man, and when you're routing orders today, put them off the market. You want to be. So I just put that put in I sold the put in Robinhood. This was I took the 100 strike put off yesterday into the rally. The stock is down. I mean, it had an intraday range yesterday from like 120 down to 100. It's at 108 now. I took off the 100 strike put yesterday morning. That was in December. I just sold out the 90 strike here in January at $4.60, and you had a mid price that was like at like 430 ish. So I put this up at 470, canceled, replaced it to 460, and I got filled on that, 30 cents off the mid price. So with volatility where it is, if you're buying, put it well below the mid price. If you're selling, put it well above the mid price and work your orders a little bit, because you're going to have not only two-sided action, but with this level of volatility, you might get lucky and get scooped up at a price that's well off the mid price.
Yeah, and especially in a market like right now where markets can be a little bit wide. Even if you look at the E-mini S&Ps, you got 10 cents wide markets, 8 to 10 cents. They're usually 2 to 3 cents, 1 cent wide. So be careful with your pricing in here for sure.
How do I get short Eli Lilly? How would you do it?
That's a tough one. That's a tough one to trade. I get your point here. But when you look at the markets, I guess you would go out to January. But when you look at the markets here, a good open interest. But if you go to the volume, it's probably ones and two lots. But look at the markets here, $6 wide. I don't think you can get short Lilly. I don't think you can get a good price on entry.
I know. I was looking at like maybe a put diagonal spread, but you got to put up $2,500.
Yeah.
To do that. Like I was looking at the 1,950.
Mm-hmm.
I mean, I think this, like it looks like this is kind of where people are trying to hide.
Yes.
When you look at this stock, it's gone.
Trying to hide in Eli Lilly, isn't that kind of an oxymoron?
I mean, it's about to be $1 trillion company.
Yeah, no, I hear you. I hear you.
Should I put something in cheap, like am I going to get? Or do you just do the call spread? Here's the question. Would you rather have $50 of risk on a call spread to the upside at, let's see what it's trading at. I'll look at it right now.
Okie dokie.
So if you had let's say the 1,200, 1,260 in January trades at $7 and change. That's the mid price right now. Mm-hmm. Would you rather have that for 4,000-ish in buying power versus 2,500 in a put diagonal spread that's got some positive gamma?
Oof. Probably the put diagonal spread, but I don't know how you're going to get filled. I
agree.
I really don't know how you're going to get filled. That's the problem there.
Yeah.
Unfortunately.
All right. So what do I do in the MU? Do I roll down this call, or do I just lean long here at 200?
MU, excellent question. Ivy rank of 82. You're in December. What's the position?
I have the 200, 280 strangle. This is a perfect example of what we were talking about, of like volatility expanding. I'm right at the money. You're tested. The trade is, to be completely honest, is pretty close to a scratch. My net on the not a scratch, but is not as bad as it has been. I've done a number of rolls here, so I have this on for $14 credit. It's trading at like $18 right now, so I'm out like $400. Mm-hmm. Is this one where you kind of be a little less aggressive and you roll down maybe to like the 250 at $2 and change? Or do you close the trade and roll to January?
You could close the trade and roll to January would probably be the prudent thing. When you look at earnings coming out on December 17th, you're not really getting a pop in volatility as of yet. You do have 10 vol differential. That's why if you're putting on a new trade, you might look to sell December and buy January. But I like your idea of rolling. That would be an example of what we talked about earlier this morning.
You could roll to the So if you wanted to reduce a little bit of delta, so I'm short the 280 call, I would roll the call, same strike. You go to it's basically a 1 standard deviation in January. I got the 185. I could go to the 185, which will rolling down, which is another thing you kind of talked about.
Yep.
Doing the whole transaction for basically, a scratch. You're basically moving out in time. You do this for 85-cent credit with the $14 net credit on the trade. You've got break evens, 295 and 170. Is that the sort of thing you kind of?
That would be the kind of thing that I would look at. Yes, you're exactly right. You're exactly right.
I mean, these markets are kind of junk too on some of these strikes.
Yes, they are. Yes, they are. It's very, very hard to get filled in MU too. MU's got dollar-wide markets too. So it might be the easiest thing to do, might just be to roll down. You've got 30.
What about just rolling the put?
Roll the put from Dees to Jan and leave.
Buy back the strangle and sell.
Oh, you got to buy back the strangle because that call for $1.80 or $1.75 or whatever is worthless to have on.
Yeah, you buy back the strangle and we sell out just the 190 put. Your delta basically you basically have no delta change here, but you're only because you're at the money put is a 50 delta. You got basically a worthless call. So your 50 deltas, you're rolling to a 36 delta option here in January, a little bit further out of the money. So you're kind of moving your risk here into this move.
Totally agree.
It's probably going to cost a small debit here. I'm going to try this at like $1 and work my way up here.
Do it to it, son.
Yeah.
I like it.
Yeah. What other stocks are kind of piquing your interest here that we can get?
Let's take a look at what is moving. We haven't
140 debit. So I'm just short the put now.
Perfect.
In January there.
Some of the stocks that are moving to the downside, being a little bit of buckers, even the S&Ps are up 20. Volatility's only in by 60 cents now. You got Oracle down $8 and change. You got Crowd down $8, almost $9. On the NVIDIA watch, you got NVIDIA down $2.80. ABGO down around $4. Comes earnings on the 11th. AMD down around $3. ARM down around $3. There's your NVIDIA down $2.25. AppLovin, Baba, AppLovin just went positive after it's moving $1 at a clip here. CVNA, Carvana. I guess this economy, people are still buying cars, up 11.
The used cars, they can't afford the new.
There you go. Everything that old is new again. Google down 9.5. Costco, which Vanetta talked about this morning, 5 and change. Tesla up 4 and change. Meta looks like it's up 4 and change. Looks like market catching a little bit of a bid on some of the stocks that we watch.
Yeah. Do we get it? Let me see. Did I put on a new position? I think we got I sold the puts out again in December in NVIDIA. Those ones, I sold the 165s out. Those haven't moved all that much. They've moved about $1, but I think this is probably an interesting spot to do a longer duration, like call diagonal spread. Maybe we go to January to like the 185. This is the trade that I was kind of looking at into earnings that we closed in the morning. We could do like the 185, 200 diagonal spread here.
Okay.
January, December, it trades at about $8.50. If you think we can get back to kind of this 185-ish range, which is where it was chopping around this whole time, you probably have $200 of upside versus, $200, $300, $400 of upside versus, 100 to 200 of downside in the short term.
Yeah, sure. Totally agree.
Fall out of bed. All right. I paid up on that one. 180 or 855 there.
Got it. You don't have to pay up on anything today with the way the market's moving back and forth. Put it in the price you want to get filled in, and don't have FOMO. If you're adjusting something, then you look to be aggressive. That's the way I'm playing it today.
How about this? So that's that Iron Condor we did in ES with Craig. We did that like it was end of the year, December 31st, 6,200, 6,150, 7,007 1,050. That's come in about $100, 2 points. It's trading at 14 right now. We put that on at 16.
Yeah, you did that.
The spreads are a little wide, so you got to be careful there. But just to put into some context, we had a little bit of short delta on that into the rally. You get that move lower and that pop in volatility with the iron condor. It doesn't move as much. That trade has actually come in despite really it being right where we were when we put that trade on.
Yeah, markets could be a little bit wide there, but yes, it does look like it's about $1.50 to $2.50 winner, which is really $100 to $150 winner, right at 50 cents a point.
Yeah.
Good. I don't think you do anything with it, to be quite frank. Give me S&P's up to 18. Volatility not moving too much, down 60-ish cents. It does look like a little bit of a chop fest. What about a little bit of ES trade here or SPX trade for 0 day?
Yeah, what are you thinking?
You got that $65 expected move. Hasn't really moved so much this morning. I digress. You're going to look at SPX. It's a $51 expected move. Hasn't moved too much. ES was a $60 expected move. Market's a little bit wider, and they're not giving you the true range there. It's about 50 handles in SPX.
Let's do like a $15 wide, which is what we were kind of looking at yesterday with our 0 day research. I'm thinking.
Watch your strikes there in SPX. They get wide.
You're in the AM settled.
Oh, sorry, I apologize.
Yeah, you got to go. So that settlement price is probably, what does that come out at, 9:30 Central?
Yeah, SET.
And you can't trade those. You can't trade the AMs right now. You got to trade.
Correct, and that was good. That was a good catch on you. The little red dot there with the AM, those are dead.
Yeah. So I'm looking at basically a 20-ish delta on either side, slightly long skewed, but I'm looking at the 6,500, 6,485.
Oh, you're leaning a little bit long here.
I mean, there's a lot of put skew, dude, with this pop and volatility.
Okay, I don't hate it. I like the vote. I like the vote of confidence.
But I mean, this is new. My delta on this is actually slightly short delta, but it's basically flat. It's basically zero. I'm looking the 66.25, 66.40 on the upside, 6,500, 65 or 64.85 on the downside. So it's 15 points wide.
So I'll put it up on the screen for everybody. That's the one you got filled on, and you got filled on it at 560, right?
Yep. And I'm going to put this in at 480.
And your delta's pretty flat here.
Yes, it's nothing. It's nothing. Mm-hmm. So we're going to put that in. I think if we can get the NASDAQ down, like I was looking at 24,000 on the dot. If we can get down there, I think we can scalpy, scoopy something from there. I think that's kind of the spot here. Today being option expiration, does that speak to you in any way? It kind of tells me it's going to end up being a flat day.
I should have mentioned it. The option expiration for November, and that's the opening print, which we just had, is typically a bullish one. And even after yesterday's action, it's going to be a bullish one. So we'll see what SET ends up being, but it's typically a bullish one. That's just for the opening print. That was quite a hold after last night's action. If you were playing the 0 days to play for an up print here, and you were going to get paid for it. Now the rest of the day, volatility only down 37 cents. Those stocks that were catching a little bit of a bid earlier.
All right, I started one of my NASDAQ.
You're
got NASDAQ down 20.
You said 2,400, right? Or 20?
Yeah, well, I got ammo.
You're 24,000.
Call me a Johnny
right now. Yes. Mm-hmm.
Yeah, I got some ammo.
Mm-hmm. Mm-hmm.
I scalp it for 30 ticks right now.
Okay.
How was that? While you were talking, I took 30 out of it.
I absolutely love it. And that's what you're going to have to do today, and not marry positions. You can marry your option positions. You can't marry your scalps today. If you marry your scalps today, you're going to quickly get too big in your positions. You're going to have to stay nimble here. And when you've got something going against you, you're probably going to be prepared in the NASDAQ futures, like you're talking about, 100-handle move against you before you nibble again. This is not the market where you nibble every 30 handles, like it goes 30 handles against you and you nibble again. That is not today's market, because you're going to have the opportunity, like you just did just now, to take quick 30 handle profits if you want to do that.
Don't be a pig today.
No.
Don't be a pig today. Don't get married.
The market's going to go your direction, whether it be lower or higher, and you're going to kick yourself because you're going to say, I could have been a hero. But no hero crap. We're all about everyday trading and not looking at the one-day hero win that you want to get.
You got to be able to open the doors.
That's correct.
So,
That's correct.
And as we speak, I missed out on 60. God, you stink, man.
You're going to do that to yourself all weekend long.
I'm just kidding. We just talked about you can't do that. You're out.
I know, but you're allowed to.
Over.
You're allowed to jest. You're allowed to.
Yes, you joke about it.
Awesome. What do we got coming up next? We got fast market. Let's do that, because you know what? We need some trades. We're going to put up trades. You took off a lot of trades yesterday. It'd be interesting. I'm going to assume, and I have not seen them, that these trades are going to be all bullish trades, but we'll see what happens right after these messages. We'll be back in 90 seconds. Let's take the live.
I'm selling a put in Uber too.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with well, you sold a put in Uber, and now you're looking at CoreWeave, CRWV.
I sold a call there into the rally that we had yesterday at 335. I just bought it back at $1.50. I still am short the 80 strike put, so I'm still underwater on the position as a whole. But $2 out of that call,
$2 overnight. I mean, you might be down $4 on the put, but again, you're just trying to reduce your losses. You're just trying to work it so that your assumption works. Remember, the stock always has to cooperate for you to be profitable. I mean, there's no other way about it. Even on a delta neutral strategy, the stock has to go nowhere. Your assumption has to be solid, and your conviction in your assumption has to be solid, coupled with your mechanics. Today is going to be all about mechanics. Volatility is only down 50 cents. I talked about it yesterday. I'll talk about it today. Volatility is not, in my opinion, going to come in huge today. I don't think it's going to come in by that 5%. I think the weekend volatility is going to stay bid. I think they're not going to allow you to take that vol risk off today. That's my opinion. Even if we close higher today, volatility will be bid relative.
For sure.
I would love to see it down $2. I'm not going to lie.
Yeah, and it tells you as well that you should expect to see red numbers at some point today.
Yeah, we have which I'm a little bit surprised. We're almost a half an hour into the day. I'm a little bit surprised that we haven't had that scare to the downside. I thought, like I said earlier, that we'd get back down to that 65-25 or even go through it. Yeah. We have not on the evening S&Ps. We really haven't even been red on the day. We've been hanging out right here. It's almost eerily quiet for the day.
But there are some swings.
Individual stocks are definitely moving around. I mean, you had that yesterday. You had that today.
Yeah. Cool. Let's do it. Let's see what kind of trade ideas we got here. This should be fun. I posted, I've been posting on Reddit, for trade ideas for both fast market and what's your assumption. And for fast market, they were all like, I don't know. I don't know about this one. I don't know about today. So I think a lot of people have been spooked a little bit. E-mini's up 36 now.
Right. Yeah.
Let's do it. Fast market. Let's do it. IBIT. Oh man. Jade Lizard. January 45 put, 54.57 calls for 310 credit, 0 upside risk. Sean in Hong Kong. I'm with you, brother. I am with you. I have some long delta here. I'm max capacity. If you don't have positions on like this and you're very, very scared of the downside, as a lot of people are, I think ways that you can play this is also with butterflies, just like normal butterflies. You still have lots of upside skew here. They trade very cheap. You can look at something like that, but I'm locked and loaded. Something like, I might just talk myself into this. So you could do something like, like some of these butterflies at $1-ish. You do the 50, 57, 64, plays you back to like 100K on Bitcoin. Like that sort of thing. If you're afraid of the downside and you don't want the naked put and you don't want to use the amount of capital on the downside, these sort of trades kind of look interesting. January, but I'm locked and loaded. I'm full. My boat is full. And
you can't do it.
I can't do it because I'm a Johnny.
Yeah, IBIT, I'm going to put up on the screen there, really has gotten itself into a pickle here, trading down to $48, down 70 cents today. Good IB rank of 90. Markets, when you look at them in January, are really good. They're, nickel or less wide. It certainly warrants a trade, I believe, if you're looking to sell premium and you have some sort of opinion on Bitcoin one way or the other.
Yeah. Next one, please. Oklo. Ooh. All right.
They're looking to get you in trouble.
Yeah, they are. Near to medium term support at 75. I don't know where you're drawing that line, but I'll take it.
I mean, listen. It kind of hovered around here for a long time is what I think they're saying. I don't know if that becomes support or resistance or anything else like that, if it dips slightly below that. But this is a stock that's on a fire sale. Now, it is a stock
from the highs. I would not call this a sale. I mean, this is a stock that doesn't have any revenue, that is, just a concept. If this is akin to Bitcoin, if you think Bitcoin is, fluffy, this is in that same realm.
Same realm, 100%. But my point I was going to say is, unlike Bitcoin that had like a 40-50 vol, this has 110 vol. So it is, the volatility warrants its fluffiness, as you call it, because 100% vol means basically in a year unchanged or back to $150 again. So at least you get the bang for your buck here.
Yeah. I don't know if I want to sell the puts.
Okay. I would agree.
I think we could do something like the 100-110 diagonal spread. It leans you long about 18 deltas, which is similar to what the 75 puts are. The 75 puts are about 28 delta there.
Mm-hmm.
You want to do the 110s twice in December?
You certainly could. Big dog like you.
And do this I'm going to move this to the 115s. I'm going to do a 1x2. So January, I'm long the 100, selling 2 of the 115s in December. And I'm going to see if I can get filled below mid price. Minimal risk to the downside. I mean,
I'm going to put it up on the screen for everyone. You're looking here at.
I can show it in a moment too. Here,
I got it for you. You're looking to buy the 100, sell the 15, 1x2, correct?
Yes.
You're doing a 28-day. That's where your short is, and your long is in January.
Yeah.
And you're doing it for a debit of around $3.40. Now that doesn't tell you your full risk, right? Because you got that extra unit short on the upside.
Yep. 355.
355, mid price is 359. So all you need is a stock to move a second or two in your direction. And when you've got volatility like we do today, then you're certainly going to get filled.
Thank you, Jim. I think we're 2 for 2 because I'm with Sean as well in the long IBIT position.
Mm-hmm.
Next one, please.
Man, they're almost lulling you to sleep here with this market after yesterday. Even the S&Ps were just up 20. They're up 27. Yeah. They've had really a $10 range all day long since we've really been on the show. Volatility staying bid, only down 50 cents.
Yeah, you're not getting paid on any of that short vol, that's for sure.
Your SPX strangle is oscillating all around from like $5 to $5.30. I mentioned that because this would be the type of day, if you wanted to close that position, I would be putting in a bid like you did just earlier today. Like today's the day where you can have a resting order on something like an iron condor, because the market's going to move exponentially back and forth, and volatility is moving too, which has a little bit of play in this big SPX product. So I just wanted to put it out there. Mid price is moving by 30 cents.
Yeah. Okay, Josh in Boulder, Ivy spiked and NASDAQ got crushed. Yes, it did. Time for a slightly skewed QQQ iron condor, 20 points wide. You're looking at the 550, 535 put spread, and then $10 wide on the call spread. I'm with you. I actually went and sold the 550 puts yesterday at 653. Yes, 653. And I did that like when we were, I think, just off the show. So we hadn't been down, 500 points where we were at the close. So I took some heat on that. They're out about $100 in December, but I certainly think this is an interesting point to do that. And the NASDAQ just turned,
yeah, I was going to give you your NVIDIA watch for a quick second here. NVIDIA opened closer to $181, got up to $182. That was bringing even the S&Ps higher, down to 176. It's sitting at 178 and change. I think you have to have NVIDIA up on the screen as well as having the S&Ps when you're watching this. You just did another NASDAQ future. This would be a long for you. This is your first one because you scalped the other one, correct?
Yeah, I should have waited until it was down, but I got a little greedy.
Don't worry, you're going to get another opportunity.
I think
only
so.
Down 5 cents.
The cues. Okay, so we want to do a wider put spread to tighter call spread. So 20 versus a 10. So what do you think about going to December? We'll do 545, 525 on the put side.
Mm-hmm.
So you're right around a 20-ish delta. On the upside, you do like the 620, 630.
Mm-hmm. Okay.
And you do that like a $4 and set. This is like a dynamic iron condor. So you're basically flat delta here. You got more risk on the downside. So if you do get that kind of grind higher, it'll work in your favor because of the wider put spread that you have.
Sure. I like it.
All right. Let's see if I get filled. I'll put it in at 480. We'll see if we get a little bit of a downtick here.
Downticks galore.
All right, I'm going to leave that in for now. We'll see if we get filled. 475 is what I have it in for. Next one, please.
Okie dokie.
MSTR, Alex, Savannah, Georgia. MSTR is at an attractive level, but might take time to climb out. Selling an iron condor, 150, 140, 225, 235. I don't know if this is the way to kind of trade this because of just how volatile it is. I think I would just, if you're, if you want to trade this, I think you got to kind of pick your battles here and be on one side or the other. Sell a put spread to buy a call spread. That's the cues. So I just got filled at 475, and it's funny because
and at your price,
at my price, and when we were placing that trade, the Nasdaq was down about 40. The Nasdaq into that fill rallied about 15 handles, even though that had short delta. And that tells you, if you look at volatility is now basically unchanged. So even though we had a 10 or 15 handle move, which was opposite the direction that I needed to get filled on that position.
That you would have think you needed to get filled on that position.
Yes,
That's correct.
I said we needed a little bit of a down move. We were down 40. I got filled when we're down 25.
That's right.
Small. It's volatility, which is expanding right now, and it tells you that things are going to move today. Things are going to move today. Things are
going to move today. You are correct.
Look at this.
So put in at your price.
Yeah.
You were too early on your future. Now you got 30 handles the other way.
Yeah, I know. I'm trying to close it. All right.
There you go. Sold them at 65. Good job out of you.
Unbelievable. Okay, so
now they're 80. You feel bad?
I know. I missed it. So
you got 30 handles on it. You were early, remember? You said
I was early. Yeah. I think you're gonna have lots of opportunities.
This is exactly what I'm talking about. You know, anytime, every future that you did, you had a quick profit in. I mean, I know you had a 30 handle loss within 30 seconds, but you had a quick profit within a minute and a half. I mean, every future that you trade, you're going to have when I say every, that's the wrong way of saying it. If you're scalping futures, you're going to take a 20, 30 handle loss or profit almost immediately after you make the trade. So the quandary you have to have is, do you want to be nimble, which I think you should be, or do you want to be piggish, which I think you shouldn't be?
Yeah. Agreed. And I think
positions, not like just core positions, stocks that you're looking to buy, those you can be piggy on. Futures, different story.
Yeah. And to that point, I think you have to be careful with stop losses today. Like, I think you have to size your positions small. If you're afraid of the big move, make them even smaller. And if you want to put the profit orders in, the GTCs for a profit, I'm totally good with that, because you might get that in one tick.
Stop losses cannot be used today.
It cannot be used today
inside an expected move. You got to reduce your size.
You got to chill and reduce your size.
Even the S&Ps have traded 700,000 futures already. We're 35 minutes into the day. Remember, we've had 1 million futures at 2:30. On some of the quiet days. That's what I mean by opportunity and just times to be right. When you're looking at a scalper's market, we've always talked about in the past, you want volatility to be high. This is what you have. This is a scalper's market right now. Option wise, you could take a little longer time frame, but for futures, this is a scalper's market in my opinion.
And to that point too, your option positions P&L wise are going to fluctuate very, very rapidly all day.
That's why I say don't even look at P&L. Put on positions that you want, because I was talking about that stupid iron condor you have on. The mid price was moving by 30 cents. Was it really moving by 30 cents? No, it wasn't. And that's why it was going down to $5 up to $5.30, $5 up to $5.30. The iron condor wasn't moving 30 cents in those 10 seconds. What was happening was the market was getting wide on one option and then contracting, wider on one option, then contracting. So be careful on your mid price. Go above mid price or below mid price, and then walk the order as you watch mid price, especially on a big product like SPX.
Yep. Alex, sorry, we went on a little tangent there, but I'm going to pass on the MSTR. I feel I think you got to play these sort of very volatile stocks with a little bit of directionality, sell the put spread, buy a call spread, something like that. But I'm going to pass for now. And as we're talking, NASDAQ is now going red.
That's right. That's right. Big
80, 90 handles, the other way.
Yep.
Let's get the next one.
This is going to be the stop and go market that you kind of want when you're trading futures.
Yeah.
Option wise, you'd like it just to go your way immediately.
It's so funny. I'm like, as I'm typing in MNQ to buy them at the 15, 20 handle, they move 30 freaking handles.
Right.
While I'm typing.
That's another thing. You can leave orders in on options. In my opinion, don't leave any orders in for futures.
Yes.
I mean, unless you love your levels. If you're watching your lines and that's your thing,
you mean orders to buy. Buy or sell to get in.
Yeah, then you should be leaving orders in, because you've done your homework, whatever that means, and that's your level. Then you should be putting them in. But if you're putting them in, like here we just went red again on the NASDAQ futures. I mean, anyway, go ahead. I'm sorry, son.
CMG. Oh God. Does everybody know what bags I have here? I own CMG at 39. I sold a put into earnings thinking, my God, the stock's down like 50%. It can't go any lower. And now it's down like 20 or 30% from there. CMG 27.35 in January. Abashik. All right. What do we look at?
What do you think?
All right, 27. Oh, did they have like a dividend? Oh, I can't do this. 27 put trades at 40 cents. 30. Yeah, I can't do this. I can't do this. I can't put the capital towards this. I'm sorry. I gotta pass on this one. It's just too cheap of a stock for me. I'm gonna try and get this NASDAQ here at 115. All right, 111.
You're bold as volatility is unchanged.
I know. Small. Got to stay small.
Hey, volatility 22.85. Quite high if you're looking at volatility. I'm going to put it up there right now. If you're looking to sell something here, 1x2 put spreads, if you're interested in doing that, now's the time.
Yeah.
Fortune favors the brave.
Yes. So I'm going to pass on the CMG strangle. Just too cheap for me, unfortunately. But thank you.
Okie dokie. Aww.
EEM. Emerging markets. Trying the emerging markets since ours is a mess. That's pretty good. Neutral strangle in December or January. Nick in Ann Arbor. I have not traded the EEM in quite some time. Where is this at? I guess it looks the chart looks basically the same as what the E-minis look like. Okay, you think in January or December. It's like guys, at a 20 implied volatility on a day like today, I don't know how you go into this. I get the thinking here, but I don't know if I can do it.
You go into it very nimbly is how you go into it.
I think this is one, if you wanted to do a synthetic stock position, like buy it in the money call as a cheap leverage way to get long. Like, I don't hate that, but I can't sell the January 51 puts at $1. I don't know what you're what
you're looking for here.
Yeah. What are you looking to make? 20 cents?
Right.
Like I would rather.
This is not the 20-cent market that you were looking for of yesteryear, in my opinion.
Yeah, you want to buy 100 shares of stock here?
I mean, you certainly can. I mean,
try and scalp it for 50 cents or $1.
I mean, you certainly can. I mean, I don't know if emerging markets are at a fire sale here. Going from what 55 to 52, but sure.
Yeah,
At least your deltas will be static.
Yeah, I bought 100 shares. So I kind of like this. I'll sit on this position and I'll be able to watch emerging markets now in my portfolio. And, I'm going to look for
probably not something we've been watching. Probably not something you've been looking at.
Yeah, no, make a couple bucks on that. I'll be out. So Nick, I appreciate the shout out and putting that on my radar. So I'm going to follow along. Bought 100 shares of stock, small.
Beautiful.
Eric, we got our SPX trade on. So Eric is looking at SPX trade cautiously bullish, selling a 30 delta put spread, $20 wide on any pullback. I think if you haven't put it on yet, I think, now you've got kind of the lows of the opening session. Go get it, Eric. But we're in with a little bit of neutral delta here. So I'm with you. If yours works, mine probably works as well.
On the Nvidia watch here, stock is trading just about $1 off of its lows, down $2.70.
All right.
Nervousness abound.
Oh, everywhere. So Eric, I'm with you. I'm in that sort of trade. Sort of.
Beautiful.
Next one, please. Hood. Look at this. We're looking at the same thing. Strangle, 29 days, one standard deviation. You're looking both sides. Okay, I put on a short put out in I'm short the 90 put in January. You want to do something in December. I don't hate that. You want to do like one standard deviation would be the 185, 130.
Okay.
What do you think about that?
Sure.
Or you want to do the 90 just to keep it simple? We have both.
I would keep it simple.
Yeah, let's do the 90. We'll do the 90. I'm going to put this in at so we're going to do the 90, 130, which is a slightly long delta. We're talking about like 2 deltas here. It's basically.
Good one.
I'm going to try this above the mid price and work our way down.
Beautiful. Try as you may. Nothing out of you.
481.
481. You are correct. 481.
Yeah. What did I get in on that MNQ? 110? 111?
MNQ 111. Yeah.
Well, I just missed it. Damn. I'm telling you, this stuff is moving faster than my eyes.
Right. That's why I say, you can put in orders at your level that you want to, and you can put in orders at your sale if you have something in. But I wouldn't leave resting orders in just for playing the range. Like already in, you can put it in.
Yeah.
But not as a resting order.
Yeah. Next one, please. So we got Hood. I'm in. 6J calling bottom. That's 63.50. Sell puts are just long futures. What do you think of this?
I hate trading the yen. I don't think you get the bang for your buck. I like the way you're doing it on the FX side. It's up almost 1% today, which is a big move. And I know the yen is on its butt. I mean, this would be the lows from 2 days ago. So it's not like it's not like you missed it in the yen. I just think it's dead money.
Yeah, I agree.
Unless you want to do the Paris future like an FX, then I like the play there.
I am with you, Jack, in Philly. I am long the yen. I'm short the euro against it. I'm with you. I want to see the yen bounce here, but I agree with everything my dad said. It's just not my trade.
Volatility up 20 cents now. Up 20.
Kind of spooky. I don't like that.
Be careful here, girls and boys. Be careful.
Yeah.
Downside.
Yeah. I mean, maybe we get to 2,400.
That's what I was thinking on the Nasdaq. That's what I was thinking all along this morning before we started. But we certainly looked good this morning. There was no doubt about that. Certainly doesn't look that way today.
All right, we're gonna get another one here, down 60.
I love it when you do this.
You like this? I don't know. It's spooky, man.
I don't like your purchases. I think you're gonna get a little bit of a flush out coming soon, but
I
think we got to test the lows from last night, which is around 2,400 or under on the Nasdaq, and 6,500, 65 and a quarter on the even the S&Ps.
Yeah, but don't you think everybody's looking at that?
No, I think everybody is very nervous.
I think so. All right. Last one here. Let's get one more in, and then we'll go through this market measure real quick.
Beautiful.
Was bearish dash, but neutral after the earnings pullback, thinking 20 delta iron condor, $10 wide in January. Ben in New York, NYC. Let's go. All right, dash. 185 stock's been absolutely killed. I mean, this is back. I mean, it gave up basically the whole year. Wow. Okay, so you're thinking January, $10 wide, delta neutral. Oh God, these markets stink so bad.
They do stink, and I think you have to stay the liquidity today.
Yeah, I'm gonna have to pass on this one, Ben. I mean, these markets, you got $1.50 wide markets, you got open interest of a couple hundred contracts. It's just not where I want to be today. I gotta pass on that.
Hey, your 70 purchase has about 40 handles in it right now. Anymore.
Yeah, there you go.
There you go.
121. So I took one off. I'm still long the other one.
Volatility / VX up 20 cents off of its by about 30 cents. It looks like.
All right, I'm out of both. 145. Can you? So I got one.
Just to give everybody an idea, the difference between those two trades of 20 handles, which is a big move, was about 15 seconds.
Yeah, was about.
I mean, I'm looking at the fill prices. I'm looking at the times that you made them.
In the time of my click, I mean, I put them in at 135 and got filled at 145. So, I was clicking, and in that second, we rallied another 10 handles, and obviously I got price improved to that point. But
now we've sold back down again. You know what I mean?
Yeah.
So you got to be very, very nimble, I think, with your scalping. And if you do, you're going to be very, very happy with yourself. And if you put on some of these positions with high implied volatility, like you have now over 23, I think it's nirvana.
Yeah, this is look at them. They're down 40. They're down 40 now.
They are down 40 back to 24, 75, 80 or so.
All right, I'm back in.
I mean, this is
back in around 70, dude. I mean, we just took 80, 90 handles in 35 seconds.
Yep. This is called trading, son. This is called trading.
Yep, this is fun. Good.
On the overall breadth of the market, even the S&Ps have around 400 stocks higher and only 100 lower. Now, I think that goes to the stocks getting a little bit out of whack on the close yesterday. And I talk about kind of that capitulation a little bit with all the volume that we had. But yet we're basically unchanged on the overall market because those big 7 stocks, which I think the S&P is more like the Dow these days, with NVIDIA being 7% of the market, NVIDIA down 340, 350. You're not going to be able to look at just the breadth to figure out what's going on with the market. You're really going to have to key on those bigger stocks that are controlling the S&P until they overweight them or underweight them in a different way. Anyway, that's my story. I'm sticking to it. Volatility up 44 cents, back near its highs. Oof.
Yeah. SPX, that Iron Condor, I mean, that's going all over the place. But with this 50, I mean, you got 50-cent move in vol right now. I mean, this is you're going to be all those 0-day Iron Condors. You ain't getting paid on those.
Not yet.
You're gonna be holding on into the close today unless you get a vol contraction. I mean, which I don't think that's gonna happen. I think you're gonna have all day long, 20-point random moves up and down both ways, sideways all day.
Yep. NASDAQ was just down about 70. It's down 40. Even the S&Ps were flirting with unchanged. They're now up 7. The Dow is your leader in the clubhouse with the Russell to the upside.
Oh my God.
Traders market, my son.
I know.
Be nimble.
All right. Oh, I should have held that.
Yeah, you just sold them at 99. They moved 20 handles better for him.
Better. By the time you post that, it's $20 better.
That's correct.
Unbelievable.
Hey, sometimes you get the good fill on the opening. Sometimes you don't get the good fill on the close. You can't get good ones all the time. That's called trading.
And this volatility on the second by second basis is moving in nickels.
Yes.
So stuff that is another way to quantify the moves that you're seeing in the NASDAQ. Like, I don't think today nothing is changing fundamentally or sentiment wise. This is just volatility. This is just, people getting in and out and, just
everybody chasing their tail.
Yeah.
That's why you got to be complacent with your trading. No hero crap, and stay complacent, stay calm, stay cool, stay collective.
NASDAQ unched.
NASDAQ is unched now.
They're up 15 now. I mean, this is incredible. Should we? I guess we do you want to do the market measure, or should we just
let's do the market measure?
Yeah, let's go quick.
We're 10 handles on the even the S&Ps off of where we opened.
Yeah.
But there's been opportunity abound, and I think that's what we've talked about all day long. Volatility up 25 cents. Let's watch that as we do this market measure. I think you should. I think you really maybe if you're not in SPY, you should be looking to do something in SPY. If you're looking to do something in the indices, you got SPY with a monthly implied volatility of 25 now. IV rank of 41 doesn't sound like a lot, but it's about double what it was just a week or so ago. I don't know. If we get a rally, it's going to contract. We'll be back in 90 seconds. We got the market measure next.
NASDAQ up 30.
Oh, you're going to change from bullish to bearish 18,000 times today.
It's amazing.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Niggy, we are back, son. And you know what that means? Time for a little bit more Tasty Live. You were just talking about how the NASDAQ was rallying. It's now back down to down around 30. Oops. As I spoke, it's down around 20. I mean, as I get the words out, we move. It's crazy.
I think today is going to be a chop fest, and
that was what I said all day long. And I think that you can buy a significant dip, which we have not had yet. Okay, I want to be clear here. Now, you've been trading futures in a small way and being very nimble, and I think we said that from the very beginning of the show. I thought we'd have a chop fest. I didn't think you'd get paid on volatility. Volatility is actually up with the market up. I mean, the Dow is up 280 handles. That's over a half a percentage point move to the upside, and volatility is still up. Even the S&Ps are up. It's still up. Nasdaq's basically unchanged. The Russell's up 0.75%. Volatility is still bid. You're not going to get paid on these adjustments or anything that you're doing today, but you must stay the course, in my opinion. Delta is king. Delta is king. Believe it or not, if volatility, let's say you have some long delta, you've got your 30 long delta on a position, and you roll down that untested side to get yourself long 15 delta, to get yourself back in line, and we rally up, and you go to 0 delta or short a small amount of delta, if volatility goes from 23 back to 20, you'll have long delta, even though nothing moves. Because remember, when volatility is higher, the out of the money options, their delta, the 20 delta option that used to be $10 away from the market is now $15 away from the market. When volatility contracts again, those deltas become $10 away again. They become the 20 delta again. So your deltas are going to change even with no movement in the stock, just the volatility itself. So stay nimble, keep your deltas in line. Conversely, on the short side, if you have short delta and you're playing a position and you want it to go lower, when volatility contracts, you're actually going to get a little shorter. So be careful.
Yes, but that you get that mulligan if you're short the calls into the up move and volatility contracts. It's not as the move isn't as substantial in terms of the pain on that call, and that's why you kind of get that mulligan. But yes, to your point, you do get more short with the contraction volatility.
Did you just buy him again?
I just bought one little baby at 81. Oh, am I a pig?
A little bit. I mean, now you got volatility up 45 cents.
We were just up 20 cents on vol.
Yeah.
The E-minis were up 20 when we were on break.
Yeah.
Nasdaq was up 40.
Okay.
All right. We'll see.
All right.
We'll see. Oh, no.
The prophecy hasn't been filled yet. We haven't gotten down to 65.25 on the E-mini S&Ps, and we haven't gotten under. We're at almost
24. I want 20.
We're 24.40. I mean, if you're not going to listen to the plan, then don't listen.
Well, I think you're going to have opportunity in between. I don't know. We're going to get it at some point.
I'm just kidding you.
We're going to get below 2,400 and we'll scoopy. We'll get one.
I'm completely kidding you.
All right, let's run through.
Machine.
Let's run through this market measure. Sponsored by the CBOE. They are certainly having a busy day today. Let me tell you.
NVIDIA down 5, by the way, making new lows.
Wow.
That's why you're selling off.
Yes, for sure.
I mean, I think, in my opinion.
Micro-sized earnings approach. I mean, we just got through earnings season, but we are quickly approaching the next one here in December. So we'll talk through some of that here. Let's do it.
I'm ready.
All right. So approaching earnings is typically coupled with levels of increasing volatility based on 15 years of data. We're looking at the Qs, the 5 largest holdings using the standard deviation of price from the average day to the earnings day. We find that volatility typically increases by about 4 times on an earnings day. And so, this is just a very basic discussion on expecting volatility into earnings. When you have these binary events, volatility is going to be a multiple of what you typically see in the market as a whole. When you're looking at Apple going into earnings, it is very high relative to the rest of the market volatility.
Yep.
So earnings as an engagement trade. So it provides opportunity for many occurrences. Of course, they're non-standard short-term trades. So these are kind of binary events that you're trading around just as kind of a short-term trade. They differ from the core strategy and look to profit from a contraction in volatility. If you're selling premium, you can do that with a directional component as well. If you're doing diagonal spreads, calendar spreads, stuff like that.
Mm-hmm. I like it.
Next slide here. So one approach that we look to do is define the risk. This can substantially reduce margin and potential losses. It can also allow for high number of occurrences and high probability trades. So you can, put on small amount of risk, get that engagement trade on, and have that, instant pain or instant gain. I think that's the one thing you gotta keep in mind here. Undefined risk is also on the table here. We try to keep position size 5% of our net lick or lesser with those undefined risk trades in general. So just keep that in mind as well. I mean, earnings give us that volatility that we're looking for.
Okie dokie.
Statistically, we can create earnings iron condors with similar pop and win percentage as a standard 45-day trade. So when we look at SPY, all the occurrences, the win rate of an iron condor is roughly 73%. When we're looking at like a 20 or 30 delta short option, it's kind of the same thing in earnings. Despite the big tail risk that you have to keep that in mind. The earnings event, a lot more max losses come into play than typical 40, 45-day trades. So you got to keep that in mind when you're trading earnings.
Mm-hmm.
Next slide here. So the strategies we choose will vary based on the assumption, but generally speaking, part of our normal trading approach, if you're looking at bullish trades, short puts or put spreads, bearish, short call spreads, of course, iron flies, iron condors, those are on the table if you want that neutral delta. We do a lot of diagonal spreads, calendar spreads, all those things are on the table into earnings.
Of course.
Next slide here. So this is just like general setup for, how you can place an earnings trade. And these are small sized trades. So if you're in a Johnny Trader account, this is a general idea of what you should be looking at. $5 wide iron condors, you're collecting, 25 to 50% of the width, depending on how much risk you want on. This just basically a basic example of kind of earnings trades here in a Johnny sized account.
I love it.
And this is what the risk profiles look like. So if trading a risk-defined iron condor, consider using the natural skew in the market and choose strikes dynamically. This is what we call a dynamic iron condor. So if you're selling a 20 delta put and buying a 10 delta call and put to define the risk, that is a delta neutral trade. We did one in the Qs this morning where we had a 20-point wide put spread by a 10-point wide call spread. It plays into the natural skew of whatever that underlying is. The NASDAQ and ETFs in general have that put skew. A lot of time with earnings and tech names, you'll see that call side skew. And so you can adjust it that way as well. If you want to be truly delta neutral, you could do that dynamically by doing the same delta for the short and the long options.
Beautiful.
Next slide here. Here we go. Did we get our?
Yeah, you're 24,000 on the Nasdaq futures. That's been your weakest of the group.
93.
Say again.
I'm in at 93.
Awesome. Even the S&P
23, 993.
To 65.50.
For earnings, you can see where the earnings are coming up on the trade page here. So it's that purple line that you see. The bell icon will dictate whether it's before or after the bell. So here, December 10th, after the bell. So you have the bell and then the arrow. After the bell, if it's before the bell, meaning before the open, you'll have the arrow pointing to the left side. So it'll indicate whether it's before or after the bell here. Next slide here. So the expected move is a way to dictate our strategy. So with higher, wider, bigger expected moves, higher volatility, obviously the premium is going to be juicier. It's a good reason to define risk as well if you want to do that, if you're kind of afraid of that risk. Lower expected moves, I say just kind of avoid those underlyings altogether, but you might choose a different strategy.
Beautiful.
Last slide here, a couple takeaways. So earnings allow us to increase our number of occurrences. I call them engagement trades. If you're doing them in if your normal size of a trade, a 45-day trade is, 10 contracts, I say do earnings at 2 contracts.
Right.
That's the sort of trade that these earnings events are. They are smaller engagement trades. You have to keep in mind they're going to be instant pain, instant gain a lot of the time, especially if you're using those shorter duration options here.
You are correct, son.
Good stuff.
Good stuff. Good stuff indeed. Let's take a look at the market. NVIDIA down $6.90. Just on its lows right now. NASDAQ down to 23,950, about $50 off of its lows from last night. Even the S&Ps about 20 handles off of their lows from last night. They were just down 15 a second ago. They're down 11 right now. Russell still green, up 7. Dow still green, up 127. Volatility 23.35, about 10 cents off its highs. Volatility staying bid here, as you can see, going through the weekend. No surprise there. Bonds up 16 ticks, telling a little bit of a different story here, hanging in there. And the Fed watch tool with interest rates now on a rate cut assumption, a little bit odd. Not odd that the bonds are rallying, that the market itself hasn't rallied yet. Bitcoin, 83,000 and change, still down around 3.5%. Ethereum down around 4.5%, about $80 off of its lows from last night. Oil down $1.50. Gold up 360. Some of the stocks that are moving here today on the downside, well, here, I'll go to the upside first. I apologize. Costco's still up around 8. That's helping the Dow. Home Depot also helping the Dow up 7 and change. UNH up 7. Your beloved Lilly up 6 and change. It's untradeable. Google up 6. I mean, untradeable for options. Apple up almost $4. Sun. We had a little prophecy here. You got the E-minis down to right around that 65-40-ish handle. Place your bets.
Yeah, it's interesting. I was going to point out as well before we go into break here. Are we going to take a break, or are we just going to keep going?
We can take a quick little break. We'll get Quentin in here, whether we talk to him or not.
All right, I didn't know if they were coming. All right, you got all the stocks. We're all going to be poor stocks going to the moon. McDonald's up $5 and change. You got the Costco's, Walmart's. It's trading like that. So little wild day today. Dollar Tree up $2. That's where we're all shopping when the E-minis go down 40% from here.
Let's take a quick 90-second break and come back. We got more Tasty Live. We're going to bring Quentin in from the trade desk, and we'll talk more markets immediately following these messages. Let's Tasty Live.
Cool.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son. You know what that means. Time for more Tasty Live with this man. Quentin, what are you doing here? Get back to work. Get on that trade desk.
Fellas, how's it going? We've got quite the busy day on the trade desk, so I'm gonna need to be a little brief. We'll go over the top 20 symbols, and then I gotta get out of here. Gotta get back to work.
Understood. Thank you for coming on
Gotta get
at
to
all.
my real job.
We got phone lines open, by the way. I apologize, Quinn. 855-238-2789 or 855-BE-TASTY. That number's below right now. Give us a buzz. I got 4 or 5 lines open. We got about 15, 20 minutes. We'll go to your questions. If you have any question about assignments or anything else like that, we would love to hear from you. Give us a buzz. I'm sure if you have the question, a lot of people have the questions. Phone lines open now. Go ahead, Q.
Alrighty, let's get these top 20 symbols pulled up here. Yeah, a lot of questions on the trade desk today about assignment. Let's go over top 20 symbols going through the system and their IVRs. At number 1, we've got NVIDIA, 37, Tesla, 25, IBIT, 92, AMD, 59, Oracle, 106, Meta, 27, Palantir, 33, TQQQ, 54, Google, 44, Amazon, 36, SoFi, 40, Microsoft 36, MSTR 44, Robinhood 40, Apple 22, GLD 51, Micron 87, CoreWeave 37, ETHA 88, and Uber 37.
Beautiful. Hey, Quentin, just give me a little bit of background on exercise and assignments on, is this vertical spreads in expiring options today? Like in ABC stock or on ETFs?
Yeah, so we're getting it both in ETFs and then options that are like coming really close to expiration. So as the extrinsic value dwindles on those in the money options and the markets get really wide, it can make more sense for those people to exercise the options on the long side rather than try and sell them out in the market, because they might not be able to sell it even for the intrinsic value because there's not a lot of volume. And so what we'll see a lot in customers' accounts is, like, for example, like recently it's been a lot of short put spreads as we see the downturn in the market. So they'll get assigned on short puts. And then all you need to do to get out of that position and solve the margin call if it's happening is just close out of the long leg and the shares in the same order. Keeps it defined risk. It's just the margin requirement for the shares is a lot greater than the margin requirement for the option spread.
Very good. And if somebody, before I let you go real quick, if somebody were to get assigned long stock, right, their option gets exercised, and they don't have enough money in their account to hold the position, once they just right click on their position tab and exercise that option that they're long, that they get all the relief that they need, correct?
Yes, exactly. Yeah, it brings back all the buying power from the trades. Just
so my point is, I know I don't mean to cut you off, but I just want to get to the point so I can let you go. The point
it doesn't matter. The buying power, it fixes.
You don't have to panic.
Yeah.
If you're vertical spread, if you're not vertical spread, then you have to sell out the stock immediately.
Yeah.
Yeah, but let's say like you've got a vertical spread, that long put is still protecting those shares. It's just the requirement for the shares.
That's correct.
Is a
if
lot
you have another
greater than
side, if you're a spread,
yeah.
That's correct. Very good. Very good. Q, thank you so much for your time. 855-238-2789 or 855-BE-TASTY. Phone lines are open. If you got a question in the chat room, Nick can take those. We'll let you go. Nikki, I know you just scalped out of both of your futures, it looks like, at 50 and then 39 on the second one.
Yeah, I had the working order in at 50. I only had one. I forgot the second one out, and I'm going to sell out the second one, and they moved 15 freaking handles, and I'm like, oh God. But that's okay. That was good. We bought one at 81 and the other at 93. So it's like, basically scratched it. I mean, which was good after taking 100 points each.
Yeah, no doubt. Am I frozen up there? Am I good?
No, you're good.
Okay, good. Even the S&P is up $6 after trading down to down to the bat number. Nasdaq
over. Look at volatility.
Volatility is up a nickel now. You're going to need to see volatility go down around 50 cents to say it's over, but I certainly like You just got filled on your SPX spread at 480.
Yeah, and that's all volatility because we haven't moved, but net, we haven't gone anywhere.
That's right.
That's all the move in volatility.
All the moves in volatility. We have net going anyway, and time going by. You know, we put that trade on probably about an hour ago.
Yeah.
I mean, usually if you get no movement, you know, it would work even sooner than an hour, more like half an hour to 35, 40 minutes. So they certainly made you wait. Even the S&P is up 10 and change now.
Yeah.
Volatility unchanged.
What a move.
855-238-2789 or 855-BE-TASTY. Give us a buzz. We would love to hear from you. If you got anything on the in the chat room.
We got the people just loving this market and just trading through this. I mean, we got all sorts of stuff going on. People talking about Fed speak, Michael Burry.
Even my 15-year-old son was talking about Michael Burry.
I know that probably tells you that we're just about at the bottom, right?
That's right. That's right.
Any other stocks?
The 15-year-olds talk about it. Yes.
Yeah, that's probably. I'm waiting for Gina to call me.
Oh, yeah, that's your sister.
That's my sister to call me. That's the next indicator.
Volatility back up a dime. Even the S&P's up 8. Nasdaq's the only one lower, down by 75. Nvidia is down $5 and change. Nvidia a little weak here. Need to have it catch a bid so that the rest of the market can catch a little bit of a bid here.
What do you think about getting into a new Tesla put ratio spread here? Kind of where I have that butterfly on the downside. I bought in the risk on it. The last one we did, which was around we did the 345, 320, so it's 20 points wide, and I did that at $1.98. What do you think about doing the 335, 315, and doing it at that same like $2?
I have no problem with that.
And this kind of gives us a little bit of a lotto ticket spot if we somehow pin between like 350 and 300.
Yeah, I mean, listen.
And I'm doing this in December, so it's a little shorter duration.
Right. At least you're thinking about it, right? I mean, like you're thinking about doing something with the trade. So I mean, like, you're being a thinking man here. Even the S&P is up 15. Volatility now down by 5 cents. Nasdaq down 35 after trading almost down to under 2,400 there for a second. Russell up 24. Even the S&P's got back down around 65.30 or so on the low. I think we were right there. I don't know. I can't. I don't have my intraday one up, but I'll have to look at that. It was a nice call anyway.
Yeah.
I don't think it's over though, son.
I don't think so either. Are you looking at does silver interest you at all? I mean, you're at 40. You're just below $50. It's had a pretty decent pullback. I mean, we were much lower this morning, but
with this market, with so much going on and so many great products and stocks, I'm not looking at silver. Let's go to Arthur in Georgetown. Arthur, what's up, my man? Thank you for calling in.
What's up, fellas? How are you today?
Doing good, man. How about you?
Fantastic. Great to see everything. You guys are doing such a good job. That, I haven't called in since all the changes, but wow. So good. I will say that, Nick, that last time when you and Mikey B were doing the show right before the Amazon earnings, Butler just dropped that bomb on Amazon. That was so good. Unbelievable. 0 DTEs and SPY today, looking good.
Yep.
It's going great. So I'm calling in about this one particular thing where I feel like I've called in before about this. When you go in to the spreads on like Netflix or Lilly or any of these things, it looks terrible in there. But when you put in a GTC to get filled and just wait for a second, it hits.
Yeah.
And then I'll go back in. Liz and Jen, you've been talking about this a little bit about you just put it back in for 20%, good till canceled, and it hits. But the markets look horrible.
Yeah.
But they do get filled if you get in there. What do you guys think about that?
I think a lot of it, I mean, we kind of mentioned it this morning, is just with the way volatility is right now. You guys got to, I think everybody has to keep in mind when you have volatility really low, prices are tight. When volatility expands, prices look wide. And so, when you put these orders in, it's not that the price is right or wrong. It's just that the price is moving a lot. And you might get, like we did that, we talked about that iron condor that we had in the queues where the NASDAQ rallied 15 handles, but I got filled on my long delta iron condor. And that was just a change in volatility, just a short-term change. And when you have markets moving like this, market makers are just, they're just taking all of that together in a split second and moving, the market based on that. So this is a perfect example. What you experience is a perfect example of what happens when volatility comes into play. And it's a benefit to you because you can put that order in and let it sit.
Huge
and let
benefit.
Yeah. And you might, that trade might be advantageous, like an ARB for you the moment you get filled, just because they need to spread off risk or somebody else needs to spread off risk or somebody comes in with the same trade that's a off the mid price. Like this is good. This is why we look for high volatility.
I'll give you a good example. So yesterday, my friend and I, we stay in touch, and he's like, did you see what's going on in SPY? And I was busy. I was like, no. So I come in, I'm like, holy Toledo, But I went straight to VXX because back in the day, Tom, gave me a lesson in UVXY, which just, of course, reverse split. But I was right on top of VXX, right? So then when it hit, I started going in sell call spreads, right? But the thing is, this is what I'm saying, like it looked terrible. Like there's no way to get in. But when I set my price, I put in the order, and boom, I got filled. I'm like, holy frick, and I'm way out. I'm like 29 days out, on a VXX short call spread, right? So then I just set good till canceled, just a little bit, not too greedy, just a little bit. It freaking hit like 10 minutes later. I'm like, holy crap. So I rolled it again. I did it again and again and again. And it's just weird because that's like volatility on volatility.
Yep.
You see what I'm saying? Like and when you have the spread, those things move like extra weird, and it's like a whole nother math thing. Yeah. But anyway.
What's your price in? Relax.
I gotta let you go. We got a couple more callers coming on here.
Okay, guys. Good to talk to you. Excellent work. Love you. Bye.
Thank you.
We're gonna go to Kurt in St. Petersburg, Florida. Kurt, what's up?
Hey, what's up, guys?
Hey, Kurt.
My friend, what's going on with you?
Good. I was there in Chicago over the summer when you guys hosted the open house and live event. So I just want to say that was a fantastic event. It was a pleasure meeting you guys.
Thanks for coming by.
Thank you very much.
Yeah. My question is, I just want a vibe check from either you or Nick. Like, where are you guys on this Bitcoin in quote end quote bear market? What's your guys' thoughts? Are we going to be touching 74? Are we getting a high-low bounce from here?
I think Bitcoin's probably. I mean, listen, it got down to 81. I think it's probably going to trade in the 70 handle. But I do think it's closer to a buy. I actually like my conversation that I had with my friends last night, where I think if you're really looking to buy Bitcoin, you could do something in MSTR, like selling puts or put spreads in MSTR, just on the assumption that if MSTR ever trades at a multiple of Bitcoin, right now it's trading at basically book value of Bitcoin. If it trades at a multiple of Bitcoin, you'll get more bang for your buck. And plus you got high implied volatility in there too. So I think that's probably a better play. I probably would not be touching Bitcoin itself and going into MSTR. That's my assumption, but It could go anywhere. I don't think this.
I am on the other side of that.
He's on the other side of that. And the market movement, in my opinion, lower is not because of Bitcoin.
Oh, I don't think it's because. I think that's you're seeing a reflection of markets in general in Bitcoin. I think they're moving in tandem.
Got it.
Okay.
I think you sell puts. I think you go in IBIT, you sell puts. You sell puts to buy call spreads or butterflies. Like I think, unfortunately,
you can do the stupid in IBIT.
Yeah.
Sell put, buy call, right? I mean, like, sell an out of the money put, buy a call spread. Definitely great 98% implied volatility in there. I'll go with that one too, son. MicroStrategy is more of a longer term hold. IBIT more of a shorter term hold.
Here's
how far are you guys going? How far are you guys going up for long dated?
Say it again.
I think you stick to December, January. I mean, I'm not going, like, if you want to do like leap calls, I don't hate that idea. My problem is I think that Bitcoin is approaching like the meta territory where I think it's in like the doghouse. So if there is a bounce in markets, I don't know if short term you see the velocity in Bitcoin. Maybe you do. I think it's kind of in timeout zone. So I want to be short the puts, financing a call spread or a butterfly on the upside, like that sort of thing where you kind of play for neutral bullish as opposed to like tail bullish.
Right.
That's my take.
Okay.
But
all right.
I love it. Well, thanks for your guys' time. Appreciate it.
You got it, man. I know we're running late, but I want to get to Mitch in Texas. Mitch, what's your question?
Hey guys, how are you doing?
Good, man. What's going on?
Two questions. With the short week next week, and I guess is Friday like a half day next week? It's roll week next week.
3 days ago, I would have said yes. Now I say no.
In terms of like market action,
yeah,
it's probably going to be a full day of market action. Yeah.
Do you? But next week is a roll week, so do you just stick with it and wait until next week?
Do it now,
or wait until after the long holiday? Or
are you talking about the futures?
No, these are like monthly options. Tomorrow, next week would be 21 days out, right?
Yeah, no, I mentioned that earlier today. I would have no problem with you rolling now, like today. Now, if you want to reduce delta, you would definitely feel like if you're a little bit too long or you're not happy with your position you have, you certainly could change the strikes by rolling now from Dece to Jan. I would have no problem with that. Jan volatility is elevated just as much as Dece volatility is elevated. Dece is going to be a little bit more, obviously, but you'll be able to reduce delta by going from Dece into Jan. So I'd have no problem doing that. You can also reduce unit size by doing that too. So I would have no problem you doing it now, Monday, Tuesday, anytime. Wednesday, markets will be liquid.
I know we're running out of time, but quick question on your Oracle options trade today. I know you don't like holding options through earnings, and you've taken a lot of heat. Are you planning to roll or just cut and bait?
I'm planning to do something, and I should have done it a long time ago.
I think you probably will.
All right.
Look to roll today.
It absolutely sucks.
Yeah.
Okay. All right. Thank you, guys.
You got it, man. Nikki, we're going to take a quick 90-second break and come back. We got more Tasty Live. Immediately found these messages. I was waiting for an uptick in Oracle. Never got it. Peace.
Yep. Stay small out there.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Hello, everybody, and welcome to TP and the LD show. We only bring in the big guns when the shit hits the fan. Can I say that? Can I say? I just did.
I think
we'll beep that out after the fact, but I feel like that's an accurate portrayal of the last couple of days.
Yeah, I don't think there are many kids watching the show right now. They're still in school, I think. You know, it's what, 10 o'clock on a Friday? Yeah, they don't. No, seriously, my kids are out of like, you know, the high school stuff. Are they going to school next week, Liz?
No, my daughter does not have school next week.
She's off. See,
and
my daughter.
The prodigal son returns this weekend for his first time.
I was gonna ask you. Yeah, the prodigal. He's gonna get sorted out in the Deer King home. So anyway, all right, Liz. I know you define big by big, okay, and I don't often get a chance to flex on you because you're Liz, okay? But today, look what I have.
What did you do?
A November tomato. Look at that.
That's a flex. That's a flex. How in God's name?
Major. A November tomato out of my own little garden.
I mean, okay. TP, this is why I love our segments, because things can go in any direction. Now, what are the I'm sure you know this because you're a quant guy. What are the probabilities of getting a November tomato?
Oh, well, yeah. If you actually do things correctly down here, fairly high. Here's what I did. So for years I always wanted a tomato. You know, I'm not a gardener, unfortunately.
I like that you're calling it a tomato. Is it singular? Is there only one?
No, actually, that's the biggest one. That's the biggest one. We get a bunch of little cherry tomatoes, stuff like that. So here's what happens. So down here in Central Texas, outside Austin, it's tomato weather from maybe March to May, and then it gets brutally hot and everything dies. Okay, so if you can keep your tomatoes alive through that brutally hot period, now in October, November, the temperatures start cooling off a little bit and it becomes tomato weather again. So what I did was I put a little drip irrigation system on my plants back in July, I think it was, and it kept them alive. They didn't look so good in August, but they were alive and now they're flowering and fruiting again. So that's what it is. So if you know what you're doing, I was stubborn, and like I said, I don't enjoy gardening. So yeah, you go out there.
Now it's a personal mission to make sure that they make it through. I like it.
Well, you know what?
Translate this into trading. A lot of things will die if you don't pay attention to it. How about that?
100%. 100%. You got to keep engaged.
Yeah.
And yeah, you have a losing day in trading. Okay. I had a losing day yesterday. Okay. But I'm at it again today. You have to keep watering the account. Chip away, chip away, chip away. Hey, Liz. Oh, go ahead. What were you going to say?
I just wanted to kind of bring things into perspective too, because we've got a lot of viewers on here and our viewers are pretty smart. But I know that we got it on days and honestly, like weeks like this, it's been a couple days, right? Where the volatility stays high. We're getting crazy. Yesterday was bonkers action. I think it's hard for newer viewers to look at this, or newer traders. But you and I mean, what did we talk about today? Tomatoes, because I've been here before. I've seen this book before, and my account has taken equally as bad of a hit at other points, and I've lived to trade again.
Yes. And the reason I lost money yesterday was because of my crypto. That's it. Everything else made money. When I stuck with, selling premium here, premium there, blah, 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 all those trades made money. But what cost me, and it wasn't a big losing day, but I was down money at the end of the day. And that was because Bitcoin is what, 83,000 or whatever it was?
Yeah, it is.
And that's what it is. And so I was just long Bitcoin, long XRP, long Ethereum, that sort of stuff. So that's what cost me.
And let's jump into the platform so the class can see what we're talking about. I like to call them a class. We're talking about Bitcoin 83,000. Here we go. This was yesterday's move, and the day before that. It's been I think this is 11 days in a row of down days, is what I had just heard.
Yep.
11 days and down days. Yeah.
It's risk off.
That's a big move. And TP, I'm glad you said that Bitcoin's what hurt you. Bitcoin took an appendage off me yesterday, but I also got a little ahead of my skis. Like woke up in the morning. I was like, oh, NVIDIA's up. This is great. I had bullish trades on and a lot of those things, thinking NVIDIA would save the market. But what I didn't do yesterday, and shame on me, was take them off. I was like, I'll do it after the show. After our show is when we plummeted to the depths of hell. So everything was fine. Oh, we turned, you know what I mean? And then it just went. So my biggest takeaway from this was, just when everything seems like it's right, just manage it when you can. Take your profits. It's not your profit until you take it. That's
why, and I think I texted you yesterday.
Yeah.
When I took off, I had a boatload of SPX iron condors on. I took them off at 50% profit. Got filled, took my fill, moved on because I had other things to do. And then I looked at that same trade an hour later. I took it off at, $1.20, and I started trading at $6. And I said, what the heck? And the S&Ps were down that much. Hey, Liz, are there any other points you want to make about that?
No, I did want to talk about SPX 0 DTEs because Mikey, the Polish warrior, I love what he's been doing. And I actually channeled him this morning, and it's happened a couple times. So he's been doing just spreads, either just call spreads or put spreads. And then instead of taking the profit, so instead of taking 20%, so say you sell it for, $10 wide for $4. Yep. You butterfly it off, put in immediate order to butterfly it, meaning buy the other spread for $3. You're locking in $100, and in the whippiness, you've got a shot of making more.
Yeah.
I like it.
I love that trade.
Yeah.
But there's one little thing that I'm seeing in the market right now that I would like to point out.
Okay.
And this might be semi-instructive. So if we go into those SPX zero DTEs.
Okay. Not the AM. You want the regular, yeah.
Right. That's a little CBOE bureaucracy where the weeklies and the AMs.
Yeah.
So if I go into, let's say I wanted Liz to sell a high probability iron condor. So go down on the put side and I look for a $3 option to sell.
Okay, so you're not looking for deltas, right?
No, I just give me $3.
Okay.
And then I go down 25 points and I want to show everybody something. All right. So you see that that 64.05 put, it's trading for about $1.90 right now. A few days ago, that same 25-point OTM put would have been about $1.65 or $1.70. Okay. Same on the call side. Let's go up to the call side. Let's find a $3 call on the call side.
Do you want me to help you? Would your point be helpful at all if I looked at the delta and went to a 3 days out and see where it's trading?
Well, not for this exercise.
Okay.
Right
Okay.
now.
So then we're going to go up for a $3 call.
Because what I was, so the 6630s and then go to the 55s. Okay. Same thing with those. The 25-point out of the money options, both on the far put side and the far call side, are trading about 25 or 30 cents higher than they were a few days ago. Why does this matter? When I was loading up iron condors at around 9 o'clock this morning, normally I get about 370, 380 for those irons, and that's kind of what I'm looking at. But I was not today. Okay, so I started looking at the components, and then you're saying, well, wait, TP, the VIX is 26.5. The VIX is so high. What do you mean you're not getting the credits for the irons? And the reason is that those far out of the money options have risen more than the closer to the money options on a percentage basis.
Meaning, should I change this to implied volatility?
Sure.
Okay, hold on. Just because where's implied vol?
There, right there.
Okay.
And so the VIX is high because those way out of the money options are getting bid up because like you said a few minutes ago, Liz, there's so much whippiness in the market. So the market makers are jacking up the prices of those far out of the money options just in case we get a Black Friday, right?
Yeah.
And what that's doing, it's making the long wings relatively expensive to the short options. That's why my iron condors weren't getting the credits I was looking for.
And look at how far you are. Just to kind of accentuate your point, I get they are different prices, but they're all wrapped around the same. I mean, you can go another 30 points down, and you're still getting a dollar.
Yes, you're still paying $1 for that.
Correct.
That stuff was made that like the 63.75 might have been, I don't know, about 65, 70 cents a few days ago. They're just jacking up the wings, and those wings have a big impact on the VIX. So when you're saying, well, TP, how come the VIX is 26F? The credit should be higher. Yes and no. You got to dig into the details sometimes. And the bottom line is, Liz, if the credit isn't there, I walk away.
So
I have to be rewarded for taking risk.
TP, I love having you on the show, and I love your extensive knowledge, especially on the volatility products. And I actually think that was a very good point, and I'd like you to say it again. So the actual VIX numbers are affected by these far out of the monies, right?
Yes. So the formula is as long as it has a non-zero bid. Okay. So a nickel bid and it'll get included in the SPX calculation.
Meaning you're going to come out. I mean, I'm kind of showing all these are being included.
Oh, right. They're paying 60.85.
Yeah.
Okay. Is where it stops. And once it gets to like 2 zeros in a row, then it quits. So it basically stops around 60, 85, something like that.
That's really far down.
Yeah, those options probably were the equivalent. Like last week, they were probably zero bid.
So I think this would be a good exercise to go through when the VIX isn't. I kind of want to write down these numbers when the VIX isn't at 26, just to kind of show where I feel like if it wasn't, if you're in your normal range, it might even stop around here.
Right.
This is 2 standard deviations. Right here, the 64.05 is 2 standard deviations away.
And it's $1.45.
And it's $1. That's insane.
So,
With hours left in time. Hours.
Yeah, it's 10:15.
Yes.
So it's, am I going to sell those? No, not really. Again, I go back to I have to be rewarded for taking risk, and I just don't see it right now. Yeah. And because just like you're talking to the Polish Warrior, in products like the SPX, defined risk trades get a short call vertical, short put verticals have a higher return on capital. Sure, can I sell a naked put in there? Yeah, it sucks up a lot of capital. And so, yeah, I make $150 for putting up, $500,000 of capital. No, it's not worth it.
It's not worth it. So is there some type of, and I'm sure there's a mathematical reason behind this or a common sense slide here. So your risk reward scenario, kind of like what you were saying. So here you're risking, $2,500. And I'm actually going to delete the call sites. We're only talking about one because we can do anything on both. So say here.
By the way, look how easy it is to do that.
I know.
Bing, bing, delete.
I know, it is super easy. It's a very easy platform. But so the common sense slide here is you're risking $2,400 to make $1.05. That's, honestly, decent return because this would be in a couple hours, right? But when the volatility is high or when these options are priced this way, is it saying that's, anytime you do this, it's real risk. But widening it out to get an extra 40 cents and risking $3,800, I feel like in a market like this, if this is tested, that one's going to be tested.
Yes. Yeah, if this is, so that's what, the 64.30, if we're down 100 points today, it's going to be down 150.
Yeah. And I kind of feel like the volatility is telling us that. Okay, so while I've got you, I do have to ask you these questions, and you don't have to answer. I got to get rid of
Well, I will try to answer, Liz.
Because you are the reason that we have the IVR. So you're the reason we have this IV rank to show whether things are high versus themselves. And I don't expect you to have the exact answer to this, but it's very rare, in my opinion, that SPX has an IV rank near 50. It's 43.4. I get it, but when it does get up there, it comes back pretty quickly, typically, right?
Yeah, it's normally, what is it, like 9, 10? Yeah. It looks like there's no premium to sell in there. Now, this is why that number is a little bit misleading. I don't know about you, Liz, but I pay my bills with dollars, not percents. Correct. So even if the IV rank is 9 and it's really low, and I said, well, geez, there's no premium in the SPX, I'm still selling those iron condors, still getting paid. Okay, I'm still making dollars. And here,
they're just going to be narrower. You're not going to sell the ones that are 2 standard deviations away because you're not going to get anything.
Because it's not there. But as long as I'm getting what I perceive as a reasonable credit for the risk I'm taking, I look at the prices because the volatility is important, probabilities and all that jazz, but the price itself will tell you what the market thinks. Okay. The option is worth $3 for a reason. That other option is worth $1.70, $1.50 for a reason. Okay. So what I would say is, the IV rank will probably sink back down pretty quickly because we're going to have a spike in the VIX. And unless the world changes, unless there's some cataclysm, and we might see something like that, but unless there's some huge cataclysm, the VIX is going to go from 26.5 down to 22, down to 19, down to 18 again pretty quickly. It typically reverts pretty fast, and that IV rank is going to come back down pretty fast too. Does that mean that now is the time to sell premium in there? If you can get it, sure. But like I showed earlier, when you buy those more expensive wings, it eats up the credits.
It does eat up the credits.
Just saying, doesn't make it easier. That's trading.
So on days like this, and I know we've done a lot of iron condors and the zero DTEs, but when it is a really whippy market like this, I'll have a tendency to do one side, not both. And I mean, you should do both and maybe manage them separately, but I'll pop in, like I said, I put in that put spread and then I already butterflied it off, which is nice because if you're getting that, I like the butterfly effect of having these on. But Mike, we were talking about this the other day and I'm hoping you can clarify something, and I'm kind of jumping around here. So are you familiar with VIX 1 day?
Mm-hmm.
So this is something I'm not 100% familiar with. I mean, it's good to look at, right? But so the VIX 1 day is 22.98, and it's down 20%. Yesterday, it got up real high. So the VIX 1 day high yesterday was 32.84. That's high for a 1 day VIX.
Because when we had that, and think about what happened yesterday, you said it yourself earlier, we had a massive reversal. Around, when did it start? It was about 10:30 or quarter of 11?
I mean, we were up 80 when we started the show, and we were down 30. And I didn't think we were going to go down more than that, but we were down 30 at the end of our show. So the reversal started, and then the hammer got hit during the next hour.
So that's what jacked up those. And this is the VIX 1 day wasn't that high in the morning.
No.
So it spiked up. And what happens, the VIX 1 day is based on the 1 day SPX options. When the market started to crash, and I use the term crash loosely, but when the market started to crash, the market makers and the traders and all the market participants started jacking up those out of the money option prices. That's what it is a very mechanical process. The VIX is calculated directly off of SPX option prices. When those SPX option prices go up, the VIX goes up. And if you're looking at the 1 days, it was the 1 day SPX options. And when the market gets surprised like it did, when people get scared, they start jacking up those out of the money options.
So when I was on the trading floor, it used to be a manual process, meaning when somebody was coming in or there was you're going into a fast market. I literally had to go in and press button and be like, increase volatility, increase volatility, increase volatility. So it was a very manual process at the time. It is more automated than that now, right? As you see the orders coming in, it's probably more there. It's just kind of happening as the orders are coming in. Or is it still a manual process? I wonder if it's still more of a manual process.
I don't know. I had sheets back in the day. Had to do it like with a pencil.
With a pencil, and keep in mind what TP is saying with sheets, meaning he would literally get papers that would come in, they would sit in your pocket, and you would only get them updated, every couple hours?
Maybe. Depends on whether the printer worked, So
Okay, I do have a question for you about the VIX 1 day, because I'm trying to parallel this with this April. Now, April lows. This was the V bottom in April when we skyrocketed and went up 40% from the low. And Chris Becchio put this in the chat that the last time. Now, there has been other instances, but the last time that we had a 1.5 point up move to a 1.5 point percentage down move was the absolute bottom
of the
market.
Of the market or
so
the
here,
VIX ID?
No, not VIX ID. So I'm going backwards right here. So you'll see I had the VIX 1D, and it's kind of the flip of that would be the SPY. So he was saying the last time we had a reversal from down 1% to up 1%, or from up 1% to down 1% was the bottom of this, and we went up 40% from there.
Yeah. I mean, if that to me is enough for a trade. Simple as that. I go back to this, Liz, and you and Jenny are saying this all the time. I don't care where you get your directional opinion from. Bullish, bearish, neutral. Put on a high probability, positive theta trade, hopefully defined risk to express it. So if you think it's a bottom, personally, I don't. I put out a cherry bomb last night selling a Q call spread. Because I think, we could. I think we're kind of in a risk-off environment. I think people are kind of nervous about stuff. So I think we might see a little bit to the downside. When Nvidia couldn't hold its rally, okay,
Let me ask you a question because I agree with you.
But that's my 2 cents. That's it. That's all. That's all it is.
I get it. But so say I'm going to triple Qs and you're going to sell a call spread, right? With the volatility as high as it is, if we continue, so Qs has a 48 rank, which makes sense to sell premium. But even if we continue the down move, it seems kind of counterintuitive for me with call spreads or calls because they hold their value up, right? So if we continue to go down, then implied volatility will continue to get higher. So you almost have to hold them for a little bit longer to get your directional assumption.
That's correct. As we pass, so I sold one with I think it was 28 days.
Okay.
I got filled at 28 days. So the point is, you are absolutely right that if we continue to go down, the volatility will go up. Now, to get into the weeds a little bit, as we pass from 28 days to 27 to 25 to 20 days, et cetera, what's happening with our Vega? Our Vega is dropping. That call spread sensitivity, which is already kind of low to a change in volatility because it's 2 points wide, the one I did.
Oh, you did?
Yeah, I did. I just did 2 points.
Then that's pretty low. That is not.
The Vega's low. So the Vega will get lower. So yes, Liz, you are absolutely right that as volatility goes up, if the market goes down, that's not going to be helpful to this short call spread. Absolutely right. But I'm still collecting some time decay. And ultimately, as we get closer to expiration, where the stock price is relative to the strikes determines P&L a lot more than volatility does. So, for example, if the Qs are at 500 in 15 days, when this has like 2 weeks to go, and the volatility is up to 70%, that call spread is still going to be cheaper. It's because it's where the Qs are close to expiration drives the P&L of that trade.
Yes. And it does. And that will be as we get nearer to expiration. It's just not an instant relief in your account if you get the move you're looking for with a huge pop in volatility. That's the one thing I want people to realize is like if you're putting this on and you think this is a good assumption, but you're saying I think we're going to remain lower than this for the next 28 days. You're just saying we're not going to be above 615 for the next 28 days.
100%. You're not going to make money on this trade today.
Yes.
Okay. Even if we drop 10 handles in the Qs, it's not going to drop that much in value.
Okay, so TP, I could talk to you for hours and hours and hours, and actually sometimes we do on the phone, but that's okay. But I digress. We have people watching us now, so we can take live tweets. I also have Kai's market measure recap from last week, which was nice. Pretty good. I don't think we need to go through all of them. I'm going to. Because I have you, this is going to be a choose your own adventure, TP. I'm going to give you the titles of all 3 market measures, and you get to choose the one that we do. Okay? So this will be fun. Wait, hold on. It's this way. Okay, so avert your eyes a little bit. Here's the title. Okay. Price is noise. IV is signal. Is number 1. That's number 1. Not all deltas are created equal is number 2. Okay. And where direction meets time is number 3.
Oh, jeez. This is like picking a favorite child.
I know. I figured as much because I don't think we can talk about all 3 of these in this time.
The research team does a bang up job with these things. I would go with 1 and 2.
You're going 2? You have to pick 1. I said you have to pick 1.
Oh, only 1?
Yes. If we can get
all right, let's do 2 then.
Not all deltas are created equal?
Yeah.
Okay. All right.
I want to hear what they have to say because I think I know what this is about, but I'd like to see what they come up with.
So you know what is fun about this though too, and what I love that Kai puts this together. So I got to give Kai a gold star and a big hug the next time I see him. Is that he doesn't? If somebody really wants to get the meat and potatoes of this, you can go back and watch this market measures, right? Yes. Because a lot of our viewers are a little bit higher level and they don't need how the sausage is made. They just want the gist of what's happening. And that's what we asked Kai for, and he came back in flying colors. So what's great about this with you on, because you have a vast knowledge of all this stuff, is the takeaways might even be slightly different than what they got, what the takeaways that are here.
All right, so let's take a look at it.
Okay, so delta measures the sensitivity of an option's price to changes in underlying asset. We all agree with that, right?
Mm-hmm.
Now, was it easier for me to read or you to read?
Well, it's you know you can read them. I mean,
And you're going with it, okay?
Yeah,
And then
people kind of know this stuff.
Often we think of delta as the expected change in the options price for a $1 move in the underlying. Pretty standard stuff. Example, a 20 delta SPY put will lose 20 cents if SPY climbs $1. Okay. Fair option values, however, are more complex than simple linear relationships. This is just an estimate. Today, we'll examine the difference between delta predicted and actual option price changes, focusing on how this relates to the size of the underlying move, the option's moneyness out of the money, and time till expiration. Are you wowed yet?
Nice.
Okay. Now, this is where I was like, I'm going to need TP for whatever the funnel is going on right here. Okay, so delta error surface for a $2 price increase. The delta is, by and large, a good predictor for how option prices will respond to changes in the spot price. The exception being at the money options right at expiration, meaning those 0 DTEs. And I mean, I think this is a given, and large underlying moves, because that'll off your delta. Like yesterday, if you had a delta in the morning, it wasn't your delta. Like those were all out of whack yesterday.
Yep.
And then this picture is based on the $100 spot price, 45 DTE. What is this?
So what they did for this image, that 3D graph are theoretical values. In other words, it's actually the difference between deltas, okay? And it's all based on an assumed stock price of $100, 45 starting with a 45 DTE option. The volatility is 15%. They kept the interest rate at 3%. And so what
was this symbol, TP?
Is volatility.
Oh, that's the volatility symbol. Okay.
Yeah, and they put sigma. Sigma is a more academic way of doing it. We typically call it, IV or something like that, traders. So what you're seeing, and just to clarify, where your cursor is, Liz, that kind of flat area, when you have options with a lot of days to expiration.
And this is a lot. They're going back to 250.
Yeah. So the calculated delta, okay, so let's say if an option has a 50 delta, if the stock goes up $2, I would expect to see that option go up $1.
Yeah.
Right? But I don't. Okay, it goes up something other than $1. And that's the difference. So when they say the delta, predicted delta versus what the option actually changed, the difference is very small when you're 250 days out. Okay. The differences get big on 0 DTE.
So this is actually a very good visual. So this is 250 days out. Those are pretty. And here's your strike price. So this is the middle. So as you get closer to expiration, and as you get closer to expiration and staying at the monies is when it loses all of its predictability.
Yes. So in other words, the delta may show 50. But when the stock price goes up $2 at expiration, my option might go up by not $1, might go up by $1.50. Okay. So let's go to the takeaways, because if I need to, I can come back to this.
Okay. Generally, delta times the change in spot price is a reliable predictor for the change in option price, particularly for the out of the money or deep in the money positions. And that was a good visual representation. Near expiration, however, delta predictions tend to break down, especially for options close to at the money. Large underlying moves are significant drivers of errors between delta predictions and reality, with errors increasing rapidly with larger than average moves. While risk is inherent in options trading, staying active and attentive allows you to respond and adjust positions before your expectations are significantly disrupted.
So what's going on here? It's all because, it's all because of gamma. All right. So delta.
While you're talking, do you care if I go to SPX?
Yeah, let's look at this stuff, because it's going to show people what we're doing. So as we look at these 0 DTEs, and you load up delta and gamma on those columns.
Gamma. Okay, there we go.
So
here's delta, here's gamma. Now the gamma is pretty low in the 0 DTEs.
Because it's and also because it's a $6,500. Let's look at GM.
Okay.
$70. Oh, let's go 0 DTEs.
Yeah, you got some numbers at least for the gamma.
Yeah. So what's happening is the delta isn't fixed. When the stock price starts changing, you start with a 50 delta, but because of gamma, the gamma manufactures deltas. That's the way to think about it. The delta changes by the gamma number. So if I buy that 70 call, excuse me, with a 46 delta, and it has, holy smokes, 54 gamma. If I buy that 70 call and the stock goes up by $1, okay, I think that option is going to go up by 46 cents. It's really going to go up more by
and you're running into a wall. It's going to become stock. It should go up by that much.
Yes, because the gamma is manufacturing deltas. That delta is going to go from 50 to 55 to 60 to 70. Liz, look at the 69 calls. What's the delta of the 69 calls?
Wow.
On the call side, they're 92.
92, yeah.
If GM goes up by $1, that
it's going to be 100.
It's going to be 100. It's going to be 92. Now, Liz, go out to a leap.
That was a good exercise, TP. And what I like about having you on is when you look at those market measures, in theory, it looks great when you're writing all this stuff down, but you actually are putting it in practice. I'm going to go to, how about just December 2026?
Yeah, pick any one, because I'm confident about what we're going to see. Because the problem is, Liz, you and I have seen this 1,000 times. Okay. But I think it's important that we show viewers a little bit of the mechanics of how these things work. So look at the gamma of these options. They're 2. They're 1. They're nothing. And they're all the same.
So it's less sensitive farther out in time.
Or more to the point, Liz, your delta is more stable. It's more predictive. So if the look at that. Here's an example, Liz. Look at this delta of the 70 call here. It's 58.
Yes.
No, on the call side.
Oh, sorry.
On the call side. So it's 58, pretty close to what we're looking at into the 0 DTEs. But look at the 67 halves. 2.5 points in the money. They're only 61.
Yeah.
Not 92.
Yes, these numbers become a little bit less. And this is good. But so Mike, Jenny and I talked about this the other day on air. You and I used to look at gamma a lot more. That's something that I don't typically do now as a self-directed retail trader. I don't look at the gamma of my position. I think it's good to know. I think knowledge is power, but that's the one Greek that I don't think a lot of people need to really dig their teeth into.
I agree. The reason, and I think this is the main reason, is that our trades have defined risk. They have relatively low delta to begin with. When I was trading on the floor, and I would have naked short at the money, or long in this case, sometimes, options.
But massive, like lots of positions.
Like 70 of them.
Yes.
And I was a small trader. Okay. If I had 70 of these things, the gamma was so high going into, I might have, 10 delta, and then bonds would move up 4 or 5 ticks, and suddenly my 10 delta went up to 35 delta. I just manufactured 25 futures of risk.
Yeah.
So, and I would hedge that. So I'd be scalping the futures and doing all sorts of crap like that. Partly because my risk wasn't defined like I would if I were trading GM, okay? Because I was only trading one thing. So because I have, let's say, iron condors on if I were trading ZB right now, I'm short naked options in there, but let's pretend I'm not.
But you're not short 70.
I would do the vertical.
you can be short it now. So I think you kind of made my point here too. I mean, SPOOs are up 45. We're going to stay on for the rest of the, not the rest of the show, the rest of the trading day. If you and I are the catalyst of the reversal. But so you kind of made my point here. I mean, when you were saying you'd be huge, your gamma is going to change. You're short. You have naked options in ZB because you're not afraid of it. But I'm going to guess. This is an educated guess. You don't have a 70 lot.
No, no, I have one.
That's what
Okay.
I'm saying. I'm going to guess. You're trade small, trade often. You kind of flip the cards over to the other side.
I have one because it's one, I'm looking at my trading screen and over on the side here, and I have like 80 symbols on. Bonds, just one tiny part of it. I've got other stuff I have to worry about. So but when you have concentrated positions around the at the monies, your gamma risk goes through the roof, and your deltas change with every tick of the stock price. So you're really that's why they say, well, I'm trading gamma.
Yeah.
Because the gamma is what's driving the deltas, and that's why I say, yes, you can come up with a theoretical explanation of what gamma is, the mathematical explanation. The way I think about it is that it indicates the stability of my delta. How stable is my delta? How much will I have to hedge my delta risk if the futures start changing, or if the stock price starts changing? So I'm less concerned with the actual number of gamma than the magnitude of it.
Interesting. I like it. And TP, you are an absolute wealth of knowledge. And I love, once again,
Thank you.
I would just like people to realize, and I don't know that our viewers do. I do talk to TP on the regular, but this show, we didn't talk about anything before. This has organically.
That's why I love doing this, and I have a lot of fun doing the shows with you, Liz. I have a lot of fun doing the shows with Jenny, because we've all been doing this for a while, decades and decades. We've seen this stuff come and go. You said at the start of the show, you've seen big sell-offs and you've seen the market come back. This is another day ending in Y for Liz Deerking.
Yeah. I mean, I would say to my kids, act like you've been here before, because you have, and this too shall pass, right? I wanted to, while we're looking at this, so SPOOs are up 0.75%, but $46. I wanted to see if Bitcoin was going with it, because Bitcoin is more volatile, but no.
Well, Bitcoin was down, I think, about 3,000.
Yeah, its low was 81.
Yeah, it bounced up a little bit. I sold some put spreads in coin. Those weren't looking so good. Now they're coming back a little bit. And then I sold call spreads against it. So I made money on the call spreads, losing a little money on my coin put spread. But a lot of stuff is higher, like Costco's back up, John Deere's up, I'm sure, to put spread and judge. Google's taking off. Google's up another 860. Apple was up the last time I checked. So it's NVIDIA still down a little bit. I was surprised at NVIDIA's sell-off.
I was shocked. I was shocked because it seemed like it saved the market until it didn't.
And you and I, we're old, Liz. I get it. Our kids are young. AI isn't going anywhere, and somebody's going to make money off of it. I don't know who, but somebody's going to make money off of it. And it's probably going to be a company like NVIDIA or AMD or TSM or, Palantir, whatever. I don't know. But I would be long-term bullish on this stuff. So if I don't have a position on an NVIDIA right now, but if I were, I think I would bias towards the long side.
I have been. So I've been actually, it's one of my longer term positions. And like I said, I don't want to say what just the winners, because I've got lots of losers. That's why this was a big bite out of my position, because I have been an NVIDIA bull. But what I love about options, TP, and I think I can get on my high horse with you about this, is that with options, because of how I traded, I didn't just go out there and buy NVIDIA stock. I didn't. It's not like I'm long it. I've actually been using a zebra and ratcheting it all the way up. So no matter what happens in NVIDIA, if NVIDIA falls out of bed, I can only lose back to my last click. Meaning,
yes,
if it goes all the way back down to 90, I have locked in my profits all the way up. That's why I love options instead of just being like, I think it's going up, I'm going to buy the stock and hold it. That's like wishful thinking. That's like that's smoking hopium, hoping it just goes.
And that's the difference between hope and strategy.
Yeah.
Liz, did you know that NVIDIA was going up? I don't think you did.
No.
You had an opinion, but you used a smart strategy to express your opinion.
Yeah, and I would even sell calls against my zebras. So my cost basis in NVIDIA is really low, which is fun, and that's what I do love options. TP, I know. Well, we have to end the show 5 minutes early because they need the new one, but we have 10 minutes left. So I just want to do something real quick.
Yes, ma'am.
I am going to. We don't need to talk about this. I've got you. I'd rather use your knowledge. I'm just letting people know if I see any in the money signs, I will manage the account and push it through.
Yep.
So this was Webull. This was it was our earnings trade. It clearly did not go as planned. We wanted to do something risk defined. We only spent $1.35 on a long option. I will get rid of this and I will push everything through immediately following the show. And if anything else pops up, I will go through. I did it yesterday just kind of as an exercise, and I'll do the same thing today. And if anything gets traded, it'll be pushed to the follow page. Okay. Now that being said, TP, the people want to talk to you. So hold on.
Uh-oh. Happy Friday AF. I like that.
Yeah, I know. Okay, so, well, this is the Great Gatsby. I saw this one, and I just wanted to say that we will. In your market measures, do you talk about the SPX spreads you do? Give us an example of what to do when we open the platform at market open and what exactly to do. Mechanics are king. If we had a daily list of actionable steps to take, it would be great. Sure, we can go do that going forward. And they're talking about it. I think the confusion with the Great Gatsby comes is that Jenny and I have been really following Jacob's mechanics with the SPX trades, and they say to do them at 9 o'clock. Our show is on at 10. So you don't see us make the trade at 9 o'clock because we're on at 10. And I think that's where the confusion comes in. What time do you place your SPX trades, TP?
I do them at 9 o'clock too, mainly because I like to get that first half hour jitters out. When the market might be kind of sorting it out, it doesn't have the best liquidity on the open, and it has to wait until, for the SPX, it has to wait until 500 stocks open up. So the first half hour can be a little sketchy. I like to do them at 9 o'clock. That's why I was looking at those iron condors that I wasn't finding a decent credit in around 9 o'clock.
Yes.
Okay. So
and your credit will get less and less and less as the time ticks on in the 0 DTEs.
And that's why, because it didn't happen, I wasn't seeing this within like 10 minutes, I gave up. Because as you just said, the premiums just start getting whittled away. And if I wasn't seeing it at 9 o'clock, I'm not going to see it at 9:30.
Yeah.
So go on and do something else. Go take my ball and go play somewhere else. But to Gatsby's point is, I don't know. I don't want to say this publicly. I should probably write a book with all the mechanics and stuff and the stuff I do and why I do it and why you guys do it. And I think that could be something like almost like a workbook that people could learn from, because you guys, what you and Jenny do, you bring in so many new viewers that sometimes if you tune into our show, the TP and LD show, it's kind of like walking into the middle.
Yeah.
And it makes it harder. And so I think we could do a little bit more for people because they're smart enough to figure it out. They're asking the right questions. They just need to be shown how to throw the ball.
They do. And what I love, and I'm really glad that I like the number, great handle, by the way, but I like that they asked this question because I think Jenny and I have been, up until this point for the last 14 years, extraordinarily transparent. So even if we see a market measures, we'll go in and kind of put it on. But the problem with the 0 DTE SPX is we always said we're doing it during our show live. When you're kind of like, in theory, when we open it up at 10:15, be like, I wouldn't do it now. Do you know what I mean? So we'll try to, maybe when Jenny comes back, we'll do a little bit more of the steps just for the SPX. Now, that being said, I want to green light your project of a book because I'll buy it.
Oh, geez. No, I'd give it to you for free.
Will you sign it?
No, I have such wretched penmanship.
Oh, that's
maybe I'll have my wife sign it. How about
you go.
she has nice penmanship.
She can be your handler. What would you like it to say? And then she can make it for you.
Exactly. No, so it's because our customer base, our viewership is growing. We get so many new people, and yeah, they want to be shown what to do.
Yeah.
Tom, I put on your IBIT so on this, so you don't get an extra exact fit start. I take the full loss on that.
I would take the full loss on that too. I think I'm going to.
Yeah. So Alan, I don't like it. I'm looking at that IBIT right now, and I am too scared to sell calls against it.
We have a big IBIT position in here as well. That's got 7 days left. So, I mean, I'm sitting on this. I don't know that I'm going to reestablish or add to it in our.
Yeah, we have 2 weeks on that. If you want to free up the capital, I mean, it's not taking up a lot.
It's not, the good news about IBIT is you're forced to define your risk because it holds up. Here, I'm just going to go and show, just because great speaks in my mind. Even if you're selling something against it, it holds up. It's a $47 product. You're selling a 42 put. $1,300 is a lot of money.
It is. And so, because the margin requirements are, because the trade desk knows how volatile IBIT actually is.
Yeah.
I would let that go. And yeah, it stinks. It stinks that it's a losing trade. I hate that it's a losing trade. And if you want to take a smaller than max loss, I would just close it now and move on. But I do not have any specific rules about exiting losing verticals. They are verticals for a reason.
Yes, I agree. You're right. And there are no mechanics. The mechanics of roll at 21 days and do this, do that. Those are for naked options, not for verticals, because verticals are. I
agree.
And I'm glad you brought that up. Now, Blue Wackadoo, did you know that we got to meet him?
Yes, you showed me the pictures.
Yes, so we got to meet him, which was great. So, and he's very transparent here too. So happy Harry AF Friday. IV rank
Harry AF.
4. Just swinging longs in VIX today, and 22 lot narrow iron condor put spreads yesterday in case we climb back above 6,700. Be careful, stay small and nimble. I like it.
Yeah,
I like it.
100%.
Yeah.
Blue Wackadoo's got it.
I know. I mean, and you know what's great? It was interesting because what I do love about his style of trading and Jack Tucker's is that TP, you and I were just talking about, if you open up my positions, I've got scrolling positions. I'm an addict. I'm a trading addict, right? So you open up mine, I'm like, oh, I'll do this, I'll do that, I'll do that. And if I hear an idea, I'm just going to get in just because then my brain works where if I'm in, I remember the price, I remember all that stuff. And I'm a total addict. But these people have been really taking the tasty mechanics that Jacob has really instilled on these zero DTEs. They're putting them on, closing them, and there's risk off the next day. Like, it doesn't matter if there's tariffs or if there's an interest rate, because if they don't want to get in it that day, they have no risk on that day. It's like they're the deciders if they want to be in the market or not that day, which is a pretty interesting way to trade.
Yeah. Anyway, just talking about interest rates, the probability of a rate cut at the D's FOMC meeting almost doubled overnight. It was about 40% yesterday, the probability of a rate cut. Now it's looking like about 73, 74%. So if you look at it's going to be ZN. What's interesting here, Liz, if you type in ZN /ZN,
ZN will show the rate cut.
Show the 10 years are up like 9 ticks. Now go into ZB just to point this out. 8 ticks. So they're kind of 1-to-1 with ZN up a little bit more. ZB is usually like 2.5. Is usually like 2.5 times the size. In other words, the ZB is a more volatile product, and if ZN is up 9, you might see ZB up 18. That's my point, and you don't.
Hey, so TP, this is one question for you too. So I think that's what's saving the market is, the probability of a rate cut's going up. You know, at any time, I think, and I'm not political. This is not a political statement. But at any time, can't Trump say who he's going to nominate for? Isn't that going to move? That's going to be the biggest bond move if it's somebody who's going to be more willing to cut rates. Correct?
Yeah, probably. Yeah. Yes. And, if it happens by Christmas, we could see a huge, a big spike in the 10 years. So a rate cut affects the yield curve differently. I'm sorry, Liz, go ahead. I'm sorry.
Do you think that's why the market is saved, is because now it's pricing at a 75% chance that we're going to get a rate cut?
That is as good a reason as any.
Okay.
And, I'm not a big news person. I like context. And yeah, news is important if everybody believes it. But really, this could just be a bounce higher. And, there's a rate cut. Okay, let's blame it on the rate cut.
Well, it's kind of like picking something in the past of what happened. Yes.
Yes.
All right, TP, we have to end the show because it is now 4 minutes before. I need you to go outside, tend to your tomatoes, make sure they get the water drips that they need in your flame shirt, because I feel like they'll really like that.
All right, I will. They will.
Have a wonderful weekend. And actually, if you didn't get enough of TP, you get to see him again next week. So we're very
That's right.
bring you back.
That's right.
I was going to say happy Thanksgiving, but we'll save that till Tuesday. All right, everybody have a wonderful weekend. And remember to trade small, trade often. Laugh with us, learn with us, and watch TP and VLD. We'll see you next week.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Saw you talking to somebody, telling them it'll be okay. Got a sign that we're running away. 'Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Sweet and sour, you pucker up. Give me kisses, wish me good luck.
Yeah, enough fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dunk on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a fantastic Friday. Markets looked like they were going to be a little flat, a little choppy, and then I turned around, and now we're up 70. So what's the deal?
I actually don't even know. I haven't paid that much attention on the last hour. To be on purpose, honestly. I just felt like a lot of what we were going to see was smokescreen. It was going to be a little scary, and I just think you kind of gotta, I put on some positions yesterday, like not long after we did the show. Most of them bullish, most of them January, some of them Delta busters, and I don't expect to win on those right away, honestly. Like, I thought we were going to have markets get a little scarier. And sure enough, they did between yesterday and earlier this morning. Who's to say we end here today? But things definitely have turned around to the upside.
Yeah, you're seeing some big moves in very specific names. Intuit had earnings yesterday. They've rallied almost 40 points, which is a pretty big move here. I had a call calendar spread in there, the short-term one that I closed for $100 profit. It's probably looking better right now because I closed it when Intuit was up like 28, 29.
Oh, yeah.
Now it's up almost 40. So if you follow that one, that's a good one. But yeah, nice rally here in the markets, reversing some of the move.
Shoot. Great job by them, actually being
yesterday.
Positive on a day like today earlier. I mean, amazing.
Yeah, it is, especially the two-sided action we've seen. But yeah, big wide ranges here in the E-minis NASDAQ. Just going through the list of futures products that we normally talk about. Let's start with the downside. Volatility down a little bit, still staying a bit elevated into this rally here, which just goes to show that. What's that?
What is that?
XRP futures, micro.
Oh, okay. Micros. Okay, gotcha.
Yeah. But yeah, crude oil down $1 and change. Ethereum, Bitcoin can't stop selling off, although they are catching a little bit of a bid from the lows here. Silver down to making moves to the downside. Looks like gold is moving in the opposite direction. Yeah, so a little disconnect there, interestingly enough.
There's been a huge disconnect in gold overall, seems to me.
Yeah. We can look at that, see if there's any trade ideas there with the difference in price movement today. But yeah, kind of I don't want to say inside day, but up 1% in the E-minis and NASDAQ here. NASDAQ just under 1%, but not too many things going nuts. Yesterday was the day of all days, but we'll see if we can get a little rally here into the weekend, see if it sustains.
Our Taiwanese sources says that there's already 1.5 million contracts. Is that what I just see? 1.5 million contracts in SPOOs already today, and 2 million in SPX options. And he's also manning the chat. Which we'll get to this question later. They're wondering if you're going to put an SPX trade on for Monday, which sure we'll get to at some point. But just quick, like I think it's very fascinating when we come into today and we see the market down earlier, market turns around. One of the things that has changed a lot, I was actually talking about this on This Week in Stocks, but it's changed even more. Remember yesterday when we were looking at the CME Fed Watch tool, and it was only 30% chance for a cut, and then it jumped during the day. But jumped is probably not probably too strong of a word for yesterday. It jumped to 39%, but this morning it was like 75% chance of a cut. Yeah,
that is 75% chance of a cut is a big swing. But yeah, we're looking at it. I'm looking at it right
69 now. 69 and a half now, but it was 75 earlier this morning. Josh actually texted me and told me while I was doing the segment. I didn't realize that at the time, but
yeah, I mean, that's a massive swing in one day. Yesterday, it was a 39% chance that we get a cut. Now it's 70%. It's got to be one of the bigger one-day swings.
Yeah.
And we can even look at, if you go to the tool, you can click on that compare tab and you can see it has drastically changed. But yeah, we'll see where they land. I mean, lots of uncertainty there, and the markets are reacting one way or another. But if you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the referral program pinned to the top of the chat. You and a friend both get $100 if they open a new account. So check that out, tastytrade.com/referral. But yeah, am I going to put on an SPX Iron Condor for Monday? Well, let's see. I'm not going to make the mistake of putting on an Iron Condor now and then watching the market go 200 points in the opposite direction. Not to say that that was a mistake, but I think, looking back, given the volatility, the market volatility, when I put it on, we had already gone from up 120 to down to only up 80. So the markets were flying around. So I will do it, but I'm going to wait till the end of the day and see where we're at just to make sure that it's symmetrical. And I'm playing for a true neutral open from the close versus what we have intraday today that could totally skew it, especially because I'm not adjusting these positions. It's not like a strangle where I can adjust it. Right. Once the Iron Condor is set, it's kind of set. So,
yeah, I mean, it's, to be totally honest, it's a little hard to do Iron Condors right now, this close in time, realistically, because sometimes these moves that are happening are above and beyond what the expected move is for the actual instrument. So I think that makes it a little difficult for those.
Yeah. Absolutely.
Moving around a lot, man. I mean, I don't know what's the range. What was it? 240-point range we had yesterday. I'm not even sure where we are today, but certainly might not be done. Looks like about 118-point range today. Some big moves.
Yeah, and what we talked about yesterday too, like the VIX one day was the only thing that was pricing it in somewhat correctly yesterday. Like we got as high as above 30 in the VIX one day, but the VIX was still not even close to it. It got to 27. So that tells me that there's a slight mispricing in SPX implied volatility relative to realized volatility. Now you have to also assume that the VIX one day is looking at near-term premium. So the near-term premium is good, but I placed that trade yesterday when the VIX one day was like in the 20s and then it spiked to 35. So this can be much more sensitive, and it is much more sensitive than the actual VIX, which looks at 30-day aggregate implied volatility. So with that said, yesterday I got unlucky with placing the trade before the big sell-off. So that's going to be a loser today, but I'm still going to wait until the end of the day and see if we get some more implied volatility infusion. Maybe this 80-point implied range for Monday jumps to 100 and I can set a wider range from the closing price. But yeah, in this environment, like Jamal, you said, I think waiting to, if you're doing like a close to the open the next session, I think waiting to the end of the day, see where the market's at, make it symmetrical, and then go from there.
Yeah, it's probably better.
Yeah. But yeah, popping over to the YouTube chat, we have plenty of time to answer any and all questions here. Real quick, actually, before we do that, have you done anything today in the follow trade account. I just closed that Intuit call calendar, the 700 strike. It was a long 7-day, short the 0-day. That was a $100 winner. Let's see where it's at right now. Yeah, I get it's actually pretty much the same price now.
Okay.
But yeah, that's that. Let's see what the peeps got for us.
I can, lay out my last couple of trades. A lot of them are the same, but CRWV, it's one of the few times where I felt the need to buy a little protection. I am short. I have a ratio spread, put spread, right? And these, and then I'm also short a put. I basically have a Jade Lizard on, kind of a Jade Lizard, but with I'm short an additional upside. So I have a ratio spread, a call spread in January, along with a short 80 put in January. And then I'm also have a short ratio spread, a 1x2 ratio spread put style and D's. And so because of that, look, there's a lot of names have been getting hard, but arguably not many names have been getting hit harder than CoreWeave. You can add MicroStrategies into that list, but CoreWeave and Oracle, because of the CDS situation that they've been talking about recently with the amount of debt that those two companies have. So I was a little bit nervous, and I felt like it would be nice, just a little bit prudent, just to pay $300 to have a little protection. That's one of the few times I've ever done that. Oh, I should say I am doing that right now, one of the few times. Other than that, I was a little risk managing with Hood, basically sold upside against the put. And then Tesla and Meta and SPY and Qs are basically all the same trades. They're like Delta Busters, essentially, right? Selling the put spread to buy the call spread. Did it in Jan. The reason why I chose Tesla and Meta specifically is because if you look at the Mag 7 names, they're two of the names that are down on the year almost. They were down on the year by the end of the day yesterday, down year to date. Mm-hmm. And I just decided to play those two. And Amazon is actually on my list as well. If for some reason we were to go lower, that would be another one that I would do one of these trades in.
Yeah, all three of those definitely off the highs. When you look at some other Mag 7s like Apple retracing back to highs. Yeah, NVIDIA's dropping closer to 180 again. Some of the bigger names. Ooh, Netflix post-split.
Yeah.
Whoa.
Yeah.
Whoa.
Yeah, been somewhat quiet.
Yeah, I'll get in on this.
I know, right? I'm already in it, so I haven't. Am I? I forget. Maybe I'm not. I am in it in my personal. I'm not in it in here. Mm-hmm. I got so many of these types of trades. But Netflix will be on the Netflix and Amazon are on my list. Should we, go lower for some reason and actually stay lower?
Yeah, I'm gonna put on a call diagonal spread here, super cheap.
Mm-hmm.
105, 110 for $3. Yeah, 105, 110 for $3. Let's see. Let's get involved here in the post-split $100 price in Netflix. All right. Here we go.
Yeah, I mean, what a turnaround here today.
Mm-hmm. It's amazing that all these.
Another Friday, actually. Is this the third Friday in a row that we've actually turned around and we're going to be up if it stays like this? I think it is.
Yeah, it might be. Let's see.
I actually think.
Yeah, Friday. Yeah, the 14th was another one.
And then that one right there. Yep, that candle. Yep. Yep.
Yep.
All 3 of these Fridays, I actually thought we were going to be down too, by the way.
Yeah, because they were all previous sell-offs into Friday. And then the Friday crew said, no, we got to pump this thing up. But yeah, I mean, the trend has been lower. So we'll see what the weekend brings us. But yeah, heavy hitting statement here. Not a question, but it's amazing. All these veteran traders that are all perplexed by market moves. It just goes to show that no one knows anything. Correct. We did the whiteboard tour this year, and that was basically my opening statement was that I don't care what your assumption is. Like, you can't tell me where the market's going to go tomorrow. And that's a fact. So beware of the people that tell you they can. But that's really just the reality of the situation. When you're trading probabilities, there is a probability that you are wrong. And that will happen eventually if it hasn't happened yet. So how do you defend yourself from that reality and that fact? You trade small enough to be able to withstand being wrong, and you give yourself the tools to defend a position, to push through time, adjust the trade. Like IBIT is a perfect example. IBIT was around 65 when I rolled into this straddle, and now it's at 48. But because I had manipulated this throughout the year and picked up a ton of premium, it's still a net profitable trade in a pretty big way. $1,300 in profit after I started this position with a $500 strangle. So yeah, if I had done multiple contracts of this, maybe it would have been harder. Maybe I would have made different decisions to hedge as opposed to giving myself breathing room to profit. So over the course of a year, there are 250 some odd trading days. I think it's better to be patient, wait to get into things, and always trade small enough to where you can withstand any variance. And that's especially true when you're dealing with the E-minis and NASDAQ. Like, the markets were freaking out yesterday, but when you really boil it down, what was yesterday? It was like a 1% move. Equities have 20, 30, 40% moves every day. So got to treat them differently and just understand that the risk is not the same. But yeah, nobody knows anything.
No, nobody knows anything. Nobody knows what direction the market is going. Like you said, if they tell you that, they're lying. I mean, they have no idea. They can have assumptions. You can have an assumption. That's cool. We have assumptions all the time, right? I mean, and we try to base that off of probabilities, but nobody knows.
Yeah.
Well, and to add to that real quick too, one of the things that has been confusing to me that I've tweeted about over the last couple of days is gold. Like yesterday, if I would have told you that we had the move that we had yesterday, you would have probably thought that gold would have been running higher yesterday into the scary move to the downside in equities. And that didn't happen. And honestly, I'm not sure why it didn't happen. I haven't been able to figure out the moves in gold recently. Look at these last like 5 days. I mean, look at that. That tells you a lot right there.
Yeah, gold like hasn't moved at all. It's been interesting. And the markets have definitely moved. So gold's kind of in a standstill. And then you've got silver that actually did move to the downside yesterday and today as well, but picked up a lot of steam. So silver has been the more volatile one relative to gold, but still not too much movement, all things considered, when you look at some of these other markets that have just been going straight down, like Bitcoin, E-minis, NASDAQ, you name it.
Yeah.
Can we please explain what the risk of assignment is on the IBIT position for my 65 strike short put? So assignment is kind of a non-factor here
because
the assignment risk is real because this option is December. It's the one I have. So this option only has 15 cents of extrinsic value. So if someone does exercise the option and they give up that 15 cents of extrinsic value, that's 15 cents in your pocket. But if you look at the delta, this is a 99 delta put. So this is basically 100 shares anyways of IBIT. So assignment risk, it doesn't change the position. This is already just a long stock position as it stands. There's not enough premium here to roll down. Like, I'm not buying back the 65 and going to the 55 for 70 cents. I'd rather just leave it, especially considering the big sell-off we've seen in Bitcoin. But yeah, if we do get assigned here and I take shares, the nice thing about this position is that I've picked up $3,000 in extrinsic value. So if I'm assigned on the short put, I would have 100 shares at a basis of 65, but I've collected $3,000. So my actual break even is down at 35. So if I am assigned, I would just immediately buy back this short call and roll it down to like the 55 or even lower. Just pick up some more premium and call it a day. The reason why I'm not doing that now is because this short call is not covered by shares. If I roll this call down and then IBIT rips higher, I've now just locked in a inversion that I don't necessarily need for the premium that's offered. But if I have 100 shares, I don't have upside risk. So that kind of eliminates that whole situation. October CPI canceled. November inflation report pushed back.
Yep.
So they're just doing whatever they want. There's no schedule.
Why that's so funny is because that's what somebody said on Twitter earlier too.
Yeah,
it's
like,
true. That's true.
We've got this schedule. We're supposed to stick to it, but not this time.
Nope. And and then the Fed meeting is on December 9th and 10th. So yeah, basically they're not going to have any data for the most part outside of the positive data that we just got from the jobs report. That's pretty much it. And I think that's why the odds went up. As soon as they pushed that stuff back, they were like, "Oh, let's take these odds up on the CME FedWatch." Like you said, that was dramatic. I don't know how many times, if ever, we've really seen that shift that much. But that was a large part of the reason why they announced that this morning, that they're pushing this data back.
Yeah. It's been wild. And I think regardless of the interest rate decision, someone's bringing up VVIX and how it's not popping just yet. And we're not seeing that really anywhere. Like you look at VVX, UVXY, the VIX, like, yes, we got a pop, but like a pop to 25 post yesterday is nothing really. And I really do think that this market has been it's been so predictable in the sense of once we get the vol pop, the next day or a couple days later, we get a pretty big move in the E-minis and NASDAQ that reverses a big chunk of that. And I think that's why you're not seeing the volatility futures really react yet. I said this yesterday too. I think what you need for volatility futures to get above 25 and get closer to 30, you need consecutive sell-off days with no real buying in sight. Because we're seeing this every single time. It feels like you get the big red day, 3 days later, we've erased 75% of it. You get a big 2-day sell-off, you get a gap up higher, and now we're above where the initial sell-off started. Yesterday, you had the huge reversal, and now we've erased about 40% of that sell-off. So until something changes, like this chop here is not going to create a volatility backwardation environment or the VIX in the 30s. It's just like you need this, what we saw in April, where you've got the gap lower, the gap lower. That's what's going to create a big vol infusion. And until we get that, I think, these vol futures aren't going to react the way that we think they are.
Absolutely. And for whoever asked that question, you should think about VIX in this term. Think about VIX, for example. Obviously, a lot of times we know that when there's a lot of, it just is a simple rudimentary way to think about it, but when there's a lot of put options trading in SPX, right, that's when we usually see a pop in VIX. For VVIX, it's actually different. When we see a lot of call options trading in VIX, we'll see a little pop in VVIX. And so that's part of the reasons why, more than likely, there are not quite as many call options trading today as arguably there were yesterday.
Yep.
Derivative of a derivative.
Deriv of a deriv. Question, how much money would you need to make $100K a year and quit your job? 250K, 350K? I'll just continue beating this drum here. I think you need 662K. Really, it's about like, if I was trying to do something super mechanically that was predictable, it's not being involved in the equity market at all. It's being involved in, I shouldn't say the equity market, but like a single name equity. I would just go straight to SPX or NDX and just try and pick up like 10K in premium a month. So if I have a 600K account, I can do one contract in SPX and be totally fine in terms of not being stopped out of a position if SPX really gets down to like down 30%, down 40% on the year. But this is how I would probably do it. Every 30 days, sell a strangle, pick up $7,500 in extrinsic value. You can move it in, but like this is pretty much it. And then if you get tested to the downside, you could roll down and out into the next monthly cycle. If you get tested to the upside, I would probably just shift the whole thing up so I don't have upside risk. If you look at a monthly chart of SPX, like I wouldn't want upside risk in this kind of a chart. But but that's just me. But again, like you have to live within your means and realize that you're not going to keep all that premium you're collecting all the time. But in a perfect world, I think you can collect 100K in extrinsic value or close to it each year. And then if you live off that, you just have to, figure it out with the expenses. But like, that's where I would go. Like if I had $2 million, that's exactly what I would do. I just have a couple contracts in SPX, basically cash secured, never have to worry about big washouts in the market, and just adjust delta as the market moves.
Yeah, I mean, it's a tough question. People ask that a lot, right? They basically want to know how they can trade every day and not have to do anything else. And Mikey's answer is probably one of the best ones, because I know what you guys really want to hear. Like, can I use 50K to turn it into 100? That's really hard. I mean, it is. I mean, you just got to be on a lot of moves. You got to be right. You got to be willing to stay. Case in point, you like pull up Lily. This is just a simple example, right? Like I was just talking about this. Nah, because it's real. Like I can promise you, okay, I was looking at Lily at the bottom there in August. I really was. And I was looking at doing a zebra and I never did it. But I can promise you one thing. If I did get in that zebra at 600 and change, I probably would have been out at 800.
Yeah.
I probably would have been out at 800. And the answer is how you turn 50 into 100 is if you just stay in from 600 to 1,000. That's hard to do. I mean, it just really is. This is real talk. And so that just doesn't happen too often. And equally, I also had no idea that Lily was going to bounce. And I was actually scared of it. And it could have went to 500, similar to kind of like how MicroStrategies is. I know those are very different names, but I'm not talking about the name per se, as more as how stocks move. And so it is difficult, and probably the easier way is taking advantage of option decay. And so that's why Mikey basically is presenting that example, because to be able to get on the winners and ride things, it's really super hard. Trust me, I've done it at times with success, and I've done it at times with failure. I mean, seriously, and that's just kind of the truth of trading.
Yeah, and especially when you bring in, like, I'm trying to replace my job, I need to rely on certain things. You can't rely on equities to do anything. But there's tons of data around the S&P 500. And another question that we'll probably get is like, well, doesn't that go against like trading once, trading huge, trading small, trading often? It's like, yes and no. If you can cash secure a position in SPX, that is very conservative. And SPX is a sector diverse index. So yeah, you would have, all your eggs in one basket per se, but your basket historically has recovered from all crashes. Your basket, anytime it's down 2%, if you look a month, 3 months, 6 months out, it has recovered. So like that's the kind of environment I would want to park my risk if I was trying to replace my day job.
Yeah.
And SPX has 1256 tax treatment too, which helps you out a little bit on the tax end. But yeah, I think it could be as simple as that for a core position. And then you're not going to be using all your buying power, of course. So if you wanted to dabble in, the Lily moves or some other things, you can use some capital to do that. Because even if you had 600K in an account, if I was selling a strangle for the end of December, like what does this actually use? If I'm just trying to pick up, 10K.
I think it was like 100K, I think.
Yeah. So you would have a ton of capital on the side, but why do you have capital on the side? Yeah, 116K. So if you had 600K in your account, you'd have a ton of cash on the side. But again, it's not about using as much capital as you can to get the most money. It's about sitting here and being like, it doesn't matter to me if the E-minis are down 7% in a week. Right. It wouldn't affect you. It would hurt your account, but you know that you can hedge your position. You can roll the position out. Like you can literally just deal with what's going on and continue to pick up premium. And at the end of the year, you will have compiled a good amount of premium. If you could do this every month, you pick up 120K in premium. And then where the market's at depends on how much of that you keep. So.
Yeah, because the idea of the trade small, trade often, what it helps you do is not worry so much about like the Meta and the Microsoft moves that are happening. Most people, there's probably a lot of people in that right now that are really big, and they're like, I can't believe even on a day like today, like Microsoft's not up. Why is it down? Right. And those are the things that just don't make sense sometimes, that if you're trading small, you're able to absorb things that don't make sense.
Yeah. So at the end of this year, I'm gonna embark on the micro e-mini strangle, and I'm just gonna do exactly what I just said. I'll just go sell a strangle. I will not have upside. I will not have short delta. Basically, I will. Very similar to what I did in IBIT. I'll just manipulate the position so that I don't have short delta, and I'll always have upside room for this product to move. And then if we do get downside washouts, I'll just look to buy back the short put, roll it out in time, move it down as much as I can. And eventually I might just end up with a short put if there's a big sell off in the market, and then I'll re-add the call as we get closer to the short put strike. But that'll be the plan. And I'll show, what is possible throughout next year, regardless of what happens in the market. And we'll see what it would have extrapolated to if I did it in SPX. How about that?
You know, it's funny looking at that. So one of my bigger positions right now is the core weave position. I feel like I should just, when I'm looking at the buying power, it's equivalent buying power to what that trade looks like. I feel like I should just do that trade instead, because core weave is starting to deal with some ticker specific news, right? Some industry specific news. And so it's a little bumpy ride more recently.
Mm-hmm.
Yeah, it's a little bumpy ride, and I feel like I'd be better off initiating position in that ES right now just to do that.
Yeah, I mean, into the vol pop.
Yeah,
get a little premium.
I feel like it. Yeah, I mean, it seems like a good time to start it.
What about
Thanksgiving?
Yeah, maybe get some chop. 48-day iron condor in SPX. That would be January 8th. These markets aren't great. I would go either to the 55-day Jan monthly, or go to December if you're going near term. But the Jan monthly markets will be a little bit better, more liquid. But yeah, I mean, you could throw something on like this if you just go to the expected move, 62.50.
I almost always go to the weekly though, as opposed to the AM.
Yeah, that works.
I mean,
the PM.
Yeah, because I know it catches some people off guard. I honestly still don't know why SIBO does AM. It's just a kind of relic from the past.
Yeah, it's definitely an interesting situation. But yeah, something like this, like a 62.50, 70.50, kind of just trading within this new range after the sell-off. Could do something like this, pick up 1/3 the width, risk $600. I already have a bunch of SPX positions on, so and I have an iron condor that's come in a little bit actually, 64.50, 7100. So similar setup. I'm at the end of the year though. So I picked the December 31st expiration.
The New Year's Eve condor?
The New Year's Eve condor. Indeed.
Do you like take a shot at midnight with that?
just buy calls for the midnight.
I see you now with your arm around the iron condor, like the ball's about to drop.
Oh man. What is better? Is VIX 1 day better to use then? I just look at the VIX. If you are doing 0-day iron condor stuff or like 0-day spreads, then yeah, I would be using VIX 1 day. I think you need to align it with your strategy. It's the same as like if you're looking at a chart, like let's say you're day trading and you're looking at a monthly chart, like that doesn't help you. You want to be looking at a minute chart if you're day trading. So same thing, if you're doing 1 day trades, you could look at VIX 1 day and be like, oh, the VIX 1 day is spiking. Let's throw something on because this is reflective of near-term premium. If you're doing weekly trades, you could look at the VIX 7 day, or was it the 30? There's a different one.
9 day. Yeah.
9 day. Yeah. So there's a bunch of these: 1 day, 1 year, 3 month, 6 month, 9 day. So yeah, if you're swing trading, doing something a little bit more long-term outside of day trading, maybe look at the VIX 9 day. And you can see there's opportunities where you get this big spike and you can trade around the reflection in this particular product. So yeah, I think if you're doing 0-day stuff, using the VIX 1 day makes a lot of sense. If you're caught long like yesterday and volatility expands, puts explode in price, what do you do for downside protection, if anything? It's hard to, so this is why we talk about trading small up front, because it's hard to time. Like nobody saw that coming yesterday, I would assume, after the market opened being up 120 and then reversing completely. But what you can do, going back to SPX, is you can roll your put down and out. So if you had a December put, let's just say at like 66.25 right now, and we're just about to go in the money in December, you can buy this back, roll it out to January, and move it down. And you can, depending on where you want to move it, will give you a credit, or maybe you give up the credit. So like the 66.25, I could move this down to the 65.25, pick up $800 in premium, roll it out to January, and roll it down 100 points. Totally viable. If you want to be more conservative in terms of defense, you could move this down to like the 6,500. So now you're moving it down 125 points, picking up a small credit, and you're just shifting where your risk starts, your intrinsic value risk starts. So this is the defensive move. If you have a short put that's out of the money and all of a sudden it starts getting tested into a vol expansion, your ability to move it out and down is much easier into a vol expansion than if you don't have that vol expansion. So that's my number one thing, is if you're trying to keep it a short put, just move it out a month and roll it down to a different strike for a small credit. Any adjustments to the UAL trade? Let the short 110 call expire worthless today or roll it. So UAL is ripping a little bit. Let's take a look. Yeah, so I've got the 100-110 diagonal spread. This 110 is worthless into this rally. Can we take advantage of this rally?
Cool.
Yeah, these markets are not great. So my first thought was to roll this down to a calendar spread and just go out a week. So rolling it down to the 100 strike would turn into a calendar. Picking up 50 cents doesn't feel like enough. Going to the 14-day, I think, makes more sense. So this would basically create a 100 long the 28-day, short the 14-day. It would create I'd pick up $1 and change, about $160. So I'd bring my basis down from $600 to $500. I think the question is, if I have this position on net new, so if I just sell this 14 put, buy this one, or call, sell the 14 day call at 100, buy the 28-day call, and then boost this up to $500, which would be my basis, could I profit on that position if we get a rally higher? So let's go to December 5th. Let's not change implied volatility. Doesn't look like it.
Need a big move.
Yeah, so even if we're analyzing at December 5th, if we get a move higher, I would lose less money. Like, you really need to keep it diagonalized here. But there's just no premium up here. So it's tough. This is what we would need here. I'd have a $5, actually I wouldn't even have a $5 debit because I wouldn't be picking up that premium. So I think for now, I'm just going to let it go. But if we get another 5-point move to the upside next week, now all of a sudden the ability to do that exact same thing, or go into a diagonal spread, like this 14-day 105 is trading for 80 cents right now. But if we get another 5-point move to the upside, it's going to be trading for over $1. And I think that would be the move, is create a diagonal spread 14 days out with the long at 28 days instead of going to a calendar spread, which kind of just kills the trade.
Yeah, sometimes you have these situations. And again, I think you should certainly add to the fact that, like, you're taking advantage of where the market is right now and the chances that it's going to keep running a little bit, right? I mean, because we've had such, it's hard to say it's such a steep fall, but it is a steep fall to some degree when you think about 5% correction from the top. So you have a little bit of time. It's 28-day option, and you have some time for it to actually run a little bit to get that opportunity to be able to sell that other call.
Yeah. And we're seeing that today, like 4-point move. This was absolutely not priced in here. But even into next week, there's only a 4-point move. So can we get a replication of this? Certainly possible, especially considering the market has sold off. The general market has sold off. I would imagine if we see a continuation to the upside in the general market, it's probably going to permeate through some of these equities.
And it's probably a good time to mention this is also possibly down because of oil, where oil is today.
Yeah. Yeah. Oil at 57. Do I have an MCL position? I don't think I bought.
I don't think, right? No.
I don't think I bought into it because I was trading other stuff, but
right. Same.
I think this feels like the time.
Feels right.
Doesn't feel wrong.
I got so much on right now. I got so much on right now.
All right, 57.87. I just got filled. But again, one contract in the micro. I can hold this for however long I need to. Just looking for a reversal of this little price extreme here. Even just a reversal of today's move. I've been getting in and out of this stuff for like $100.
Yep.
Not looking for much more. If you have long call verticals on into this down move, would you take the short leg off if it's at 70 to 80% of the value collected and just lean long with a long call? Yeah, totally. With long call verticals, your short call is put on because it is a cost basis reducing factor against the long, but you can only reduce your cost basis by the premium associated with that short option. So if you have a vertical spread on and you've already collected 70 to 80% of the short value, yeah, releasing that short call, it will add risk to the trade because you're going to pay a debit to close that short call. But if you get a reversal of the sell-off we've seen, now all of a sudden your naked long call that you're left with can appreciate much more quickly because your short call isn't hindering against the value gain on that long. So when you take that short call off, you don't need as much of a move if it happens quickly to get back to a scratch or a small profit because that short call is no longer appreciating in value against you. So yeah, if you're trying to add more delta, and this is a good discussion point too, sometimes adding delta in a position or in a portfolio isn't necessarily adding more trades. It could be taking off bearish trades that have worked, or it could be something like that where you bought a vertical spread, your short call in the vertical spread isn't giving you any more cost basis reduction, and removing it adds more bullish delta to that remaining long call, if that makes sense. And you don't add a ton of risk to do that. So I do like that adjustment for vertical spreads, calendar spreads, diagonal spreads, even zebras. If you have a zebra in the short call, a zebra has 100 delta upside, but if you're doing it with calls, but if that short call is worthless or close to worthless and you remove it, now you have 200 deltas of upside because you're getting rid of that short call. So lots of ways to add bullish delta into a sell-off like this, but yeah, that's definitely a good call out.
Yeah.
Google. Okay. New trade.
Unstoppable. Google. Unstoppable.
Wow. Tree hundo. 30-day broken heart butterfly. Why do we have to fight extrinsic value until the last day to realize 50% profit? Is it not the synthetic of an iron condor? Iron condors don't behave like this. Give us your strikes and we can take a look. But
like some frustration there.
Yeah. So a broken heart butterfly is ultimately buying a call spread and then selling a wider call spread against it to finance the whole thing. The issue is if you get a quick move like this, where the market is moving at a pretty strong degree, your short call spread risk is taking on more heat than your long call spreads gain. So like, let's say you had in December, the 323.40 short call spread, which if you look at the net change today, it's going against you by $100. If you owned this long call spread 5 points wide or even 10 points wide, it's being completely offset. Like you're making money, you're making $100 on this spread, you're losing $100 on this spread. Here, if it's only 5 points wide, you are making 75 cents on this spread and you're losing $1 here. So yeah, it doesn't behave like an iron condor because it's just a completely different trade. An iron condor, you have a ton more space for the trade to move without really hurting you in that sense, where a broken heart butterfly is kind of more of a narrow range, but you're shifting your delta and you're shifting your risk profile. So yeah, hopefully that explains it. But if you give us the exact strikes, we can take a look.
Now, is it broken heart butterfly or is it open heart butterfly? Which one is it?
Broken heart butterfly.
Oh.
Because we were doing, so broken wing butterflies, where you're just like breaking the wing to create a wider credit spread. Broken heart is where you're separating the two strikes. Like Benihana, when you're doing the broken heart fried rice and then they break it apart. Same idea.
Nice. That's the imminence of. Okay. All right.
Yeah. When will you put on the MES trade? At the end of December.
You want it to be a true year-long trade.
Oh yeah.
So you're gonna do it in December. Or you're gonna do it for January options.
I'll place it in December for January.
Gotcha.
But I'll do it at the end of the year for sure. But yeah, we've done the year-long trade in IBIT. We've done it in DraftKings. I think we did it in XLK one year. And yeah, it's been fun, but it's always surprises me how much premium you can collect. Like I started with $500 in IBIT at the end of last year, and now it's up to $3,000. So IBIT's been great because it's had a ton of implied volatility, and it's been volatile, but when you look at the start to finish, it hasn't moved that much, which is why this is a nice profitable trade. But it's killing my thunder here into this sell-off.
Yeah.
Like I thought I was going to just ride off into the sunset when I ended up with a 65 straddle. And then this happened, but still plenty of time in the rest of the year.
Yeah. I kind of like the idea of being short something in here options wise too. And I think this might end up potentially being one of those for me on the regular. I mean, because again, this is a name that does seem to have a decent amount of volatility, but most importantly, it breathes because of how much there is just the sentiment changes around Bitcoin from time to time. So I think it's going to be fun. Mm-hmm. I'm short the 55 straddle at the moment.
Love it. Yeah. And that one has some more premium than mine for sure. The 55.
I'm actually short in Jan. So
nice.
A lot more.
Yeah. And inside the expected move.
Mm-hmm.
Was playing for a bounce in Boeing, and now I'm sitting with 10 of the December 200-185 put spreads, in which I've sold the 195 calls against it for a net credit of 776. Would you roll into Jan or sit tight? So you're right there.
Yeah.
So you've got the 200-185, 15 points wide. Sold the 195 calls against it. Net credit of 776. So 776 on per contract, I should say. But you still have a profit potential here in between this range. You have a 5-point wide inversion with the 195 call being below the 200 put. And you've collected more than $5. So you still are leaning long here. Rolling into Jan. Good question. I think right now, your 185 put that you bought is helping you out a lot in terms of minimizing loss because it has $400 of extrinsic value in it. So that's offsetting a lot of your intrinsic loss on this position. But same story here. Like if you're going to Jan and you're turning it into a strangle, you'd have to buy this package back for $1,300 and then see Like, can you turn this into a strangle where you're picking up more than $1,300? You could go to the 180, 185 strangle. That's $1,500. Yeah, the 180, 190 leaning a little bullish gets you $1,300. So you'd just be shifting your risk, getting rid of the inversion. Totally viable. Or if you wanted to lean like more bullish or neutral, like you could do something like this: 185, 195 in the money strangle. You could do a at the money straddle at 190, or an upside straddle here, 190 for $1,900. You'd pick up a lot more premium. So yeah, there's a lot of different things you could do here, but same story. You have to buy it back in December for $1,300, and you try and replace it with $1,300 or more in credit in January, and then you go from there.
Thanks.
Let's see.
Beautiful.
Jamal, following the Jan 26 Euro USD put debit spread, would a max profit occur at 113 or lower? Do you ever use technical charts when you plan trades?
Do I ever use technical charts? For sure. I do. I do. Would the well, truth be told, this thing would need to. Sure, the max profit, at expiration occurs if this is below 113. You will not get max profit if this does that anytime soon. It's just kind of the way it works. There will still be some type of probably value for that 113 put over what it costs, or over what at the money over what synthetics will actually say it's worth. So it's just kind of like that. I'm just looking for the move to the upside in the dollar, consequently to the downside in this euro. And at some point or another, I think maybe at like probably 50% profit, I'd probably look to take it off. So I'm just playing it in that way.
Cool. Regarding living on SPX premium, or if you're going to be cash secured and always long delta, would that really ever outperform just owning SPX outright? Yes, in the years where the SPX doesn't go up 30% every year. I think we have to remember that is possible, to where the S&P 500 isn't just up 20, 30% every year. And there will be times where it's not. So that strategy, similar to IBIT, like IBIT right now, it opened the year at 54. It's at 48 right now. So if I just owned IBIT, I would have had my time in the sun up here, but it would have all come crashing down. I would be net down on the year. But this is a net profitable position, even with this big sell-off that we've seen. So when you have years that you're down, you're going to be losing less than the general market. And you can still be profitable. If it's only down like 2 or 3% or 5%, like you're going to have more premium to offset that. If it's up 5%, 10%, you can probably outperform buying and holding just with the premium and the chop. The years where you might not, you'll still make money if you never have short delta, if you adjust it out. But yeah, the years where you are not doing better than the general buy and hold is when you have 30%, 40% upside moves. But it's not going to happen every year, although it has the past couple of years. And I think that's it. But yeah, a lot of questions on the ES strangle. So I'm going to do it in the micro E-minis, and I will do it at the end of the year this year, and I'll hold it for all of next year. And we will just manipulate the trade. Same thing with IBIT. Because yeah, XSP I think might just be a little too much buying power.
I think it is, yeah.
And it's twice the size of MES. Yeah, 10, 12K buying power, can't do that. But MES, half the size of XSP, same kind of idea. Only difference is I'll have to kind of delta match as we move from one contract to another. But that's not too difficult to do. You're just kind of matching where the new price is and moving your strikes accordingly. But yeah, thanks for tuning in. If you've got any further questions, you can reach out to us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned, though. We got plenty of content coming your way on the YouTube channel as well as tastylive.com. And we'll see you same time, same place on Monday. Have a great weekend and go Bears.
Go Bears.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
hear us? Hello, Errol? You hear us now, Errol? Yeah, yeah. Good, good. Yes, sir. No problem. Oh, yeah. Yeah, I think the last 2 days have given us more than enough to fill this time.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We've had a pretty aggressive week to the downside, to say the least. But before we get into all the good stuff this week, how we're managing our position and adjusting getting into the weekend, how are we doing today, Brother Gus?
Yeah, I'm doing good. I just had a chuckle before we got on air as I saw somebody type in the lyrics of Shout in the chat here. I was going to equate today to the song Pump It Up by Endor, but Shout is also an appropriate sentiment reflector of how I'm feeling headed into today. Yesterday was kind of more like California Dreamin' by the Mamas and Papas, and then today we're into the Shouts and the Pump It Ups. So yeah, I'm a happy camper. This is not the end to the week that I was expecting by any stretch of the imagination, but I will gladly take it. And yeah, prayers up that the bottom is in from my end.
Yeah, no, it was a surprising. I mean, I don't know. The sell-off yesterday, we're kind of riding off of the vibes from yesterday. We head into the market to today. We don't necessarily make newer lows, but we definitely start to chop around a little bit more. And then not only that, I mean, is this a real rebound or is this a little bit of a dead cat bounce? Are we going to make new lows heading into the next week? I don't know. We'll do a little bit of analysis here, but I've pretty much been in the same boat over there. I had sold a put spread on QQQ right before the close yesterday. And I was debating again, like, okay, if we're looking for some type of short-term bounce just because we sold off over 1,000 points, I mean, it just felt right to get on some type of long delta, you know? Like, it didn't feel good to get on any long delta, but over 1,000 points to the downside intraday is probably the biggest move intraday I think I've actually ever seen in the market. So try to get a little bit of long delta on. That was getting hit a little bit overnight. We're recovering a little bit better now here. 28 days left till expiration, but that's all that's new on my end, and was just keeping an eye on that position.
Well, I admire your short market memory then, because we had a 9% down day just this past April. But but in terms of like just normal market action, like no broader sort of black swan type of event, that was quite a serious sell-off that we got yesterday, especially considering how high we opened. It did not seem like the sentiment was posting up for that to happen.
Right.
But yeah, then we ran back down. I'm agreeing with the sentiment that I see coming through chat here. Dead turkey bounce. I like the Thanksgiving spin on that one, eMedia.
I like it.
That this does seem to give the vibes to me more of a dead cat, a dead turkey, the dead animal of your choice. They all bounce, I think. So yeah, we'll see what happens. I am hoping for the sake of my positions that the bottom is in. I am like, I don't know. I had to do a little mental trade journaling, I suppose I would say, this morning, thinking about how I attacked yesterday and if I had any regrets about how I chose to manage yesterday. I was mainly trying to evaluate if I think I panic sold or not, whether I was too aggressive in rotating out of my longs, and I've resolved that I don't think that I am. I think that I'm pretty pleased with the management that I did through that downturn that we got yesterday. Anything that had some semblance of a chance stayed on. I cut a lot of things down as well, things where I had 6 contracts turning into 3 or 4 into 2, and so yeah, now able to still reap the rewards of this uptrend that we're seeing today without being overexposed should we see more downside, which I think is highly likely.
Oh, I hear you. I mean, we'll see what we get, because Dan over here is saying these moves are baby food. The real moves are when we were swinging on the swing sets, Gus, right? 2008, 2007, 2008, 2009. I don't know, 1,200 point intraday move sounds very ambitious. I couldn't imagine what volatility was like, during that housing market crash.
Did something happen between 2007 and 2009 that made the market volatile? I don't recall anything in that range. 2007 to 2009, I think, in the United States is generally regarded as a time of extreme economic stability.
Something that rhymes with Lehman Brothers. Something ringing a bell over there. No,
never heard of them.
Never heard of them. But no, vol is back up though. How are we feeling about that so far? We can check out VIX.
Yeah, interesting. We're always complaining that vol is basically just an inverse of the market. I'm actually pleased to see vol stay a little elevated despite being short VIX actively. I'm just pleased on principle that the vol is staying a little bit elevated today, even though we're having a green day. I would like to see it come down, obviously, for the sake of that position and all of my others. But yeah, I can't say I'm blown away by the continued. It's not necessarily expansion today, but VIX holding these levels.
Yeah, I guess maybe we could frame it around a little bit more clustering, if you will. A little bit more of the clustering of the volatility at these levels, which is nice. Holding a little bit today at around 24.5. Reached a high on vol of about 28.25. So we're getting a little bit of expansion in volatility. Going to take what the market gives us. But still, with the 1,200 point intraday move to the downside, again, I know last April we had that big move to the downside, but was that an intraday move, or did some of that happen post-market and pre-market hours? That's what I'm kind of curious about, if we got that same kind of intraday move. But nonetheless, still shocked about vol only expanding to about 25, 26, 27 with the 1,200 point intraday move to the downside. So I don't know, maybe more things are cooking under the hood. We haven't even taken out the high from VIX that was set on October 17th at about 28.81. So we'll see what we get there.
You guys are making me laugh in chat. I was being facetious. I'm aware of what happened in 2008. My dad was underwriting mortgages in 2007. I know, but to that end, I understand as a 24-year-old, I may not be able to make these jokes. I was very much in kindergarten around that time, in first grade around that time. Not quite baby in the crib looking up at the airplane toy. Much more kid on the playground playing Red Rover type situation as the economy was collapsing.
Some tetherball. We were getting pretty aggressive and competitive with some tetherball.
Tetherball went hard. And if you had two people that were like legit good at tetherball playing against each other, it would just never end and go for all of recess.
No, I mean it would. Yeah.
Foursquare.
Foursquare was a banger, no doubt. UNH up on the day. How are we feeling about that? We were taking a little bit of a hit over the last couple weeks, but putting in some legs to the upside, catching its first bid here in a little while on UNH at least.
Yeah, happy to see this catching a bid. I only need nothing crazy, just like another $300, and I'd be pretty good on my positions. So, I think this is a good start. Just if we could do, I think 40 or maybe 50 more consecutive days like this, I'd be feeling pretty good.
I mean, you never know what we get out of UNH. See what we get over there. I know gold, this position has been taking a little bit more time on my end, still kind of not going anywhere per se. We got that first pullback and then been trading within this range here, but I am leaning a little bit more bearish than anything. So I'm not doing anything in gold or in the metals, anything here at all. But if we, do end up getting something on, it might be within the next, maybe week or two. But the metals,
I'm staying away from the metals myself.
Yeah.
I don't know. I mean, especially now. I mean, if you're a technical guy, if you're a pattern fan, this is a very bullish chart action that we're seeing out of these. In my opinion, seems to be some consolidation and maybe headed towards higher highs, which would be so unreal. But everything that's been happening with gold in the last 6 months has been unreal. So I guess it wouldn't surprise me either. Yeah. I have some Beanie Babies that are worth more than some of my shit coins. That's there's some poetry in there.
Our Beanie Babies.
There's a message in there.
Look, I know there's a lot of collector items for different types of all sorts of things, but are Beanie Babies of value depending on what Beanie Babies you have? Maybe that's a market I'm unaware of.
To my knowledge, the Beanie Babies are sort of starting to circle back, but I think, and somebody can correct me if I'm wrong because I own exactly 0 Beanie Babies, but I think that it's just like the 5 rarest ones are the only ones that have some legit value, and then there's a scattering of them that are worth $20 or $30.
So it's a pretty illiquid market per se.
Yes, yes, good way of putting it. I do know offhand that the purple Princess Diana Beanie Baby is the most valuable one.
How do you know that?
I looked into it one time. I was having this same conversation with somebody else, and I Googled Beanie Baby prices, and that's the one. That one still sells for 4 figures.
I was like, how do you know that off the top of your head? Just got a feel for the market sentiment of Beanie Babies right now. We're looking at Bank of America got down $3. My brother and I got $1,000 shares when I got back to $10 and sold at $25 and bought our first apartment building. That's actually a fire story.
Yeah, that's an amazing story, Mike. That's awesome. And I mean, that's the way that any good contrarian trader would have been thinking in 2008 would be to scoop all of those things way off the lows. And congratulations to you. That's an awesome story. Great way to get you start.
Yeah. Speaking about what makes you feel old, American, what were we touching on there? 38. My older brother is around the same age. I feel like we're kind of in the same bracket there a little bit.
Beanie Baby futures, new CME product. Personally, I'm not going to trade it until they roll out 3x leverage Beanie Baby futures. Kind of illiquid if you just take the naked.
38 is not old. 38 is an absolute baby. 38 is a baby. 38 isn't the same 38 in the 1990s. Like if you were 38 in the 1990s, like you were kind of up there. But if you were 38 in the big 2025, you're pretty much like 32, 31 maybe.
Yeah. Life expectancies are only trending up. So anytime you are any age, you are like younger than everybody who was ever that age before when you really think about it.
Pretty much. Let's check out some Bitcoin real quick, see what that market's been doing.
I would like to say I don't think 38 is old at all.
No, I'm not even. Yeah, genuinely, I feel 38.
I'll let you 38-year-olds make fun of each other, but I'm not going to do it because I don't think 38's old.
Yeah, no, because
tell them. I still have a Millennium Edition Bear. It was like $400 last time I checked. Dang, Jared. What's the multiple on that? You 20x your Beanie Baby there?
25x.
That's like Apple.
Bitcoin sliding to the downside a little bit more over here, Gus. We breached 80,000. It's looking like to the downside. A little bit more commotion or ruckus, however you want to phrase it, going on over in the crypto world right now.
Yeah, amid all of the broader market turbulence, this is the thing that is not getting talked about enough.
No,
This
this
move
is-
out of Bitcoin is crazy.
I mean, when Bitcoin pulled back to like 100,000, I mean, I could have swore I'd seen some of the most insane liquidations in crypto history. That was not too long ago. I feel like we're sliding a little bit further to the downside, and I haven't heard as much of those headline liquidation stories on the crypto headlines over the last week at least.
Yeah, everything it's just kind of gotten beaten to the bottom of the news cycle here. But yeah, this is I mean, dare I say alarming? Dare I deploy that vernacular? This is bad.
I think that's bad.
This is a bad look for,
I don't know.
for
I
Bitcoin.
think alarming is a proper verbiage, because I think it's caution. Like, this is a little alarming. Like, this should alarm you to some extent that, you know, something is going on here. Whether that's a economic whatever it is, it's like something's going on here under the hood, no doubt.
Yeah, and it's just, I mean, yeah, as it continues to trend lower and lower, it's like, you know, Bitcoin for so long was just this parabolic thing. There was a 20-year, darn near, I guess 15-year period where you could have just bought Bitcoin anytime, waited a year, and you would have, I mean, almost 1,000% increase. And it was pretty much as simple as that for a long time. Obviously, that has started to slow as we reach these, you know, 100 and 130 levels. But what's very interesting is to see this type of sell-off. I would be intrigued to hear what the worst year that Bitcoin has ever had is. I mean, are we up YTD still? Where did we open this year at?
Yeah, we can go back to Bitcoin and check that out. But I mean, we should be maybe just barely. So I don't want to speak too soon. So we're about a year back. I'm not year to date, but let's go year to date. We're almost year to date because we're almost back to December, right? We're almost at Thanksgiving. We're almost there, but not quite. So year to date, Bitcoin was. Oh, I'm sorry, we're on the wrong Bitcoin over here. Let's get to the Bitcoin futures. Get to the Bitcoin futures. It looks pretty illiquid over there, but let me check over here.
Yeah, still definitely slacking a little bit.
Because everything pretty much is just plugging and chugging the whole year.
This type of pronounced sell-off in Bitcoin is unlike anything I've ever seen before since I've been keeping up with it, which is about the last 5 years.
Okay.
But I don't know. I'm gonna get long. All of this said, like I don't think that Bitcoin is going anywhere. I think that we'll easily retest 100K sometime. I think it's just a matter of when. But yeah, it's very strange to see Bitcoin moving like this.
No, it is indeed. It is indeed. It is indeed. Let's go to January, beginning of this year. Everything this year really has felt like it's been plugging and chugging. October, August. June, May of 23, 24, 25. There we go. So let's see. We got the lows over here in January. It looks like we took off right at the new year last year. Let me delete that so we get a clearer view. Beginning of this year. So, I mean, the lows were around, you know, this year sitting around 74,000. We had a little bit of a pullback in February this year. And then we were pretty much taking out, you know, a new all-time high since putting in the last high.
Well, yeah, maybe I'm just not. Maybe I'm not giving it enough credit. Then I might just be a prisoner of the moment on this. But this is crazy. So,
I mean,
regardless of the year-long performance, I'm shocked by this. Interested to see where the bottom comes in. Andrew Cordado, that's an interesting comment because I've actually been aggressively trying to short Labubu for some time. I had to walk over to the trade desk in person and get whitelisted so I could short shares of PMRTY. But I am short some Pop Mart.
Long Labubu. That's interesting, Andrew. I would love to hear, you know, why you like to be long Labubu right now. Just curious, you know. Just kind of based on, Labubu was one of those like super huge phenomenons that we kind of got to see like the cycle and the hype of Labubu play out in person. And it's kind of just looked like Labubu and that hype has really died and kind of popped. So I'm just curious, you know.
Yeah, Labubu is Fad City to me. I mean, I think it's Beanie Baby Part 2 is sort of the equation that I've drawn this entire time. And every time I say this, people say to me, "Oh, that's mean. People should be allowed to collect whatever they want." I agree. If Labubus are fulfilling to you, if this is something you find enjoyable, absolutely do it. Have fun. Life's too short. All that. I don't have any problem with people who own Labubus.
No, throw them away.
As a business model,
throw them away.
I think that this is Fad City and will go away aggressively. And this is what has sent Pop Mart to the moon. So if Labubus go away, they come way back down. That's delusion. Yeah. Just a 6'7"
just a
for
6'7" thrown in the chat. Andrew, what do you mean by that? 6'7"? That's it.
Yes, Margin Walker. Just we said that at essentially the same time there. Yes, this era is Beanie Baby.
I just put 2 and 2 together, right? Beanie Baby, Labubu. Did Beanie Baby have any type of scratch-off ticket kind of element to it where you didn't really know what you were getting?
To my knowledge, no. The Beanie Babies were not a blind box model the way that Labubus are. I believe you just walked in and bought the Beanie Baby that you want. Somebody can correct me if I'm wrong on that, though. I'm not entirely sure. But I've seen Beanie Babies in boxes, and it's like a clear plastic, like you can see what the Beanie Baby is.
I mean, for a collector's item,
Pop Mart was publicly listed. Yes, main Pop Mart is only listed on the Hong Kong exchange, but ticker PMRTY is you can get. There's a American accessible Pop Mart that's incredibly illiquid, but it does move.
Just taking a look at gold.
I'll pop that in chat because it's a 5-letter ticker that's hard to remember. It's OTC. There you go. The Beanie Baby was complete at purchase. Yeah. Okay. Thank you. Appreciate the confirmation. Yeah. So no blind box, no gambling element, no thrill to the Beanie Babies upon opening. Let's go. How can I trade Labubu demand? That's what I was just saying. PMRTY is an accessible ticker tradable on American exchanges. If you would like to get short, I just put it in chat like 3 messages above that, Patrick.
What was that? PMRTY?
Yeah. You got it wrong. PMRTY. Yeah. There we go. There it is. Yeah, and I've been short off. I think like 36 is my spot, something like that. Shares, because we don't options aren't. There are not options on this product, but I'm short some shares off 36. So swimmingly, that's going. Because, yeah, I mean, you can see this. This is just pure Labubu bubble, this entire chart. I mean, the entire run-up is Labubu's emerging in popularity. This is, like, perfectly emblematic of just this is like a Labubu popularity chart is basically what we're looking at rather than share price. That is what this is. When Labubus were at their peak, it peaked, and in since we're selling back off. Yeah, there you go. Nice little double top there. Or I guess, what's it called? Head and shoulders. Head and shoulders.
Wow, look at that drawing. That was
I care about patterns so little that I couldn't identify a head and shoulders just now.
Bro, I feel you on that, honestly. I hear you on that. Again, I know we're looking at charts and things like that, but when it comes down to the patterns in the charts, I don't care. I don't care what the charts are saying. It's like the clouds sometimes.
This chart looks terrible. Yeah. Nice trade, guys. Thank you, Margin Walker. I appreciate it. Yeah, that's funny. It's if you know you're deep in the weeds when those two statements can be true at the same time. This chart looks terrible. Nice trade.
Which chart, actually? This line chart or the candlestick chart?
Yeah, this chart is a astute lack of emojis, I think.
Yeah, agreed.
Head and shoulders on that. Yep. We're on it, Dan. You and me. You probably had the right thing the first time. Didn't try for the double top vernacular. So that is the Labubu curve, yes, precisely, which is also the Peloton curve. I might add, the Peloton is the OG namesake of this type of curve.
Yo, how about Michael Burry? Michael Burry is definitely having a great week, right, guys? Michael Burry, had announced his massive short position in PLTR. I forget the other one. Was it NVIDIA?
Gus is having a great week. I am. Oh my gosh, I'm so mad. I'm so mad that I am not just deviously short Palantir right now. I've been screaming from the rooftops about the valuation on this company, and it was the bubble was so big that the big short himself comes rolling in here and gets incredibly short on Palantir because of how ridiculous this bubble was. I've said it 100 times. I don't hate Palantir as a company. I think that they're going to be very big sometime, but you can only sustain a 600 PE for so long. And at some point, that bubble has to pop and you have to start trading like a company. It happens to everybody. I mean, you could look at Apple. I don't know how long Apple would have held 300, 400, 500 PE ratios, years, I'm sure. But nowadays, it has to start trading like a company, and it trades at 30, 40, just like anything else. And such is true with anything. You can't stay elevated for that long. Even Tesla is slowly creeping down in terms of their PE ratio.
If that's the case, especially if that's going to be the case with Palantir, if this is actually the backside of the move, if we did actually put in the top on Palantir for the time being, maybe some short delta on Palantir whenever we get some pops on the downside is a respectable idea to at least consider, maybe sometime soon.
Tim is cringing somewhere with that chart. I'm sure he is. It's illiquidity and Gap City on the Pop Mart chart.
Oh yeah.
Burry made a legendary trade. That does not make him a legendary trader. That's true. That's true. But he is the big short.
He is the big short. He is the big short.
If there's one thing that I trust Michael Burry on, it's identifying a bubble. I would say that much. If Michael Burry told me to get long something, I might be like,
to be completely, yeah, that's true. To be completely fair, Michael Burry's strategies, though, are probably tuned to his bank account and to his portfolio sizing. So I will say, maybe certain opportunities. Like, for example, for PLTR, there's probably certain opportunities that are, I guess that might come across a little bit more frequently. Like, for example, pullback on PLTR, it's an amazing move, especially if you're a smaller investor. But it's like, if you're a smaller investor, we typically get moves like that a little bit more often. But with that type of portfolio size, you probably don't get the opportunity to size in maybe to a fade of this proportion. With that being said, rest of the thoughts for the day as we head into the weekend.
Yeah, I know we're about at our time here. I don't know. I hope we get higher highs, but I do not think we will. I mean, my prediction is that Monday comes in red. We might even go bearish engulfing over today. Of course, there's still 3 hours, two and a half hours left in today that we could go much higher and change that sentiment. But as we stand right now, I'm expecting a little bleed on Monday and perhaps continued for, I don't know, maybe a month. I mean, that's what I keep saying. Is if we bled slightly for a month, that would not be unhealthy at all in the context of the market action we've seen this year.
Yeah.
So that we could be headed into that.
Lastly, I want to touch on Margin Marcus said they made a movie in cast called Christian Bale to play him. Of course, he's trying to pitch a sequel. That's actually really interesting. You think that could be in the works as to why he's so vocal about announcing some of the big trades that he's on to potentially get a sequel made out of it, you know? That's an interesting perspective.
That's not a bad thought.
Yeah. Anyways, with that being said, that's all I got for today. That was all on your end, right?
Yep, I'm all good.
All right, that's going to do it for today's weekend. Thanks for taking the time to hang out with us, guys. Dan, Margin Walker, Grumpy Mike, Andrew, everybody else. Appreciate you guys. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Have a great weekend.
Plain pot odds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We're back. It's still Friday, November 21st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it feels like a carbon copy of the last few days. This is a market that seemingly does not want to stay one-sided, directional to the upside.
No, and this morning, it looked like we were going to get a nice, decent bounce. I mean, that seemed sensible. Those of us that are of the bearish persuasion were looking at this and going, okay, let's not shoot all the shots all at the same time. We had a big week. Let's digest into the end of the week. This is going to be fine. We need ammunition for next week. Let's just take it easy here. End with a nice little bounce. It'll be okay. And if we look at what's going on here, we're just, I mean, whether you look at the S&P or you look at the NASDAQ or you look at the Russell, the place from whence we're fading is a really auspicious spot, and it's telling you this market just does not want anything to do with these upside attempts.
Not right now. It's been a day of kind of like a Mr. Miyagi sense, where the perception of cuts on, cuts off is determining whether or not the market goes up or down. This morning, New York Fed President John Williams, who's arguably the second most important person on the FOMC next to Chair Powell himself, argued that a December rate cut would be necessary. And sure enough, we see that Fed cut odds, they lift considerably this morning. CME FedWatch tool is now at 73.5% for a 25 basis point rate cut.
What a swing from yesterday. It was 60-40 the other way.
It was, exactly, 39.1% at the end of the close, and that was a deterioration from where we were a week ago at 44%. Never mind where we were a month ago when those odds were 98%.
Yeah.
But that's a big swing here today. That's not the high of the day. Rate cut odds peaked over 82%. So why are they back in by about 9% here? Because the BLS announced that they're canceling the next CPI report. It will not come out ahead of the next Fed meeting. It's not coming out on December 10th. It's going to come out on December 16th with everything else.
With the jobs report.
So now—
delayed one.
Ilya, I mean, first off, like, the Fed's got to delay this meeting. Forget about the Fed not making it. They got to delay the meeting a week.
That would, now that would be a move. If the Fed were to go, you know what, on second thought, actually, it turns out we're meeting on the 17th. Look at that.
I wouldn't be surprised if that happens. And if the Fed does move the meeting, to me, it's a signal that it's a lot closer of a decision than they think it is, right? Because, like, we don't need to move the meeting. All the top heavy honchos who are the FOMC voters, the governors, are all saying that we should cut rates. The market's going to think we're getting a rate cut.
Well, and it would make sense. I mean, the 10th is a Wednesday. The 17th, the day after all this data comes out, is a Wednesday. The Fed does a 2-day meeting. It starts on a Tuesday. They could start the meeting on Tuesday the 16th, get their data, look at it, think some thoughts, come back the next day, deliberate, and make a decision. Just push it by a week.
That would be the sensible thing to do.
Yeah.
I don't know
push
if that's
it by a
really,
week.
I don't know if that's the guiding principle for a lot of people these days.
No.
Like,
And
buying,
they have
buying
to
stocks or silver, not very sensible.
Well, they have to write the summary of economic projections also, knowing that the next week they're going to get all the data that's going to make them look wrong. Just push it by a week.
There's so much downside for them holding this meeting on December 10th. There is so little downside.
But they are definitely going to do it, though. Maybe not. Maybe they'll push it. But my sense is, where would be the fun in that? They are definitely going to hold this meeting on December 10th.
Yeah, and I think moving the meeting moving the meeting would be good, because if the administration is taking a look at the data saying like, oh, this is the kind of data that would allow the Fed to cut rates, let's push it back to December 16th.
Yeah, we're moving our meeting to the December 16th. Wouldn't you know it? The publishing of the data is now the 24th.
Right. I mean, that to me wouldn't be a shock. So let's watch that game of cat and mouse. I know. I do think this sounds immaterial, Ilya. I legitimately think that if they move the date of the meeting, and whether or not the releases are still on the 16th is something that we should be concerned with. Because
it turns out to be BLS is listen, we're very short-staffed. So sorry.
Please, Fed, we're really trying not to release this data before your meeting.
Yeah. Can you just make the announcement so that we can release this data?
So speaking of data, next week we have the U.S. economy finally producing more economic data thanks to the government being reopened. We should get some more pieces of interest over the following days, particularly retail sales pertaining to consumption. There's personal income and spending figures we'll want to watch. I know that there's the autumn budget for the UK, and there's some Canadian growth data. Of course, it is a Thanksgiving week, so truly we're thinking about Monday, Tuesday, Wednesday being the days with which we have any operating room, and then we're in a holiday schedule. So Ilya, in this holiday shortened week, what's the number one piece of event risk that traders have to keep their eye on now that we've made it through the only jobs or CPI report that the Fed will have prior to their December 10th meeting, and NVIDIA earnings are in the background?
Well, this is really the thing. And we talked about this on Overtime with Dylan yesterday. This idea that they've canceled all the data. The bogey clearly seems to be the Fed outlook, but there's nothing really guiding it. So what do you do? And what we're seeing really since the beginning of this month is that the market is finding a default. It's groping toward what is its new default. And that default seems to be down. We seem to be shrugging off good news as it comes in. Because, by the way, there's been no shortage of good news. NVIDIA was just the latest. But last week we had the government reopening. That's good news, even just from a fiscal headwinds perspective. So there's been no shortage of good things. The U.S. and China have backed up from the worst of the tiff in early October. We're below the levels of that panic now across the major indexes. So we're looking at a market that's less so driven by event risk and more so kind of finding a default and running with that. So I think at this point, it's not really, obviously the obvious retail sales stick out. The PCE numbers stick out on Wednesday. But is anybody going to be really operating on that basis? Probably not. What we're probably more so focused on is, where does sentiment go as liquidity comes out of the market ahead of the holiday? Because thin liquidity conditions can be like watching paint dry if nobody has any impetus to move. But if somebody does, and liquidity is thin, that's fewer buyers and sellers, so the price is going to jump. And that can make for a real choppy end to next week.
Well, speaking of choppy end to next week, we're having a choppy end to this week. Stocks are back on their roller coaster again. I suppose this is the third day in a row where we've said stocks are on a roller coaster. So let's just run with some poor use of the English language there, Ilya. S&P 500 up over 1.1%, now nearly 1.2%, 66.35 here, bouncing off of the October 10th low, even though it just barely peaked below it today here. It's a hold of an area for now, which, Ilya, we talked about this on yesterday's show. Yesterday, we did produce a 1.5% gap open higher in SPY, only to close the day lower by more than 0.5%, which incidentally was the second time we've done that this year. The other time being April 8th, 2025, when the market hit its low for the year. So bulls have a little bit of a reason to bounce today, not just the support that's there, but statistically, if you're going to roll the dice, that's as good of a reason as ever. Likewise, seasonally, yesterday was the low point for the remainder of the year. If you take a look at the S&P 500 from 1950 onwards, from yesterday onwards represents when the rally into New Year's really starts to begin. Consequently, yesterday was also the seasonal peak for volatility for the rest of the year. So this bounce, Ilya, you said that the bears themselves, they looked at the market and said, okay, we've made some progress here. We need a little bit of a bounce to reload.
Yeah.
A bounce today seemed like it could have been in the cards if enough people were looking at those kind of stats.
Yeah.
So with something like the S&P sitting a few points off of session highs, the NASDAQ here sitting off the session highs, the Russell proving to be an absolute nightmare for me this week, being long the S&P and short the Russell. Give me some rationale for why bulls shouldn't look at this and say, this is now day one. The capitulation is over.
Because in just pure kind of first page of any textbook on analyzing price action, technical analysis, anything of the sort, you had a range. You broke that range. You are now testing the underside of that range as resistance, and you're not breaking over. And in the Russell, we can clearly see it. You have that gray box there across the screen, and you can see where you had those lows, those wick bottoms in early November. You broke through. You've now attempted to retake that level multiple times. You're testing through it yesterday. It fails. You're testing back up there again today. You're not going higher. So this is not resolving in a way that takes you out of this sort of stair-step lower dynamic. What you're instead saying is this is just a stair step. Okay, we've hit a stair. Now we're going to make sure that we digest the progress we've made so far and then take the next step. And it's the same thing in, I would argue, even more dramatic fashion if you look at the S&P or you look at NASDAQ. So if you look at ES here and consider where we are, we're just retesting from 3 days ago, maybe. And so that's really the most that we're able to muster. I mean, on a daily chart, erase yesterday's big sell-off, we're testing the underside of the move from Wednesday. So, and that's across. And I would argue ES looks a little bit better from a constructive perspective than does NASDAQ. NASDAQ is testing that level at about 24,400 or so, kind of the underside of where it landed on October 10th and where it held again 2 days ago before yesterday it cracked, and we're testing those undersides. We're not breaking through. This looks corrective. It doesn't look like it's the beginning of a new move. If you were going to look at this and say, all right, let's say I want to believe, is the risk reward good to go long here? No. It's terrible.
No, you mean this is where being a little bit more conservative on a bullish entry point, maybe something that's prudent to do.
Yeah.
Only because it's kind of like jumping the hurdle, right?
Yeah.
If we get through 24,450, 500 here, you could start to make the case that the worst of the sell-off is over. But then there's still so much.
Yeah.
There's still so much wood to chop insofar as we did have that rejection of not only the uptrend from the November swing lows here, but that's also the 1 month moving average. Really, no matter how you draw this, it's a pretty ugly looking chart here for the NASDAQ. And it feels top, but
feels toppy.
Well, it feels toppy in part. I've seen a lot of astute commentators point out recently that the market feels like it's struggling, not just because of crypto, something we discussed yesterday, but because of Google itself. Google's Gemini is the best AI in the world right now. And it's doing everything internally. It's not requiring all this external funding. Google itself is a massively profitable company. right? And so if Gemini is superseding what ChatGPT can do, then all of this build out for OpenAI is ultimately a waste because consumers are not going to be using that product. So your Microsofts, your Oracles, your blah, blah, blah of the world, Google keeps going up and eating the AI competition. It's going to be this overhang for some of the other key players in the market.
Yeah. Meet the new boss the same as the old boss.
Well, it means that the flywheel of NVIDIA et al., right? Google is Google using NVIDIA chips to train its Gemini? Nope. It's using its own in-house stuff. So if Google is able to produce the best AI in the world, as you know, we've looked at artificial analysis and their benchmarking results at various points this year for the various LLMs. It's an interesting theory, right? It's a theory.
Yes.
But this is one of those things, though, that goes on as bulls try to rationalize markets that are on their way down, right? And this is part of that exercise that I think psychologically it's easy to get into and say, oh, you know what? There's a reason why this is happening. My general thesis is still intact. I don't need to adjust course. I just need to ride this out. So if it's crypto leading the sell-off because of 401k hardships and people looking to get rid of speculative investments, or it's something like preferences shifting within the AI space because Google is doing everything without the NVIDIA OpenAI flywheel, I think those are just stories we're telling ourselves right now. And it's just the price level that we have to watch here. Markets catching a little bit of a bid here, by the way, extending up to session highs, 24,465. Ilya, 465. Let's just take a look at that 5-minute chart. We're getting a leg up right now, 666.
Yeah, it's on the move here a little bit.
Yeah, Paul, Josh, if you guys, well, actually, Josh is on a plane to Kansas City right now. So, Paul, if you see anything in the news, feel free to shout it out right now so we can get that on the screen for folks. Just checking my trusty Twitter and Bloomberg feeds here. Something had to have happened a few minutes ago. Something had to have happened. Ilya, shout it out if you find it either way.
Yeah, well. I'm having a look here. I mean, it's a sentiment-driven market. It could have been absolutely nothing.
It could be absolutely nothing, which I think is actually probably a good thing. Because if when the market goes down on a catalyst, right, you could easily say, okay, once we get through the algorithmic digestion of the reaction, it's going to sell. It's going to rebound. Which is why the other day when the market started selling off, it's like, what's the news? What's the news? What happened? Who said what? And there was nothing there.
Yeah.
Oh, that's way worse.
That's way worse.
Okay, so we talk about these lines in the sand here. I just really royally screwed up my equity trading this week. Not comfortably, because I've been staying long the S&P and staying long a put spread in the Russell. So long MES, long a put spread in the Russell. That put spread's getting absolutely murked today, because we're up 3% now in the Russell, which is why I just feel like we're seeing something that's in the market that just hasn't come out yet, because the market just doesn't go, up 40 handles and 30 handles in the span of 15 minutes. Usually doesn't. Okay. So at least the MES position's doing better, Ilya, and climbing out of this deep hole I found myself in. You're going to stay short, I presume, going into next week through the holidays, so long as that you have enough duration to survive a counter trend move.
Yeah, I mean, at this point, and I have no problem exiting early if that's what it looks like. But at this point, I just don't see any real reason to be getting antsy in this exposure. I still have about 28 days in my SPY or my ES verticals. I still have 56 days on Russell. I still have about 28 days on one half of Bitcoin and 56 days on the other. So lots of duration still. And to me, these
there it is.
Still look. What did you find?
Trump mulling, allowing NVIDIA to sell H200 chips to China.
Well, there we go.
There's your
that would help.
Headline.
That would help.
NVIDIA takes a leg up from 180 up to 183 here.
Yeah. Yeah.
Easing restrictions globally on chip exports.
The thing is, this is exactly the kind of thing that you would expect to shrug off. This is precisely the kind of headline that the market would go, well, if NVIDIA earnings don't impress us, and they fade. So it'll be interesting to watch this. Again, I would think the markets would have a reason to not get all bent out of shape today after all of the pain that they've suffered. This seems like it would be a good day for some digestion. So I was kind of expecting for this to swing back against me a little today. That's fine. But
I mean, the tell is if the market gives up this move into the end of the day, then it's a further piece of evidence that this is a sell the rip, not buy the dip market. But if we were to close up at like 186 in NVIDIA and the Nasdaq's back to 24,600 and the S&P sitting near 6675, I would have to then again reassess my priors, because this is a week that's obviously demanded to me to reassess my priors. And I think for folks, if you're losing money or the trades aren't working out, adjust your worldview. So I would have to adjust my worldview again.
Yeah.
But this is the key piece of evidence. Is a headline like this enough? Because the food tariffs last week were not enough. The government shutdown wasn't enough. NVIDIA making more money than, maybe God himself, not enough in this past quarterly earnings report.
Yeah, not enough. On and on and on and on and on. The cooling off of tensions with China, not enough. On and on and on it goes. So that's a sentiment shift. And if we fade this, just put more evidence in the bucket. What's interesting also here, we got the composite PMI numbers earlier today for the U.S. That's the November numbers. They're continuous numbers, so that they weren't disrupted by the government shutdown. Highest level of economic activity growth across both manufacturing and service sector since July. Now, good on the face of it, but also, is that the environment where the Fed is going to be cutting rates? Maybe not.
Well, Williams certainly saved the market today. You could see NVIDIA's already given up $1.50 of its move to the upside. NASDAQ giving some back here. All it took was a 2% down day yesterday, Elia, to change tariff policy. I think President Trump may be long the NASDAQ at the 24,000 strike. We kind of bounced from there today before all this news came out.
Listen. This is getting out of hand. We're gonna need to get this bid out here at 24.
Oh, gosh. Okay, so ES still up 1.5%, still sitting at its neckline. We're going to roll over into the bond market momentarily, Ilya, but I want to go back to that 4-hour time frame. We have that pivot low from earlier this month. We have a pivot low from November 14th.
Yeah.
You get through 66.75 as a bear. You probably want to relax pressing the pushing the buttons in that direction.
Yes.
Getting a rally up to 67.60, and then it becomes a question of, can we maintain that series of lower highs and lower lows?
That's right.
Because we have done that here sequentially on the 4-hour time frame going back to the end of October. If you're looking at a print north of 67.90, 6800, and you're a bear, you're probably not looking at a market that you want to re-engage yet.
Yeah, I mean, the October 10th low, that big washout, right? That's basically where we stopped here. That's at 65.40 on S&P. So that's where you stop here today, and you're still testing the underside roughly, as you just said, of those swing bottoms from early November, like November 7th, November 14th, and then the slightly lower low November 18th that we're now testing through. There's like a little fuzz area there. So this is really the key now. Are you going to make it through these levels? If you get it through these levels, well, then, yeah, you have to start thinking, hold on, let me not get ahead of myself here. Let me not be long a market or be short a market that wants to go higher. So maybe you get some sort of relief here. I mean, if we manage to close decently today, you could make the argument that, okay, the market's fears are going to wait it out for the holiday. And next week, nobody's going to have much conviction Monday or Tuesday. And then everybody's just going to go off on the holiday and go, okay, we survived that. Let's come back the following week and start thinking fresh. Maybe. But if sentiment is reaching the kind of fever pitch that we seem to be watching this week, I don't know.
Maybe the holiday's good for people. You know, why do we have circuit breakers in the market, Ilya? So people can catch their breath and stop panicking.
Yeah.
What does the holiday do to some folks? They're in a good mood. Maybe they're in a terrible mood because Thanksgiving costs more this year, but maybe they're in a good mood because they're seeing family.
Maybe that family tells them all about how things cost more this year, and then they're in a bad mood again.
Everyone gets to dunk on their crypto nephew. How's Bitcoin now? How's McDonald's? You know, Diamond Hands. Everyone has a good time.
Way to go there, Diamond Hands.
You know, we're all in a good mood after Thanksgiving, dunking on Diamond Hands, which, you know, I will not be talking about Bitcoin this Thanksgiving, just so I don't need to get that from my family. Okay, but I bring it up on the screen here before we get off of equities because the past few days it's been this iterative process where Bitcoin goes lower, stocks follow. Bitcoin goes lower, stocks follow. And time and again, when Bitcoin is not able to rally or hold its rally, stocks have not been able to follow to the upside. I know that it's a liquidity gauge. It's the riskiest thing out there in the market, right? It's the furthest thing along the risk spectrum, crypto, that is.
Sure.
But even today, still down 2%. Ethereum still off 1.6%.
It was down more, in fairness.
Was down more, but you're not seeing it extend to fresh cycle highs the way everything else is. And granted, of course, NVIDIA selling H200s to China, inconsequential to what's happening to Bitcoin. But also the vol is continuing to go up. And I think that's the most concerning thing here is that if I'm looking at a product like iBit, which I know that you have been leaning short deltas in, very much to your credit.
Thank you.
Very much to your credit. The volatility is continuing to go up. So it's not like we're getting a rally here in crypto with volatility finally breaking its fever. So that is the other side of this, what's going on in the stock market right now, that there is something with in terms of liquidity preferences and raising capital. And maybe this is just the end of the cycle, Ilya. Maybe this is a correction, maybe not.
Yeah. I mean, I am sort of given to the thought that this is the end of a cycle, that we had a big kind of speculative episode from April to October. Now we're going to have the flip side of it. And really the question is going to be if it really was all just about AI hype, which, by the way, nobody's dismissing the transformative power of AI and that this is a multi-decade arc and et cetera, et cetera. But things don't move in straight lines. And sometimes when the rubber band stretches too far, it snaps back violently. Right? Nobody canceled the transformative power of the internet because we had a dot-com crash.
Paul Krugman did.
As we know, that didn't age well.
He also told everyone to sell all their stocks in November 2016 after Trump won the first time, which
that wasn't the move either. And this is why traders and economists are different people. But it's not like the railroads weren't then still a transformative technology that remained in place and that is still with us here today just because there was a speculative crash at their onset. So nobody is saying, I don't think, that's reasonable out here that this thing is going to get derailed by a market crash in a mortal way. But that doesn't mean you can't have a market crash along the way. And if sentiment really starts to unravel here, there's going to be a bigger test of the wherewithal of this thing at higher rates, with a trade war, with inflation sticky, there's going to be a real test of whether the whole thing holds up or whether there needs to be a larger cleansing.
Well, I'm going to hopefully use this weekend to cleanse my mind of my poor RTY ES decision making this week. Bonds, another day where they are up ever so slightly here. ZB sitting around 116 and 22 ticks. Another
This
session
thing
in
looked
which,
so much better earlier.
oh yeah, I much preferred when it was trading near 117. Contracts are starting to roll over here, Ilya, by the way, and I think that is just an important important thing to point out here as we make our way through the session. Lots of futures will flip next week, so if you're trading any of them, be careful. An adjustment might be called for today. It could be called for immediately on Monday, but trying to do this as we go deeper into the week becomes something a bit more of an issue. Either way, in the ZBH6 contract, personally disappointed in one hand, the price action, because I have calls that need to be exercised up closer to 118. On the other hand, the idea of 116 holding and this being a market that is gently and slowly working its way through a multi-year bottoming process, having enough duration means I can afford to grin and bear it on days like today.
Yeah.
Both ZB and ZN low vol again, 7.8 IVR here, in ZN at 16.6. You're seeing a little bit more upside momentum, but likewise having faded off the highs. I'm feeling good though still, because with ZN it's a double. It's the short put spread and the long out of the money call spread. As long as we get price action like this where we take 2 steps forward and 1 steps back, I'll be okay. I just think we need to be patient here, and this is not enjoying the vol like other segments of the market are right now.
Yeah. Yeah. I mean, I'm looking here at very, very, very low vol across the long end of the curve, and I'm thinking about extending my duration on things I have expiring next week. So I have within the next 7 days, one of my positions expires, and vol is so cheap that I'm just going to roll it.
Rolling it probably makes the most sense. 35 days. I mean, today would be a good roll day, right? If you were sitting in the December 12th expiry at 21. Vol is pretty low. Looking at 63 here. Double bull again. Going out. Short the 112, long the 111, long the 117, short the 118. Yeah, that's not enough convexity for me per se. That is requiring a lot of upside movement in. This is ZN, yeah, not notes. 77%.
And there we go. Yeah. I've just rolled it.
Yeah, 77% chance probability of profit on the double bull, and it's still upside 2-to-1 risk to reward, Ilya, right now. So I just like these setups where you're looking for a market that's gently going to nudge its way higher.
Yeah.
Notes and bonds, obviously a little bit different in terms of product sizing. Notes have half the overnight requirement, half the tick value of the bonds at the long end of the curve. The actual difference between the two of them, ZN is $15.62.5. The bonds are going to be $31.25. So notes are typically more of a tradable product for retail, particularly if you're doing it in a risk-defined fashion through something like a call spread or a put spread. This is also the area where it should say a lot to us today that after Williams comes out and tells us that they need to cut rates, that they could cut rates in December, the market views it as an interpretation of not that we would be reinflating higher yields, but an acknowledgement that maybe the growth and inflation pressures are not as great as the market fears, thus allowing for lower yields to set in. So just as an interesting read through, right? We've had times in recent weeks and months when the Fed talks up rate cuts and yields go higher. That's not the case today or yesterday with this reinflation of those December cut odds from sub 40% to where they are now above 70%. The market's telling you that they're necessary and needed from the bonds market view.
Yes. Yes. So this has really been the story, right? Like if you've been looking at Fed funds, they have been aggressively more dovish for next year than what the Fed has been saying. The market has already discounted 3 cuts for next year.
What day is today? 21st, all day?
Yes.
10-minute chart here. This was the non-farm payrolls report yesterday morning. This is John Williams' speech today.
Yeah.
So those two big green up bars there. And you can see cut odds are fading off a little bit here since that speech. But from where we were, we went from a low of what we'll call it 13. So 13 times 4. So we go, we're looking at a 52% chance of a cut up to the peak right now. We're sitting at an 88% chance of a cut. That's a big shift in 24 hours. And it's not producing the move higher in yield. So the market's clearly concerned about growth. And it's telling us that we need the cuts. So leaning the trade that is still ZN above 112, ZB above 116, long deltas are your friend from where I sit.
Yeah, so I just reloaded and took the duration out to 56 days on the second half of my exposure. I don't see any reason to rush this. I mean, yeah, it cost a little. Cost basis is still tremendously low with vol this low. So fine. Let's wait and find out.
Yeah, that's when, figuring out the environment you're in, is it a smart thing to be buying puts in the S&P 500 with a 70 IVR? Probably not, right? Is it smart to be selling puts and bonds with a 7 IVR? Probably not. But you know what? Because it's so cheap, it is something that you can do on the long call side. You're still getting your long delta perspective. You're doing it in a manner that gives you a little bit more convexity.
Yeah.
Perhaps. Metals are trying to hold on here today, Ilya.
They're trying.
Another day where they were in the hole and now they're climbing out of it. Our lovely, beautiful gold chart here is once again showing that the pivot high that we had at the start of November and the swing lows that we had here in recent weeks, we'll call you like that. Maybe some support, 40.50, 40.60, depending upon the contract you're looking at. There is that very silly technical brain of mine that's taking a look at the trend here and saying, could I foresee a triangle coming together that's trying to break out? Is that what's happening right now? Is this part of a bigger bottoming process? And you know what my brain says? You bet. You want to stay long gold, Chris. Nothing like confirmation bias that tells you this is moving to the upside.
The best of all the biases, as we know.
What bothers me, though, is that gold volatility is coming in. It's not coming in substantially, as it were, but we have eroded over the past week as this consolidation's gone on. That's not necessarily the best sign, right? When gold consolidates but vol stays up, it shows that the underlying fundamentals are in place. You're basically just changing hands. When volatility is coming in and gold comes down, it may be saying that the theme is relaxing. So let's see what happens around 41.50. But again, 40.55, staying above there. We got that morning star candlestick cluster a few days ago. Let me just pull that rectangle up here and then I will shut up. 4-hour time frame. There's 1, there's 2, back to back basically on that uptrend. So 40, 50 in that ballpark, depending upon liquidity conditions and time of day. As long as we're above there, I think we got to work with this being, by the way, here's a third one appearing earlier in time on this 4-hour chart. That's 3 over the past 2 weeks on this 4-hour time frame, Ilya, that are bottoming candles that are sustaining the move higher. I could really just keep going back and doing this. Let's just do one more. Duplicate the drawing, pull you over here. Thank you. Here's another one to start the whole thing. Another Morningstar candlestick cluster in this uptrend.
I mean, I'm certainly not going to argue with you because I'm long. So,
yeah. Oh, good. Okay.
And I'm long right around here. So I'm certainly not going to argue with you. I like that if we wind back a little bit to those tops in mid-November, that's sort of where we start to really get real confirmation of gold. And even before then, I mean, even all the way back to October, we start to get the sense like this is not gold in its primordial form. This is not anti-fiat. This is not a foil for the dollar. This is not a foil for yields. This is a speculative narrative unto its own. This is a speculative narrative that isn't the same speculative narrative as the one that we have in stocks around AI and everything like this. It's just a different narrative. And it sort of reminded me that in this new deglobalizing world where at this point we have, again, higher inflation, higher rates, global trade is coming apart. You kind of go back to the old world before, let's call it, the Volcker disinflation, the great moderation, and 40 years of relative calm.
Why would you wish that on us?
And yet, we got used to, especially in the wake of the '08 crisis and how sort of the markets that were built for that world started to deal with the '08 crisis. Everything bifurcated into two buckets. There wasn't a story. There was just risk on, risk off. And one group of assets moved this way, and the other group of assets moved that way. And there was one vibe nerve for the entire market, and whichever way you moved that was how the markets would split. But it's entirely possible, and indeed much more normal, to have more than one story animating the market. And so gold seemed to have become a sort of speculative narrative unto itself. But when you got risk on things, like that bounce we see off of 3,800, 3,900 with the government shutdown ending, that was a generalized risk-on response. All the speculative narratives responded. Then we had the fade off that. We see it here. But of course, the past few days in gold, much more stable than what we see in stocks, obviously, crypto,
which tells me it's got to be a leader when the things start to stabilize again.
Or maybe it's just about to find a thing unto itself.
Yeah,
maybe this is holding up better for a reason. The price action, I am always taken to the conclusion that the thing to trust is the price action. And then you can theorize why it's doing what it's doing. This thing is obviously holding in a way that stocks and Bitcoin and other risk are not. And that's, I think, meaningful.
You know, the one thing that sucks about gold right now, we're about to enter a window where if I wanted to execute any trades in the very short term, my choices are 32 or 67. More options are going to be listed, of course, as we go further out in time. But like at present time, I'm kind of
buy the 1 ounce futures.
No, I don't.
Buy them outright.
Nah,
that's what I'm doing.
Yeah,
incidentally, I wish I had gone back to my prior playbook of selling small size gold vol, because that would have worked better here. These futures are just idling.
You bring up a good point. You bring up the 10Z gold ounce futures, which their tick size is 0.25. The tick value is 25 cents. Full
it's
point
like trading M6E.
Yeah, so I like to trade MGC, but for folks out, and that's a $10 tick value. But if for folks who are looking to fine tune their balance more, like let's say you wanted, 1.5 MGC contracts, you do 5 10Z and 1 MGC, you got your 15.
Well, and also, right? I mean, if you didn't want to lay out margin for an MGC contract, which is like $2,000, you could go to the 1 ounce contract and put up 200 odd bucks. Now it's a smaller position, but it's also much easier to move around in. If you want to scale it up, scale it up. If you want to peel it back, peel it back. I like the flexibility of a smaller instrument. If I want a bigger position, I'll just buy more or sell more. But I like the flexibilities, especially from a macro type of perspective of being nimble on sizing. I don't want to put too much out there because I fully expect that my timing is going to be wrong a bunch before it gets right.
Sometimes you got to race, Chip.
Sometimes you got to race.
That's my response. I don't take those considerations. But live by the fire, die by the fire.
I'm sorry, officer. I didn't know I couldn't do that.
Yeah. Silver today had a really ugly session earlier, but there's that long tail. And if I like silver here 3 days ago at $50.50.5, why wouldn't I like it here now?
No, that's actually a very auspicious hold there for you at the former range top.
At the former range top, at the 1 month moving average, in the envelope between the 1 month and the 50, which has been consequential as a support zone.
Man, am I going to need to buy silver now?
Yeah, you are. Get in there in SIL. Buy a little SIL.
Am I going to have to buy some silver now?
Come over to the dark side. It's something that's not working for me today. And silver, this thing is just not looking great. But gold and silver today balancing out. I'm comfortable with where things stand there for now until we get a little bit closer to expiry. But 32 and 60 odd days to go. Looking for a return up towards 54. Copper is also on the radar here. This is a position that we had in the follow account to swing. Still sitting at 32 days to expiry. It's working out so far. It's not fantastic today because of the bounce, but getting pinned at the 1 month is effectively the trade area, given how it has a flat rate of change over the preceding 2 weeks. And it's a fairly identifiable range between about 535 and we'll call it 485. So copper up, oil down today, I think says a lot about where the geopolitical influences are. And given the news that we're seeing out of Russia, Ukraine, maybe it's time that we head over to energy and talk about what's going on in crude, because crude is one of my worst performing positions today.
I'm liking what's going on with crude here.
Not just because I have a few things going on, but so the iron condor is whatever. It's losing a little bit of money. The gold calls the crude calls that I have, which I spent like $20 on for 62, 64 call spreads for the Venezuela trade. Those are going to expire worthless today, which is fine. The whole point of them is to have a hedge in case something happens overnight or over the weekend, right? Tomahawk missiles flying to Caracas, markets are closed. Hey, at least there's something in the pocket that could probably hedge off what would be a rough session otherwise. Russia, Ukraine, though. Trump administration telling us today that Ukraine has until Thanksgiving to effectively decide whether to cede its territory or to lose American support in its war effort here.
Oh boy.
Vladimir Zelensky, Ukrainian president, came out today and said that this is a moment where they either have to deal with humiliation or they're going to have to do it alone without a major partner moving forward.
Yeah.
So the pressure is being applied to end the war, give Russia large swaths of territory, prevent Ukraine from joining NATO. Zelensky would have to get out of office, yada, yada, yada. Obviously, reducing that geopolitical tension could hurt oil and expose to us where the real price for oil is in terms of global supply and demand balanced around economics and not concerns about major energy supply lines being cut off or damaged. I'm not changing anything yet here, Ilya. I'm still going to buy those cheap out of the money calls for 20 or 40 bucks that give me a 20 to 1, 50 to 1 upside convexity in the event of a $2 or $3 bounce in oil around geopolitics. But if there were to be a peace deal that comes out of Russia, Ukraine, no matter how lopsided it looks, just being real forthright about it, those short iron condors may get obliterated to the downside. And we could lose 56 fairly easily in this market.
Well, I mean, I'm short. So I wouldn't mind.
You don't concern yourself with mortal things like short.
I don't. I wouldn't mind a little obliterating. Yeah, we can obliterate a little bit vis-a-vis this crude contract. If the market feels itself inclined to obliterate, by all means, go ahead. I still have lots of duration in these put verticals. It's an interesting thing crystallizing here in the Russia-Ukraine theater, because I think everyone sort of thought that eventually both sides are going to kind of get to a place where they will have run out of juice. And you're going to arrive at some kind of frozen in time settlement. I mean, just look around the world how many of these frozen in time conflicts we have. I mean, we technically have the Koreas, Georgia.
Yeah, the Korean War is
where Russia tried to do this as a trial run in 2008. That's still frozen in time.
Mm-hmm.
If you let this one get frozen in time, the long game is on the side of the Ukrainians. And so, because they're gonna harass Russia until the end of time, until this territory comes back, and the demographics are not on Russia's side. Moreover, Russia has just lost so much of its young cohort that when we see its demographic numbers updated eventually at some point, they're going to look even worse than they did before this war, and they already looked terrible. So this is this might be one of those things that just comes off the board as a risk. Probably the most interesting thing I'm looking for in that sense is actually not oil, but the euro. Because if the biggest issue for the euro and the Eurozone and the European Union was that you had to hold the line in Ukraine, else Russia would march into maybe Lithuania, maybe Latvia, maybe Estonia next, if you let them do Ukraine fast and retain their materiel and their people and their capacity to fight. Well, that's obviously not the case anymore. Russia is not menacing anybody for a few years after this, at minimum, no matter how this ends.
North Korea said that they're no longer going to send reinforcements for the war effort. So, this is Putin is pushing for this resolution now because the pressure is also building up there, where they're just running out of bodies. One of the points of the treaty would be that Ukraine would reduce the size of its standing army from about 850,000 enlisted soldiers down to 600,000. So I don't know if Europe gets behind this. And the whole situation next week where Ukraine at first blush tries to say, no, thanks, US, we're going to do this alone.
No, it's going to get negotiated. But if we manage to pull out a kind of frozen in time situation here, I don't think that Ukraine necessarily loses in that outcome. I think its timeline extends.
Territory.
It's a lot of territory. And you need that eastern territory. There's a lot of important stuff there.
Like the mineral rights that have been promised to the U.S. Currency markets today. Dollar coming off a skosh here. Is it back up? It's up a little bit more now. We're hesitating near the swing highs that we had back in August and the start of this month. The yen is the biggest mover today as those talks of intervention continue to come in.
I finally took mine off today.
Did you now?
Yes.
I did not. I'm still riding this because there are and it's cut the profit and the position down by about a quarter. There's still 49 DTE in the 64.65 put spread. So giving this a little bit more time here, but I do feel like Icar is flying into the sun right now because in the dollar yen spot chart, you can see that.
I'm glad you brought that up.
Getting pretty darn close to those yearly highs here.
Well, so I got in at 146 spot. And so I looked at this today at 156 and change spot and said, okay, listen, we're at the high for the year, basically. We're testing those tops. If you break those tops, you can always reload. This has been a 10% equity kind of a move. Let's just take it.
Take it, go home, have a happy Thanksgiving dunking on your crypto nephews.
I mean, it's amazing how the US dollar had, everybody was writing, the worst start of the year, wah. Lots of that was a precipitous decline against the yen, which has now completely been erased. Well, not completely, let's say 90-ish% erased.
Euro here today, 115.25. I think, Ilya, you're in the boat with me and so far is still looking long the dollar.
Oh, yeah, I'm long dollars here.
Peppering out exposure in short deltas in 6B, 6C, 6E.
I don't have 6C at the moment, but I've got 6A.
Mm-hmm.
So
I'm still rocking 132, 133 put spread in 6B, or excuse me, short call spread in 6B, the short 72, 72 and a half in 6C, and 6E, short the 117, 118, 49 DTE, things that won't.
I'm short the futures outright. So I'm short, I'm short M6A at 64.60, short M6B at 130. And short M6E at 115.50.
Get another drop here. The euro below 115. We'll call it 114.75 among friends. You break the, you can see here on the chart right before we finish up this section. But if we were to do a little bit of, hey, Morningstar, hey, another Morningstar right over here.
Yeah.
There you go. All right. So all of a sudden, you're seeing this support that's formed in this 114, we'll call it 90 area. Below there, the market has given you a clear breach of a big round number.
That's kind of what I'm looking for here. It's sort of why I've reloaded in anticipation of this.
If we really wanted to be coy about this and get some convexity, we could go out to 77 days and look at the long 112, 111 put spread. It's only an 11% probability of profit, but if you were to break down to those levels, given the measured move of the high relative to this neckline, 300 pips is not out of the question over the next 77 days.
Yeah.
You're talking about 4 pips. You're looking for an average loss of 4 pips a day over the next 77 days. That's not. You're not
asking a whole lot.
Let's do this. Let's do something a little bit more of that madman variety, as one Dylan Radigan might call it. But speaking of madmen, we are running out of time here on Futures Power Hour. We do have to make way for the one and only Dr. Jim Schultz. What's next on the calendar? Monday, quiet day. 2 items that probably don't move the needle. There will be a 2-year note auction, though, as we see some bond market activity ahead of the Thanksgiving holiday. Beyond that, Ilya, we do have our retail sales and, of course, the other smattering of events due up over the course of the week. So let's see if we can hang on to these gains that we've taken today. Thanks, President Trump, for sending AI chips to our great geopolitical rival who's competing with us in the AI realm. That's good. But it's good.
I bought some silver.
Why not? Let's have fun. It's a Taco Friday here, Ilya. Oh, God, did I just say that out loud? Quick, get us off air before the president hears us.
It's going off the rails.
We'll see everyone on Last Call today, 3:30 Eastern, 2:30 Central.
See you there, everybody.
Niggy, we are back, son. And you know what that means? Time for a little bit more Tasty Live. You were just talking about how the NASDAQ was rallying. It's now back down to down around 30. Oops. As I spoke, it's down around 20. I mean, as I get the words out, we move. It's crazy.
I think today is going to be a chop fest, and we're gonna.
That was what I said all day long, and I think that you can buy a significant dip, which we have not had yet. Okay, I want to be clear here. Now, you've been trading futures in a small way and being very nimble, and I think we said that from the very beginning of the show. I thought we'd have a chop fest. I didn't think you'd get paid on volatility. Volatility is actually up with the market up. I mean, the Dow is up 280 handles. That's over a half a percentage point move to the upside, and volatility is still up. Even the S&Ps are up. It's still up. Nasdaq's basically unchanged. The Russell's up 0.75%. Volatility is still bid. You're not going to get paid on these adjustments or anything that you're doing today, but you must stay the course, in my opinion. Delta is king. Delta is king. Believe it or not, if volatility, let's say you have some long delta, you've got your 30 long delta on a position, and you roll down that untested side to get yourself long 15 delta, to get yourself back in line, and we rally up, and you go to 0 delta or short a small amount of delta, if volatility goes from 23 back to 20, you'll have long delta, even though nothing moves. Because remember, when volatility is higher, the out of the money options, their delta, the 20 delta option that used to be $10 away from the market is now $15 away from the market. When volatility contracts again, those deltas become $10 away again. They become the 20 delta again. So your deltas are going to change even with no movement in the stock, just the volatility itself. So stay nimble, keep your deltas in line. Conversely, on the short side, if you have short delta and you're playing a position and you want it to go lower, when volatility contracts, you're actually going to get a little shorter. So be careful.
Yes, but that you get that mulligan if you're short the calls into the up move and volatility contracts. It's not as the move isn't as substantial in terms of the pain on that call, and that's why you kind of get that mulligan. But yes, to your point, you do get more short with the contraction volatility.
Did you just buy him again?
I just bought one little baby at 81. Oh, am I a pig?
A little bit. I mean, now you got volatility up 45 cents.
We were just up 20 cents on vol.
Yeah.
The E-minis were up 20 when we were on break.
Yeah.
NASDAQ was up 40.
Okay.
All right. We'll see.
All right.
We'll see. Oh, no.
The prophecy hasn't been filled yet. We haven't gotten down to 65.25 on the E-mini S&Ps, and we haven't gotten under, we're at almost
24. I want 24.
We're 24.40. I mean, if you're not going to listen to the plan, then don't listen.
Well, I think you're going to have opportunity in between. I don't know. We're going to get it at some point.
I'm just kidding you.
We're going to get below 2,400 and we'll scoopy. We'll get one.
I'm completely kidding you.
All right, let's run through this market measure. Sponsored by the CBOE. They are certainly having a busy day today. Let me tell you.
NVIDIA down 5, by the way, making new lows.
Wow.
That's why you're selling off.
Yes, for sure.
I mean, I think in my opinion.
Micro-sized earnings approach. I mean, we just got through earnings season, but we are quickly approaching the next one here in December. So we'll talk through some of that here. Let's do it.
I'm ready.
All right. So approaching earnings is typically coupled with levels of increasing volatility based on 15 years of data. We're looking at the Qs, the five largest holdings using the standard deviation of price from the average day to the earnings day. We find that volatility typically increases by about 4 times on an earnings day. And so, this is just a very basic discussion on expecting volatility into earnings. When you have these binary events, volatility is going to be a multiple of what you typically see in the market as a whole. When you're looking at Apple going into earnings, it is very high relative to the rest of the market volatility.
Yep.
So earnings as an engagement trade. So it provides opportunity for many occurrences. Of course, they're non-standard short-term trades. So these are kind of binary events that you're trading around just as kind of a short-term trade. They differ from the core strategy and look to profit from a contraction in volatility. If you're selling premium, you can do that with a directional component as well. If you're doing diagonal spreads, calendar spreads, stuff like that.
Mm-hmm. I like it.
Next slide here. So one approach that we look to do is define the risk. This can substantially reduce margin and potential losses. It can also allow for high number of occurrences and high probability trades. So you can, put on small amount of risk, get that engagement trade on, and have that, instant pain or instant gain. I think that's the one thing you gotta keep in mind here. Undefined risk is also on the table here. We try to keep position size 5% of our net lick or lesser with those undefined risk trades in general. So just keep that in mind as well. I mean, earnings give us that volatility that we're looking for.
Okie dokie.
Statistically, we can create earnings iron condors with similar pop and win percentage as a standard 45-day trade. So when we look at SPY, all the occurrences, the win rate of an iron condor is roughly 73%. When we're looking at like a 20 or 30 delta short option, it's kind of the same thing in earnings. Despite the big tail risk that you have to keep that in mind. The earnings event, a lot more max losses come into play than typical 40, 45-day trades. So you got to keep that in mind when you're trading earnings.
Mm-hmm.
Next slide here.
So the strategies we choose will vary based on the assumption, but generally speaking, part of our normal trading approach, if you're looking at bullish trades, short puts or put spreads, bearish, short call spreads, of course, iron flies, iron condors, those are on the table if you want that neutral delta. We do a lot of diagonal spreads, calendar spreads, all those things are on the table into earnings.
Of course.
Next slide here. So this is just like general setup for, how you can place an earnings trade. And these are small sized trades. So if you're in a Johnny Trader account, this is a general idea of what you should be looking at. $5 wide iron condors, you're collecting, 25 to 50% of the width, depending on how much risk you want on. This is just basically a basic example of kind of earnings trades here in a Johnny sized account.
I love it.
And this is what the risk profiles look like. So if trading a risk-defined iron condor, consider using the natural skew in the market and choose strikes dynamically. This is what we call a dynamic iron condor. So if you're selling a 20 delta put and buying a 10 delta call and put to define the risk, that is a delta neutral trade. We did one in the Qs this morning where we had a 20-point wide put spread by a 10-point wide call spread. It plays into the natural skew of whatever that underlying is. The NASDAQ and ETFs in general have that put skew. A lot of time with earnings and tech names, you'll see that call side skew. And so you can adjust it that way as well. If you want to be truly delta neutral, you could do that dynamically by doing the same delta for the short and the long options.
Beautiful.
Next slide here. Here we go. Did we get our?
Yeah, you're 24,000 on the Nasdaq futures. That's been your weakest of the group.
93.
Say again.
I'm in at 93.
Awesome. Even the S&P
23,
down 5.
993.
To 65.50.
For earnings, you can see where the earnings are coming up on the trade page here. So it's that purple line that you see. The bell icon will dictate whether it's before or after the bell. So here, December 10th, after the bell. So you have the bell and then the arrow. After the bell, if it's before the bell, meaning before the open, you'll have the arrow pointing to the left side. So it'll indicate whether it's before or after the bell here. Next slide here. So the expected move is a way to dictate our strategy. So with higher, wider, bigger expected moves, higher volatility, obviously the premium is going to be juicier. It's a good reason to define risk as well if you want to do that, if you're kind of afraid of that risk. Lower expected moves, I say just kind of avoid those underlyings altogether, but you might choose a different strategy.
Beautiful.
Last slide here, a couple takeaways. So earnings allow us to increase our number of occurrences. I call them engagement trades. If you're doing them if your normal size of a trade, a 45-day trade is, 10 contracts, I say do earnings at 2 contracts.
Right.
That's the sort of trade these earnings events are. They are smaller engagement trades. You have to keep in mind they're going to be instant pain, instant gain a lot of the time, especially if you're using those shorter duration options here.
You are correct, son.
Good stuff.
Good stuff. Good stuff indeed. Let's take a look at the market. NVIDIA down $6.90. Just on its lows right now. NASDAQ down to 23,950, about $50 off of its lows from last night. Even the S&Ps about 20 handles off of their lows from last night. They were just down 15 a second ago. They're down 11 right now. Russell still green, up 7. Dow still green, up 127. Volatility 23.35, about 10 cents off its highs. Volatility staying bid here, as you can see, going through the weekend. No surprise there. Bonds up 16 ticks, telling a little bit of a different story here, hanging in there. And the Fed watch tool with interest rates now on a rate cut assumption, a little bit odd. Not odd that the bonds are rallying, that the market itself hasn't rallied yet. Bitcoin, 83,000 and change, still down around 3.5%. Ethereum down around 4.5%, about $80 off of its lows from last night. Oil down $1.50. Gold up 360. Some of the stocks that are moving here today on the downside, well, here, I'll go to the upside first. I apologize. Costco's still up around 8. That's helping the Dow. Home Depot also helping the Dow up 7 and change. UNH up 7. Your beloved Lilly up 6 and change. It's untradeable. Google up 6. I mean, untradeable for options. Apple up almost $4. Sun. We had a little prophecy here. You got the keys down to right around that 65.40-ish handle. Place your bets.
Yeah, it's interesting. I was going to point out as well before we go into break here. Are we going to take a break, or are we just going to keep going?
We can take a quick little break. We'll get Quentin in here, whether we talk to him or not.
All right, I didn't know if they were coming. All right, you got all the stocks. We're all going to be poor stocks going to the moon. McDonald's up $5 and change. You know, you got the Costco's, Walmart's. It's trading like that. So little wild day today. Dollar Tree up $2. You know, that's where we're all shopping when the E-minis go down 40% from here.
Let's take a quick 90-second break and come back. We got more Tasty Live. We're going to bring Quentin in from the trade desk, and we'll talk more markets immediately following these messages. Let's Tasty Live.
Cool.
Nicky, we are back, son. But you know what? Enough out of you. We got Jamal. Jamal, my man, this week in stocks. What's up?
Gentlemen, similar.
Oh,
we lost your sound.
Yeah, I think they muted him.
Sorry. Yeah, it's these
there you go.
These new mics, man. You barely touch them and they go mute on you. It's amazing. I know, right?
What's going on, my friend? You were saying something?
Yeah, gentlemen, it's crazy. I mean, just like I feel like similar to last week when I came on and you were like, you could basically talk about the last 2 days, and it's kind of the same deal. I mean, we spent a lot of this week waiting around for some data, right? First jobs data we got, of course, NVIDIA, and boy, did it not disappoint. And it seemed like everything was going to be great until. Well, there's 4 themes, it seems now. It seems like we actually kind of have a wall of worry. I don't know when it started, but it feels like the last 2 weeks. And so it seems like the whole tech evaluations, AI, right? Whether AI is a bubble, is popped up. Fed rate cut expectations, that has moved around a whole lot, as you guys know. It was greater than 50% chance we were going to get a cut about a week ago. And I haven't looked today, but when I looked yesterday, it was down to 30, and it actually moved up into the sell-off to 39%. So that's the other thing. Mm-hmm. I don't know when this yen situation started happening, but I don't know if you guys know. I mean, yen is getting absolutely smacked. There's talk of intervention. There's certain currencies that are completely mooning right now. When you talk about euro yen, you talk about dollar yen, it's been wild because the yen is getting killed. And then the crypto move right now. So those are the 4 things. All of a sudden, we got like a 4-stack wall of worry.
Yeah, no, totally agree with you. I think at least on our show, we talked a lot about Bitcoin being very, very weak relative to the rest of the market. I'm going back days and maybe even a week or so ago, like when Bitcoin was in the 93, 94 handle. It never really caught a bid. And we talked about its volatility being almost anemic in there. Finally, now you've got volatility in Bitcoin. Maybe now you've got a chance to nibble on the long side on any down move that you get in Bitcoin. There we saved our customers. Yesterday on the opening, we traded from the short side, but didn't really get a lot of short delta. We covered positions that had longs. We did good mechanical things, but we didn't hit any home runs on that move. Matter of fact, that move happened pretty much right after our show was ended, around 10 Central Time, where NVIDIA turned around. I think you have to key still on NVIDIA. You mentioned it. NVIDIA was inside the expected move, up $8, and the market just had a woody, right? I mean, it was yesterday. I mean, it really. And I think we were at a point where and Nick and I talked about it too, where we were kind of at a short-term low in the overall market. Well, you went right through that, and you're there again, and you're back to where Nvidia pretty much had closed the day before or so. So Nvidia only up about 50, 60 cents. I think you got a key on Nvidia all day long. It's 7% of the S&P. Remember,
I want to see a little bit of a pullback. Let's get Nasdaq, but down below 24,000. I think that would be a nice little move here if we get it in the morning.
It did it last night.
Yeah. I think that's a spot where we can scoopy a couple for a scalp. I agree with what you've been saying of like there's going to be some two-sided action.
There's going to be two-sided action today. If you think you missed it to the upside, I think you're going to have time. If you have the type of two-lot trader or more than one, maybe you do something early and then wait on the rest. You'll be happy with your decision. If we sell off, you'll still be happy if you go in the direction you want. If you're just a one-lot trader, you're going to have to be really, really nimble, and you're going to have to just watch what volatility is doing. It's only down 70 cents right now. That's not a big move. You're probably going to want to sell both sides and not get too directional, and then maybe lift a leg if you get lucky enough to catch a move. That's the way I would be playing it today.
Yeah. Do you know it's getting a little nerve-wracking when you start seeing things like the S&P hit their lowest level since the September 11th, the Nasdaq September 10th, VIX is at the highs of April, those kind of things. John, let's cue the video because I want to give the people a little bit of preview of yesterday and what it was like, man.
This is look at you guys.
What's up,
yeah.
Nation? Welcome back to the show. What a day we have today. My name is Mike. I'm here with Jamal. We are live from the CBOE floor, SPX pit behind us. If you can't hear us for the next hour, it's because these markets are absolutely insane. This is definitely the loudest environment we've been in since we started doing the show, but we've brought the volatility. I think it's us.
I think it is. I mean, I was actually a little bit sad when I was arriving here, and I was like, man, we were up 100. I was like, man, only big moves on the days we're down here. I got here, we were only up 60 initially, and you called it. You were like, we're going to be red on the day, and sure enough, that's what's here. The action has picked up. It's gotten louder in here as we've gone red. A lot of orders are flowing in, so there's a lot happening today for sure.
Yeah, awesome. Good job.
Yeah, you can stop it. I mean, it was busy. It was you could feel. What was crazy, and this is something that you only can feel if you're in the room like that. When we went right before we went red, it was quiet, and then as soon as we went red, obviously it got noisier. More orders came in. Then we were down maybe 12 to 13, and it was just kind of quiet again. And you could see they were just kind of waiting for the different levels to keep happening, which they did. Once you get down 50, all of a sudden more orders coming in. It was that kind of day, man. Look at him. He can't stop smiling, Nikki. He can't stop smiling because he's so happy. It takes him back.
It does. Awesome. It does. And open outcry is still there, obviously, in the SPX pit. But we used to have 500 guys and gals doing that. Now you got maybe 50 to 100, I would say. So the noise was deafening, and the action was really, really cool. But I love the idea that you're in the pit there, and you can look at how they're panicking. They're not panicking. I mean, they're just trading. I mean, it's just opportunity. And I think you got to take a step back sometimes when you get these kind of moves and just think about it. It's just opportunity. It doesn't mean you have to be involved. It means you can take it off. The market's always going to be here. Today, tomorrow, next month, next year, it's always going to be here. So if this is a little bit too much heat in the kitchen for you, it's perfectly okay. Reduce your size by 50% or get out and say, hey, you know what? I'm just going to watch, and this is not good enough for me. We had volume yesterday that was 40% higher than what we normally have. That's usually good, and volatility at a high. That's usually good for a little bit of stabilization in the market. So let's see if we get that today. That doesn't mean we can't have huge moves. Volatility, over 20, you're looking at, plus 60 handle move in the E-mini S&Ps, or that's what it equates to, just about a 1% move or more. So a lot of action for today, a lot of action going to happen next week. Even for a holiday week, you're going to see a lot of volume, I believe. So it looks like opportunity is abound for the next week or so.
Yeah, it does feel like it. And I will say one of the things we noticed yesterday was when we started to get that reversal of the move, I think the biggest thing to pay attention to is ranges, right? Yesterday, the S&P ended up having like at least a 200 point, maybe 240 point range. The NASDAQ had 1,000 point range. when you take that in totality and percentage of the change from the day before, you start realizing, oh, these are like 3 to 4% moves intraday. This should actually move the VIX. It's not going to move the monthly VIX in that way, but it did move the VIX 1D. And at one point, VIX 1D was like 32, which is like 2% moves, right? And so it's clear that thing is actually showing you what the kind of move is on a short-term basis.
Awesome. Good job, Betty Jamal. We're going to take a quick 90-second break. We're going to come back. We got the opening bell. We're not going to miss. We'll be back in 90 seconds. Good job, you. Love that video. And you guys fill out those jackets pretty good. Not going to lie. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, well, confirm and send. But before we do, we must take a look at this market. E-mini S&Ps are not looking like yesterday when they opened around 70, 80 handles higher. Today, we're 35 handles higher. Now, yesterday, you remember, we went from up around 120-ish handles down to just about 100 handles. One of the biggest moves we've had in quite some time. You can see it right here on that big candle on the E-mini S&Ps. We're back down to an area or just below an area where we've got to numerous times in the past, probably a little bit of congestion here in the overall market. We'll see what happens. I think you have to key on volatility. I actually wish we were opening lower this morning to really, if you were kind of in the bullish camp, that maybe we could flush this out. We certainly flushed a lot of things out last night. Bitcoin got down to around 81,000. Bonds have stayed steady pretty much all night long. They've had almost about 3/4 of a point range. They're up around 15 ticks. Bonds go higher, rates usually go lower, but bonds have gone nowhere through all of this noise. Bonds have really shook it off. Volatility, on the other hand, volatility's high. Volatility's been high. It's staying high. Even when we rallied yesterday, it got to just under $20. That was a $2 move on the VIX futures, which is a decent sized move from 22 down to 20. We're back near the highs or just off of the highs of 23 at $22 and change. I would expect a lot of two-sided action today. You yesterday traded everything on opening from the short side. If we did 0 days, we leaned a little bit of short delta in 0 day.
Scalp some NASDAQ.
Scalp some NASDAQ.
20 points from the high.
Everything from the short side, and you were typically early. I mean, like with all futures, it's very hard to nail the top. Once or twice in that time frame that you were scalping them, you nailed the top. 4, 5, or 6 times, you took $10 in heat, which didn't seem like a lot when the NASDAQ futures were moving, a couple hundred points, right? I mean, if you take $10 or $20 worth of heat when you got that kind of movement. Matter of fact, E-mini S&P's expected move for today. Have you looked?
I have not. I'll give it 75 handles.
65 handles, relatively high. We'll see how we open here. Might be time to do something in there. We'll see how the futures are moving when that time comes. Russell, NASDAQ, E-mini S&Ps, Dow, all up around the same. Maybe the Russell's slightly stronger than the rest. I don't put a lot of weight into any of that. They're all kind of having a little bit of a relief rally. I think we're going to have a lot of stops and starts today. I think you have a lot of two-sided action today. I don't think we're going to be outside that $65 range, but we'll see. Notes are up 13 ticks. Again, signaling maybe, again, a little bit of rate cut might be on the board. I don't know what that means because
70%.
What's that?
It's now flipped. It's back to rate cut on.
Got it.
But now the reason might be that, we're in a recession or close to a recession. The reason has changed now.
By 100 handles on the E-mini S&P. I mean, really, forget about the top, right? I mean, from the close yesterday to the close from the close 2 days ago to the close yesterday, it's 100 handles.
Yeah.
That put us in a recession. Well, then we've got a really fragile.
You're acting like I decide these numbers. Like this is my problem.
Yes, you mentioned.
You're like trying to convince me I'm wrong. I'm just telling you the sentiment. I mean, I joke with it of just like how quick things flip. On a 1 day time frame, I agree with you. It's like you have a 100-point down move, and all of a sudden we're in a recession. Right. Like that's how quickly things change.
Yes. Bitcoin became the speculative product that it's supposed to be. Quickly happened here in about a 2-week time frame when Bitcoin went from around 105,000 down to about 85,000, down to 81,000 last night. Bitcoin, have we seen the low for the rest of the year?
Ooh, the low. I'll say 80 is the low.
I agree with you.
80 is right back to where we were in April. So I mean, like, if you want to use that as like your spot, we were right here, basically at the lows when everything was crashing. So it seems like it's probably a good spot to get some speculative upside on if you've been waiting. I, on the other hand, am a bag holder, so I already have the speculative upside. And so I have reached position limit on the IBIT position and the ETH position. So I will scratch this when we get back to 100K, whereas everybody else will make lots of money.
It was interesting. I was talking to some friends last night. They brought up an interesting, I don't know, I'll present the information to you. Bitcoin at 84,000 where it is right now. MSTR down to 174,000. MSTR typically traded with a pretty high multiple compared to the amount of Bitcoin that they have, meaning it traded at a premium and a very high premium. This is something Tom had spoke about a long time ago, that the book value, so to speak,
two to three times. Yeah,
3 times. Yeah. Now it's basically under book to just about book value.
I think their average is like 75-ish.
Okay.
In terms of like their Bitcoin price, their average Bitcoin buy.
Let's say it's book value, right? I mean, 80,000, 84,000, 75,000. It used to trade for, if it was 75,000, it would be trading at, 3 or 4 times book, right?
Yeah.
Okay, now it's basically at book value.
Yeah.
MSTR, if you want to be long Bitcoin, is probably a better buy than coin itself if you're playing for where's the velocity to the upside going to be.
If you're trying to take a shot trade, I agree with you. I think if you're trying to buy and hold this, just go to Bitcoin itself. I mean, I agree with you. I think you're going to get some added volatility in MicroStrategy.
Well, if you think MicroStrategy might go to a 2-timer, just going from pot odds, if you got a 10% move in Bitcoin, if the assumption you're making is correct, if you get a 10% move to the upside, for argument's sakes, in Bitcoin, you're going to get a 10% or more, like a 20% or 15% or 25%, if that valuation goes back. At the very least, if you believe in that valuation being 2, 3, or 4 times, at the very least, you're going to benefit on a 1-to-1 basis.
I hear you. I don't know if the same vol complex exists with it. I think
totally agree with you, but that's the conversation we would have. But that's an intelligent conversation. Like if you wanted to make a play in Bitcoin, maybe you split it up. Maybe you do a little Bitcoin Cash, and maybe you do a little bit of a zebra type trade in MSTR or something.
And by Bitcoin Cash, we talk about Bitcoin, not actual Bitcoin Cash. The for lack of better words, the shitcoin.
Yes. That is correct. All right, my friend, let's talk about gold real quick. Gold had quite a day, quite a night also last night. It's taken a back seat to the rest of the market because the velocity of the moves haven't been as great, but still big movement down to 40.54, up to 41.25. It's 41.15 right now. Big move in gold last night. Oil down $1 to 58 and change. Maybe something to do there. IV rank of 28, upticking a little bit. Your gold silver ratio, man, I know you took it off yesterday for a $100 profit or so, and I know you had a couple $100 loss in it. I would have taken the profit too. I thought it was a good hold. But if you held it all the way today, if you were doing that with Craig on our futures segment that we did earlier this week, you got almost $700, $800, $900 on the trade now.
Yeah, and in terms of where the gold silver ratio is, it's still like around 81, 82, which is kind of on the lower end of where it trades. So I don't know if I'm
hard to jump in after you.
It's hard to jump in after I closed for a winner, missed the 2 or 3 or 4x profit dollars that I could have had if I held it 24 more hours. I don't know if I can jump in just yet, but it is something that is on my radar here as an interesting trade. The gold volatility has been awesome.
Gold volatility has been awesome. You are right.
I did get long gold again via GLD, so I have a diagonal spread in GLD, which should be nice today. But it's not.
You look at gold futures. Remember, they trade all night long. So gold futures I just showed you were up like $18, a 0.5% move. But you look at GLD from the closing price, it's only up around 20-30 cents. So really, gold futures were soft all night long, and now are coming back to where they were yesterday.
Yeah.
Euro is down small, which means the dollar's up small. That's all I've got for right now. Nvidia, because really I think you have to key on Nvidia today and really watch Nvidia to save the market or make more weakness in there. It's really only up around $1 Nvidia after earnings.
Cool.
That's all I got.
Let's do it.
I'm ready.
Confirm and send. Couple viewer
Friday, November
emails.
21st.
Insane.
We've been answering this all morning, but that was the email of the soup du jour last night for me. What now? So what now, Nick? Give me. But
yeah, no, I think you have to play into this volatility. I mean, you've gotten the down move, you've gotten a pop in volatility. If you've been looking at some of these names and you've been, pissed that you didn't participate in the upside over the last, 6 to 8 months, you look at some short puts, put spreads, stuff like that. You want to do strangles. You want to do, like yesterday I went into SPX. I did a wide iron condor into the end of the year, 6,000, 7,000 with 50 points wide. That sort of stuff was trading at half of what it's trading today in terms of the premium. And so, you don't know if it's the bottom or the top or, are we going to bounce all the way back? Nobody knows that answer. But right now, you're getting paid to take some risk. And so I think if you've been waiting and you have some cash ready to deploy, you got to kind of start to look for opportunities. So that would be my suggestion.
And I believe it's a good one. What about for those who have existing positions that are at their full capacity, had nice profits, now have small losses? What do they do?
I think you talked about it perfectly this morning. Take those positions. You can reduce some units, roll out in time. You can roll down and reduce some of that delta. If you're short puts, you got 2 of them. Let's say, and you're
from D's to Jan.
Yeah, roll out to January and reduce it to 1 or roll out and down and reduce a little bit of that directional exposure that way, or roll down and out and sell the call against it. Sell 1 call for every 2 puts and kind of reduce your delta and flatten out a little bit because you want to take advantage of some of that volatility that you're seeing.
I agree. I agree with you. I like the taking 2 puts and rolling them to 1 put, or taking the 2 puts and rolling them down and keeping the 2 units. Selling the other side with volatility high. Those calls are not going to move that much, so don't think you're going to get a lot of relief from them.
Yeah, and if you have stuff that you just got totally bailed out on, like I had an email from a guy that rolled, kind of new to trading, rolled the strangle out to March, and he was sitting in March, and he had the short call that was like in SPY that was at like 650, like it was 6,500, and I told him, I'm like, you're in March, it's a lot of time, anything can happen. You just had like a historic move in your favor. Maybe you just eat the loss and move on from that trade and say, you know what, it was a learning experience. I got a little jumpy. I rolled out. I lost some money. It stinks. Maybe you take that position off and go to something now that's 45 days. That's January. Like sell that delta neutral strangle in January and take advantage of the short-term vol, as opposed to kind of try to get back money on this junky position that just wasn't, that was the wrong trade. You know, like just you got to take your bullets sometimes and just like, you know, kind of eat that loss a little bit. I think that's, you know, some people are going to be.
And we always talk about sticking to the plan. Going to March, like even when things were going good.
When he had it on for 2 months prior, you know, like he rolled this out because it was spooked, you know, like, you know, and now you get bailed out and it's not a scratch. It's still a losing trade, but you made back a multiple of what you were losing a week ago. In overnight, you know, you got to look at that position and be like, you know what, this was about as good as it gets. It was a junky position. I had the wrong mechanics. I'm going to take this off. You eat the loss. You'll make it up over time with better entries and better mechanics, and you learn from that and you move on.
Perfect. Next question, please.
Even though the market was down a lot and the VIX up, I noticed the number of stocks where IVR is only in the 30s or lower in some cases. Should I only be looking for underlines with the IVR over 50 or 60 right now, or does it not make a difference as long as it's over 30?
It's an excellent question. I'm going to have a hard time answering it in general. I'm going to put up just a high option volume list and just put them IV ranked from high to low. And you mentioned your IBIT there. That's one of them that has an IV rank in the 90s. But really, your CRMs of the world, when you go down here and you come through this list, again, these are all over OKLO, Marvell, stocks that we've traded, AVGO with a 70, although it does have earnings on the 11th. Stocks that we trade, not the huge amount of stocks that we trade. When you look at an Apple that has a lot of liquidity to it, only a 22. When you look at an NVIDIA in the 30s. So to answer your question, you're not going to get the Microsofts, the NVIDIAs, the bigger Mag 7 stocks with that the 50, 60 IV rank. You're going to get them in that 30-ish range, and those are the ones I would probably stick with. I wouldn't go into the BMNRs of the world, you know, with a 50% IV rank and think that now's the time to get into those, you know, full boat. For me, I'm sticking with that 30-ish range, and I'm sticking to liquidity. I am certainly taking flyers with premium selling and stocks that I think are on a fire sale, and there are a lot of individual stocks that are down well over 10, 15, and 20%. Those are the ones I think you should be taking a small little shot with on volatility, not your core position.
Yeah, and IVR, you know, you have to keep in mind that still has April in it.
Sure.
So you know, volatility is high, guys.
Yeah.
I mean, across the board, volatility is high right now. You've got a VIX at 25. Vol is here.
Yep, totally agree.
Next one, please. Ooh. The other day you answered a question about owning stock and said you thought it does make sense. There are some stocks that have been really beaten down already by 30, 40, 50%, making them more affordable. At the same time, premium is rich. I guess if I have a buyer's dilemma question, I'm wondering if this is a time to buy these stocks or take advantage of the rich premium by selling puts.
You have to ask me one more question. You know, do you want leverage? Right. So if you want leverage, you're going to go to the put side. And if you're looking to accumulate stock, you probably would go to the at the money put. Right.
Yeah.
You know, you got to remember that's got to equal 100 shares of stock at some point. That's the way that I would play it. You certainly can do, you know, a synthetic covered call, which would use less buying power than buying stock if you're a stock buyer. Taking advantage of the high premium, a covered call right now would be a strategy for somebody who likes to buy stock. That would be a good thing to do. Maybe you can't afford or don't want to use all the money to buy stock, so you buy call, sell put, and sell a call further out of the money, creating a synthetic covered call. I would say, to answer this question, if you can afford 100 shares of stock, covered calls right now are a good play. Bullish, wanting to accumulate stock. That's my answer.
Yes, agreed. Well said.
Next question, please. I'll read this one to you. The last one. Thursday sent my deltas way out of whack. I think it did it to a lot of people. I felt like I was chasing them all day. There's somebody who's short premium, I'm assuming. It had me wondering if multiple intraday adjustments make sense, or if we should just wait and adjust at the end of the day. Nothing I did seemed to matter, other than I kept myself in a perpetual state of anxiety that we would reverse, and I'd get caught. What do you think?
Yeah, I mean, I think the problem with short deltas via short calls, is that when volatility expands, you don't see the short-term help that you expect to see. And so I think this is why, I gravitate towards diagonal spreads, stuff like that, where you have a little bit of gamma exposure to it. This sort of situation is one of the problems that you have with these sort of strategies. I think, rolling down is obviously the easy point, or is the easy suggestion, but I think you also have to keep in mind that your losses on the puts are inflated by that pop in volatility as well. And so look at your position, see where you're at relative to where the stock is trading at. Maybe be a little bit less aggressive if you have to, and take a little bit of directional risk. But this is the problem with having too much allocated towards short premium, short gamma, short vol positions into a pop and vol. This is why we talk about kind of keeping some money on the sideline, so you have an opportunity to potentially add to these positions. It's a tough question to answer.
It is a tough question to answer. I'm gonna go to the golf analogy. You hit one into the rough. Do you just take out your wood and try to just hit for the green? That would be like, just leaving it alone and not doing anything with it, kind of thing of trading. Or do you chip out, do the smart thing, put it in the middle of the fairway so that your next shot, you can approach the green? That's basically what you're doing right now when you're making these intraday adjustments. Yeah, they don't help you as much as you would want when you have a 200-point move in the E-mini S&Ps, but when you have a 20 or 30 or 40 handle move in the E-mini S&Ps, they do help you. So stay the course. I think sometimes we get too granular. Stay the course. Watch your delta. Yeah. Watch your P&L. But like I told you, and I've said this in the past on the show, I don't even look at my P&L during the day. Like I watch my delta of my positions, and I stay the course there. I think that's the way to do it. Sometimes the numbers get so big it scares you. Let's to both sides. Both sides. My swings yesterday were huge on the upside, and they were huge on the downside. Nobody wants to see that, but it happens. Yeah. Let's go to Jamal. We got a couple minutes left. We got This Week in Stocks. He's got a lot to talk about. We'll be back in 90 seconds. Thank you, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Hello everybody, Tim Knight, and it is chart time. We've only got 3 full weeks left this year for trading. Can you believe that? What I mean by that is that the other weeks have something chopped up about them. Thanksgiving, Christmas, that kind of thing, New Year's. So, make the most of it. Yesterday was sensational. And today we are bouncing, which is cool, because they're just setting us up for another place to short. I have 3 longs right now. I've got my IEF boring long. I've got Palladium, which I finished acquiring. I'm satisfied with the position. I've got all I want now. And Rivian, RIVN. So IEF, Rivian, Palladium, by way of PALL. Those are my longs. As far as shorts, I got 27 of them. Nothing big. I scurried out of things like, SMH and the cubes and all that early today or yesterday. So lightened up considerably, but still absolutely convinced that the power of the market has changed from bulls to the bears, and that this is a short the rip kind of market now. So it is just peachy that they're bidding things up. Bid them higher, bulls. We need good prices to short from. Maybe we'll get another great opportunity next week. Yesterday was kind of extraordinary because it was such a big lift. I don't know if I mentioned this, but if I did, forgive me. But at the risk of being repetitive, I had bought IWM puts on Wednesday. No, Tuesday. Yeah, I bought them on Tuesday, sold them on Wednesday for a little loss. Then yesterday, the market was so high, those puts were like 10 cents. It's like, glad I sold them because I'd gotten out at like a 240 or something. And by the end of the day, we were like $6. And it was sort of jaw-dropping because in the midst of all my simple little short selling nonsense, I watched my old options go from a dime to 60 dimes. It's like, oh, that's how the big money's made. Cool. And it just illustrates what a big move it was yesterday. I have every intention of getting aggressive on the short side again. I've dialed it down at the moment from like 220% down to 100%. And it varies. You know, this is a stock picker's market. I have happily kept some of my shorts, and I've happily taken profits on others, waiting for a good price to get in again. So let's look at some charts together and see what is going on out there. The spider is green, and it's actually, oh my God, these trend lines. I just changed them. Do any of you else, is it just me? Does it just not like me? Let's just do that again. So the trend lines are interesting because we've got our wedge here, kind of two wedges, this wedge and then a superset of that, another wedge. And, you know, our opportunity was really up here when it was just bumping its head up against resistance. And we had a big red bar here and a big red bar yesterday, of course. And we get these little fight backs right here like so. And it's just lower lows and lower highs. So I believe we're in a downtrend now. And things like Bitcoin, which sort of peaked to down last night, was down almost 40%, 40%, which is like, you know, way over $1 trillion, I think, in losses. So asset risk off has definitely kind of ruled the day. I mean, let's just look at it directly. Here's BTC. And we can see here that for a while, you know, if we look at, say, back here when SBF was caught and FTX blew up, after that washout, it was a very firm bull market, up and up and up and up and up. And the last sort of resolute pop was back around August. And it had one last little spurt to lifetime highs here, but the thrill was gone at this point. But it was only last month that we were at the highest price in history. We were approaching $130,000, and it's completely crumbled since then. And, you know, almost every day is red. I mean, look at this. The vast majority of days aren't just red, but they're red like quadruple digit dollars red. So it has been a very substantial, like almost $50,000 wipeout. And as usual, if you say anything, the crypto people freak out and, you know, say, have fun being poor. It's like, really? Look in the mirror. So, yeah, so that's a really interesting shift. But this is illustrative, I think, of the kind of bounce I would like to see, because let's just say that we get a bounce to six figures. Bitcoin rallies and everyone's, I told you so, and it gets in the neighborhood of six figures. That will be, for assets in general, another shorting opportunity, I would say. Because that is a very, very powerful level of resistance, the 100,000. It's a huge amount of overhead supply. And yet, the Kathy D. Woods of the world are still running around. They've dialed it down some. They were saying Bitcoin's going to 1.5 million. And she's gotten conservative on us and has dialed it down to 1.2 million. So you got to get to the first 100,000 if you're going to talk about that, and it could be a while. So that's been an interesting shift. The monster stock this week, of course, yesterday in particular, was NVIDIA. This simple line here seems to have a lot of sway. I never really took this into account. Maybe some of you options people out there, which is almost everybody listening, can take advantage of this. But this acts like a powerful electromagnet to prices. For months and months, it has just been yanking prices right back to itself. It did it yesterday, with this powerful open and just collapsed back to the line, and it did it today. We fell really hard, and zoop, back we go. So this line right here is just seems to be the equilibrium point for all those buyers and sellers out there. SMH is up about 1.5%. It's a little hard to say how high this is going to pop because this huge bar yesterday kind of makes a mess of things. So it's not like there's this nice squeaky clean pattern to point to. There's kind of resistance round about there. This is my best approximation, but it could go past it. I would say incredibly powerful resistance would be yesterday's bar. I don't think it's going above that bar again, maybe forever, or at least for the next few years, who knows. But that's going to be a very strong bar, I think. But this line right here, I think, is a pretty decent short to medium term resistance level for SMH. And even broader, if you look at the cubes, we peaked on these ultimately back near the end of October, the 29th, and we just messed around here for a few days, gapped down, and we've stayed beneath that gap ever since. And I think this is why we have to dispatch with the idea of seasonality, because the trope was September is bearish and November is bullish, and it's exactly the opposite. September was incredibly bullish. In November, look at the chart. You tell me. Looks pretty bearish to me. So seasonality, meaningless, but everybody talks about it, and all the newspapers and all the websites, they trot out the little chart showing that over the past 3,000 years, this is the average. It doesn't matter anymore. We are in the circus's house of mirrors with distortion. So, what happened in 1968 has no bearing on what's going on right now. And I say that as a chartist whose charting is predicated upon history repeating itself. I don't think seasonality means diddly. The kinds of stuff that I've scurried out of are things like, say, CoreWeave. I got out of this early today. It has fallen so far so fast that the risk of this having a powerful rally is just too strong to ignore. This is a very broken chart. This could just plunge into the abyss without my participation, but I prefer to take profits now and just be a little bit on the safe side. And if it rallied anywhere close to that line again, I would happily get back in again. IonQ, basically the whole quantum space, is another good example. Quantum was one of several sectors that just snookered people this year into this kind of siren song of seduction that brought them in and just yanked the rug out from under them, if we can mix metaphors. And so, for example, if we rallied anywhere back close to that yellow line that I've drawn, that'd be a very appealing place to short. And I can see now we're getting some weakness at this immediate moment. We're still all green. I mean, the incurs of hundreds and hundreds of points, etc. But I think people are a little bit afraid of the weekend, although they shouldn't be. Weekends are where DC decides to trot out their latest ridiculous idea of how to save things. So I'm a little skittish about weekends myself. Carnival CCL, another good example. I'm only showing these to show I have no position in these, but I want to at a better price. So this is CCL, Carnival, and I would love to see this approach that gap again, for instance, because I think long term this is going to be a lot lower. So I would say this pattern here is very similar to this pattern right down here. What else? Dollar Tree, DLTR. this gap right here is very potent. I don't think it'll necessarily get all the way back up to that gap, but look what's going on today. After slip, we've got a big green bar here fighting back, and that line that I've drawn where the gap is resistance. It's just the risk-reward ratio for shorting at these levels just isn't as appealing anymore. That's why I was so excited about yesterday, because they lobbed things so high. It was, kind of your proverbial fish in a barrel kind of thing. But there are some things that still in. As I said, I've got 27 different short positions, all just little shorts. There aren't any like monster ETF positions or anything. By the way, EEM worked out great this morning. I got out of that at a nice profit overnight. But like GE, for example, which oddly is no longer General Electric, it's GE Aerospace. But remain short this. Remain short Roblox, even though it has really been wiped out. The thing is, this thing doesn't seem to do anything but go down anymore. It is so weak. I mean, even today, it's down again, almost 2%. And like I said, the NQ is up hundreds of points. So something ain't right there. That's a very weak stock. A new participant this week, Rubric, I'm also hanging on to, although probably shouldn't. It's pretty oversold itself. And I can see it kind of strengthening back to that line, but it's such a small position, I just don't want to bother. But it's a very pretty longer term pattern. And another one that I continue to really like on the short side is Vistra, VST. This one did have a big pop yesterday, which is just another good reason why I did the unusual act of just eliminating every single stop loss order I had so I could reset it about an hour into the trading day. Because had I left everything in place, that would have been one good example of getting stopped out at a rotten price and then see it just sink again. 99 days out of 100, I don't touch those stops. But on rare occasions like yesterday, it's like, nope, it's time for a fresh perspective on what the proper price levels are. So VST still looks good. Not exciting, but another good idea is Pacific Gas and Electric, PCG. Got a nice little bearish engulfing pattern on this one. It has, like 7 red bars in a row, really weakening nicely. A couple more for you. Seagate, STX. This took a big fall yesterday. It's augmenting that fall somewhat today. And it has been one of the direct beneficiaries of this AI craze. And in very much the same vein, WDC, Western Digital. And you can see here too, it's almost tick for tick, just like STX. It has enjoyed the fruits of the AI mania, but what AI giveth, AI taketh away, so it's been diminishing as well. Actually, about 70 seconds left. Let's just wrap up a couple of odds and ends here. Gold, I hope, is stabilizing. As I said at the top, I've kind of completed my desired size of palladium. I've got one portfolio absolutely committed, not a penny left, to PALL. One thing that egged me on was the fact that Miners, GDX, has beautifully sealed its price gap. If this can hold, and even better, if it can push above this level, I think we've got an affirmation that we've got a new chapter precious metals rally going on. And so here's palladium itself, PALL. We sunk to a multi-week low today. We're stable, I think. And I'm sticking with this one unless it crosses below this gap down here. It's a little bit precarious, but if we can get some strength in precious in general, I think these are good price levels. But as I said, the 3 longs are palladium by way of PALL, IEF, which is the 7 to 10-year bond fund, and Rivian, which I talked to Liz and Jenny about a couple of weeks back. Really like the looks of this. But all in all, an absolutely dynamite week. And we've got some stability now following yesterday's big sell-off. You can see right here, this is the NQ. But my view is that we will get some kind of rally cooking early next week. And I know it's going to be a slower week because of Thanksgiving. But at some point, not terribly long from now, it might even take just a few hours on Monday. Who knows? It won't take much to push things back to appealing shorting levels again. So I will leave you in peace now and see you here next week. And I'll only be broadcasting on Monday. Then that'll be it until December. But I will see you here on Monday. So take care. Bye-bye.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, hey, ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back. It's time for the last call, the final 25 minutes of trading, not just for today, but for this week. It's been a really rocky session again, moved by headlines. President John Williams telling us they're going to give us cuts. The Trump administration allowing NVIDIA to sell H200 chips to China. The market giving it back over the past hour as we get ready into the close ahead of what will be a holiday shortened week, because next week, of course, is Thanksgiving. Just a quick turnaround here as we take a look at the markets. S&P 500 up by 1.25%, 6640. The Nasdaq up by 1.25%, 24,433. Your Dow's also up by, well, 1.25%, just like its other friends, 46,405. The Russell remains the leader, up 3% now again. Nice little bounce there, 2380. Otherwise, though, Bitcoin, Ethereum, they continue to trade to the downside, off nearly 3 and 3.5%, respectively. In the world of currencies, it's a dollar that's firming up basically everywhere except for, well, not against the Aussie anymore, nor against the pound, but it's still trading higher against the Canadian dollar and the euro, even though the biggest move of the day comes versus the Japanese yen, which is rebounding after what's been a pretty one-way street the last few weeks. We move our way over to the world of energy, and you see weaker crude prices, weaker Brent prices. The only thing that's up in the space would be natural gas, higher by about 1.5%. Otherwise, gold is mostly flat after trading higher for much of the session. Silver digging its hole a little bit deeper here as the day goes on. Moving through bonds here finally. They were trading a little bit stronger before. They've come off since then, but firming up into the close. In terms of our high options movers, of course, you're going to look at your SPYs, your triple Qs, your NVIDIAs at the top of the leaderboard. On a day like today, I would point out, though, that in terms of individual names, it's your Tesla, it's your Palantir, it's your IBIT that are your big movers right now. I do think we should start with IBIT, all things considered, because I've been talking here for a minute. Crypto seems to be the albatross around this broader neck of the market. Every time crypto goes down, stocks fall. When crypto can't rally, stocks can't keep their gains. You've been judiciously short IBIT vis-a-vis long puts there. So my question to you is, what is IBIT? What's Bitcoin telling you about the broader market right now? Should traders be watching this over the weekend as sentiment continues to unwind globally, not just in the crypto space?
I do think it's very important to watch it because, as you just said, the real kind of break in markets has occurred here first. And what's interesting is that what this looks a lot like is the equal weighted S&P 500. So if you take away the sort of skew that you have from the enormous market cap that these tech firms command, I mean, just take a look at RSP, let's say, to get the absolute most broad view. I mean, that looks a lot like Bitcoin and a lot less like the cash S&P 500. And so when you look at S&P 500 here and you look at what Bitcoin is, it seems to be this kind of far out on the risk spectrum sort of canary in the coal mine, as it were, where if sentiment here starts to weaken materially, that tells you investors are coming in along the risk appetite spectrum. And of course, it's only a matter of time before they bump into stocks on that move. Interestingly, all of this since the beginning of November has been about the Fed didn't give the markets as many rate cuts as the markets wanted. I would argue it didn't have to be that thing that went wrong. If any one of the pillars of the market's perfect scenario at the end of October was going to fall apart, this might have happened, but that was the one that gave. What do you see in the bond market? It's holding. It's pulled back a little bit, but the long end is holding. And what that's telling you is there's a rotation here into safety assets. And when you see Bitcoin get so precipitously sold, it's just a really excellent, I think, indicator of where speculative appetite is and where it isn't. And this sort of relentless selling, which we can helpfully see here in cash Bitcoin, it really, I think, is a great weather vane for this whole thing. As long as this continues, I think stocks are going to have a hard time finding a new narrative. Not because Bitcoin is causing this, importantly. It's very important to unpick causation and correlation. It's not that the sell-off in Bitcoin is causing stocks to go down. It's that it's illustrating the sentiment that has stocks as defensive as they are.
Right, right. Thinking about Bitcoin here, Jim Bianco of Bianco Research, who we've had on the network before. You've probably seen him on TV if you consume financial media. He had a great chart that's going around on Twitter right now, which is to point out that the average Bitcoin purchase price for spot ETF holders now is below the market's currently below where the average purchase price is. And so you've entered the territory where you've entered a significant drawdown. The last time you had a drawdown of this nature was April 8th, 2025, believe it or not, which is the day of the low for the broader market, which you're not seeing Bitcoin follow stocks like they were yesterday, because all things considered about Bitcoin, this is a pretty good rally here today across the board. As you know, track 25 sector ETFs here. I recently added silver to the mix to make it to 26, Ilias. SLV is the only thing related to that in that category. That's
actually how I got me some long silver exposure today after we spoke on Futures Power. I thought, you know what, I'm going to go with Chris on this. It seems to make sense, if only as a tactical thing. So I did it through SLV, and I mean those puts were giving up 2.5 to 1 risk reward on just straight up call verticals.
Yeah, the top movers today, though, you can't look past the home construction companies out here right now. ITB, XHB, those are your top gainers, up 5.2%, 4.8% respectively. And then the banks, which is really encouraging, I should say, given the price action we saw yesterday, a nice hold of support here for the big ones. Okay, so as a bear, right, you had a market that went down. Yesterday, you had the S&P up by 1.5% at the open, closes down by more than 0.5%. The last time that occurred was April 8th, 2025, incidentally enough. We've likewise gone over the seasonality stats and other programs here. Yesterday, if you look at the S&P 500 from 1950 onwards, is the seasonal low, or yesterday was the seasonal low for the remainder of the year, and was also the seasonal high for volatility. So the fact that we get a bounce today, right, you could point to a number of reasons why. And I know I asked you this earlier, but it's a different crowd, a different conversation. When you're looking at this distributive action in stocks where it's not necessarily the tech names leading on the way up, it's your Russell that's the one sitting up closer to 3% right now. It's not your NASDAQ that's the one carrying the baton. Is that encouraging to you as a bear? Is that a rejection of the NVIDIA news this afternoon? Likewise, how do you rationalize all this heading into a holiday week when a lot of things can change by the time we get liquidity back, not next Friday, but the following Monday?
And I think you have to go with the bottom line. If you look at where you stopped falling on this most recent run, it's basically the October 10th low. So you had that big washout where whatever kerfuffle this is started. And you can see where the markets kind of had the breaking point sentiment wise. It was really there. And then you had to go through this exercise where the market tested the veracity of its assumptions. That sell-off was ostensibly because the US-China relationship started to suddenly break down. And what that illustrated for the markets was you can't break anything else. That's it. If you break one of the key underpinnings of this thing any more than it's already strained, sentiment is going to crack. Over the subsequent 2 weeks, we shrugged that thing off. There's the gap after it, when apparently we solved that bit. And then the Fed said, no, actually, there's a crack in a whole other pillar of this thing. And so we're basically back to where we were. It's just we had to figure out which was going to be the pillar that breaks down. It wasn't the China pillar as it turned out. But we landed in the same spot. The market was priced for perfection. It could not take any more stress. It was done. And so, in my mind anyway, that's the going assumption I'm working with based on the price action here. And so at this point, you look at what's happened and you go, okay, well, this is a logical spot on a Friday before a holiday for people to say, you know what, why am I going to have conviction beyond this point? Let's wait. Let's not get over our skis here. And so then you look at, okay, well, is this a bounce that has legs? Might we ride this back into some sort of a Santa Claus situation through the rest of the year? That's not what this price action is showing. It may still, but it doesn't. Because right now what we're doing is we're testing the underside of where we broke down. And so resistance has been made of support, and we're looking to see what's going to happen next. But if this is how we close today, the message I derive from it is the markets attempted to barnstorm into diffusing this bearish push, and they failed. They didn't have the conviction to really hold the line into the end of the week. That doesn't mean they've failed finally. The stemming of the bleed out, that's significant. And next week, we do have a shortened week. We'll see if the markets decide that they want to find conviction. Doubtful. If something spooks them next week, say the president has a conniption about trade with someone and decides to throw some tariffs at Mexico or something. If we were to get something like that, it would happen in very thin liquidity and the markets would probably take it very badly.
Elliot, before we go on, just want to remind everyone, production, we can put that up on the screen here now. Oh, it's that time of year, folks. It's time for Money Match. This is open for new U.S. customers. It is. It's a new promo, same promo through November 30th. If you're opening an account, use the promo code MONEYMATCH. At tastytrade.com/moneymatch, you'll get 1% of your deposits matched up to $2,000 plus 30 days of commission-free trading. Again, runs through November 30th. That's not that far away now, Ilya. It's already November 21st. Where did this year go? My goodness.
Jeez.
All right, we have some big volumes in the market today. Mr. Spivak coming from Frank, over 2.2 million SPOOs traded, 6 million NVIDIAs is huge, 3.7 million contracts traded in Tesla here. We've covered the macro level pretty well in terms of what's going on here in the index level names, but some of these other single stocks, they're having decent sessions. Tesla's only up by 0.13%, but it's maintaining the uptrend from the April and summer swing lows. You could look to a Google, which quite frankly is having another strong session here, up nearly 4% right now, crossing $300. You and I were talking about Google earlier and its relationship with NVIDIA and Microsoft and that flywheel. People should go back to Futures Power Hour to hear it. But curiously, you do see a name like a Microsoft, which is really struggling still. And if this is the proxy for the market, OpenAI, dare we say?
Yeah.
This looks awfully like a double top here.
It does.
So let's just cross some bridges right now for next week. The calendar, there are really no significant earnings reports.
No,
the macro calendar
that's done for a while.
Right. We got through NVIDIA, right? The macro calendar is going to produce some US data, but as we learned today, we're not going to get the CPI release prior to the Fed's December 10th meeting. And so with the NFP in the rearview mirror from yesterday, we've more or less seen the significant things that we need to see.
Yeah.
So what are we looking forward to next week? Like, what are the catalysts that traders should keep their ear to the ground to? Is it tariffs? Is it Russia, Ukraine? Is it just Bitcoin?
I think it's sentiment. And I think actually Bitcoin is a great place to look. I think it's just sentiment. Because at this point, what we've learned is that we're going to not really see data. We were joking about this on Futures Power Hour earlier today. What if the Fed said, you know what, we're not meeting on Wednesday the 10th, we're meeting on Wednesday the 17th, so that all the data would come on Tuesday the 16th of December, and then we'd know what we're doing. But then would the BOS go, very cute, now the data releases on the 24th. So it's an interesting sort of game that's started to happen here. Now, I doubt the Fed's going to want to play games because it's very protective of its reputation as an institution that doesn't play games. And so far, they've done an excellent job of being that institution. Then, okay, we're going to get a Fed that comes out blind, on December 10th, has to update the summary of economic projections, basically blind. What are they going to say? So there's a lot here that's just empty space now, where we're going to be watching headlines and seeing what the markets default to. And what have we learned since the beginning of this month? When left to their own devices, the markets go down this month. When good news comes, they pause for a while. In the case of NVIDIA, it was less than 24 hours. In the case of the end of the government shutdown, it was give or take 36 hours, maybe 48, let's be generous. So it's the kind of thing you would expect in a burgeoning bear market. And at this point, I don't think it's a given point of news unless it's something of the shocking, oh my God, there's a ceasefire deal in Ukraine, or oh my God, Saudi has decided that it's going to join the Abraham Accords this week. Something like this. Unless it's something like that, I don't think it's about event risk. It's about what the mood is. And the mood seems to be gloomy.
Well, the mood's definitely gloomy. If you look at sentiment indicators that are publicly available, you can go to our partner Unusual Whales, right? They have a sentiment indicator for crypto for the equity indices. If you were with the parent company, we have sentiment stats available. You could look to see it in fear and greed. All of it says that we are near very, very fearful levels, extreme levels, right? Like on a gauge of 0 to 100, CNN fear and greed is sitting, I think, at a 6 right now, 7 maybe. It was at yesterday's close. So that's how much worse could that actually get from here henceforth? It feels like this is something short term in nature that we're digesting, because the shape of the vol structure, just thinking about the relationship between VIX and the front month of the vol futures here, 21.65 for the December expiry. We're looking at a VIX that is sitting at 23.54. As you go out in time, you see the contango return.
Yeah.
I mean, I'm having a hard time getting super duper bared up. This isn't like 2022. When you look at the start of the year, all of a sudden,
different kind of a thing, yeah.
Volatility starts to go into backwardation. And only when you get the washout in the fall do you actually get to see the market go back into contango.
Right, but I mean, in 2022, it's a different thing. In 2022, the boogeyman is the one you know. In 2022, the boogeyman is the Fed, which has told you now for 6 months by that point, we are on a rate hike cycle. Beware, we're going big. I mean, the Fed started talking about it in June of 2021, which is why that's the dollar bottom. So it's not like the market didn't know what was coming. It didn't know the Fed was going to give them 75 basis point hikes in consecutive meetings, hence the freak out. But the markets knew where this was going in 2022. They knew what the Fed was saying. The Fed had been saying it for 6 months before they did it. This is different.
It's like the Fed saying, like, hey, I'm going to toss you this ball. And the market's like, okay, I'm ready. And then like they just whip their hardest fastball at you.
Yeah.
It's like,
and they're like, hey, whoa. Let's warm up a little here, man. What's this 75 basis points in back-to-back meetings? What are you doing?
No, that was
but it worked
a lot quickly. That was a lot quickly for the market.
I mean, the breaking of inflation's back, by the way, will be studied forevermore right alongside the Volcker disinflation.
Is inflation broken?
From 9% where it was, yeah.
Are we sure?
From 9% where it was then, yes, it is. Now,
congrats, folks. You're bleeding out at a slightly slower pace.
You can forgive the Fed chair's frustration when at the beginning of this year he was like, it's down to 2.3, and then you get the tariffs, and he goes, oh, come on, I was so close.
So close. Couldn't stick the landing. Uptrend from the day's lows, Ilya, starting to break here in the S&P. We got 5 minutes left of trading, and traders are more than happy to jettison any long deltas they have going into the weekend thus far. Vol's likewise rising here into the close a little bit. So it looks like we're going to end the week with an IVR north of 40 in the NASDAQ. And a NASDAQ that was up by a lot more earlier, near 24,600, has shed over 300 points. That's 1% off the high here. So the Russell sticks around and is kind of sticking the landing, but those tech-heavy NASDAQ, that is definitely taking it on the chin. And a quick look to the bond market here. You and I were talking about this earlier. We both remain optimistic despite the weakness intraday. It's one of the places where thinking about a market that's getting fearful, I find it to be so fascinating that today of all days, today's the day that the market says, oh, we're going to pump up Fed rate cut odds again. Bond yields are going to stay lower. And in past cycles, in this cycle, right, over recent months, when the Fed has talked about loosening policy, you've had this reflation type of lurch make its way back into treasuries, which is to say the market's collectively judging, you want to lower rates now? Yeah, this is going to speed up inflation and growth. And so you get the higher yields to compensate for that, inflating premium at the long end of the curve. Today, we get this move. This is John Williams speaking this morning, talking about how there's a need for a rate cut in December. And he's the vice chair over at the Fed. He's a vice chair over at the Fed. He's the New York Fed president, which runs the open market operations team. So this is a pretty important guy in the grand scheme of Fed world. And it sends rate cut odds from sub 40% to north of 70%. Right now we're sitting at, according to the SR3 contract, 91% chance. Eyeballing it, 91% chance of a December rate cut. That is a big shift in short order. But the Fed cut odds moving does not produce that reinflating yield. Is this a market that's whispering to you recession may be coming? Is that what you're hearing? Because that's what I'm hearing right now. And that's why
I think the market is getting meaningfully worried about it. I mean, just look at how we're going into the close here. I mean, look at what's happening here into the final kind of seconds.
Limping.
I mean, I was down on the day seconds ago. Down very small. But even that is fading away here. So we're looking at, I think, a market where sentiment is starting to darken across all kinds of things. And if you look at the PMI data this morning, a recession is not what's on the menu. But if you look at what the markets put in Fed funds futures expectations for next year, that is exactly what they're afraid of. Because they're looking at the Fed going, we'll only give you 25 basis points. And they go, okay, maybe you all are going to screw around with this December move and pull the rug out. And maybe that was just Steve Mirren's dot. Okay, forget him. He's going to descend. Everybody else is going to vote no cut. All right, fine. So we only did 50 basis points this year. Let's take that third and move it into next year. Okay, that's 50 basis points. The markets are still 25 basis points ahead. Even if we miss December. They're screaming at the Fed, you need to wake up and cut because there's some sort of a cyclical thing that's coming undone here. And we'll see how this gets resolved. Because at this point, it's incongruous across markets.
You know, thinking about those stats about yesterday being the seasonal low for the S&P for the rest of the year, if you go back to 1950, and volatility having its seasonal peak for the remainder of the year, if you go back to 1950, this late day market action tells me that there were a lot of scalpers, a lot of zero DTE people who were leaning long, and they are now closing out their books. And so it's just driving this market to the downside. Whether or not that means the rally can't continue come Sunday is a totally different equation. But as we wind out the session, I think it's a good idea to just quickly give us our biggest winners and losers here on the day. In terms of your biggest winner, again, it's still that home construction up 5.05%. Silver is a little bit softer. Semiconductors only up 0.31 right now. Not really the most, not the greatest rebound there as we go into the close. And it's your name like NVIDIA that's dragging us down on the day. Can't sustain a gain off by 1% or so. So much for the news that they'll be able to sell those H200 chips to China, Ilya. To put a bow on our conversation from Futures Power Hour, if the market can't hold on to the gains from these headlines, That's a problem. It's a problem that you and I are going to have to talk about come Sunday evening, though, because you and I will be back for First Call.
Yes, sir.
Sunday we'll be joined by Jamal Chandler. That starts at 5:55 Eastern, 4:55 Central Time here on Tasty Live. So if you watch on TV or you stream it on YouTube, come join us before dinner. We'll talk about the Futures Open. Until then, though, good luck to everyone who traded the rest of the day. Or hope you have a nice weekend. Ilya, you take us out.
Get ready, folks. Things might just calm down next week, but we're already in the face of the holidays, so why even stress it?
If we don't see you on Sunday.
The week is over. Come join us on Sunday. We'll start to stress it together then.
If we don't see you come Sunday or next week, hope you have a nice Thanksgiving with your family and see you on the other side of the holiday.